All right, we're getting a little bounce. Good morning, everyone. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. Yeah, money's saying the same thing. Yeah, sitting this one out. If you're trading options, sitting this one out makes a hell of a lot of sense. Like Micron, for example, the response was selling after earnings. They beat. Did they raise? I didn't see what their guidance was. Um, all right, let's see what they said here. Revenue 23.86 billion. They beat by 30%. Increasing capital expenditures. A lot of people starting to be concerned about margins. They started with Oracle. How's Oracle going to pay off its debt, et cetera? And then we get these private credit companies having issues. And if that wasn't enough, piling on top the Iran conflict and oil prices. So it looks like people took profits in Micron. All right. So we got about 8 minutes to go. 8 minutes to go. Markets are below the 200-day moving average. We'll be watching for any sort of confirmation that we have buyers in the short term, meaning institutions. Not anticipating it at the present time, given we don't have any resolution in the Iran conflict. So, as Money was saying this morning, and we tried to instill in traders' minds, be careful with options. If you're trading options, you got to be looking out June, July, August, September, something like that. So if data doesn't kick in, even on these pullbacks, at least you have time. So the conflict, a lot of traders are expecting nothing to change until after 31 March. We've got the JP Morgan collar down there at what, 64.75 area, something like that. If you have these put flies that we've been talking about for months, I would suggest maybe taking some profit if we start to bounce and roll some down. Okay, they're up over 100%. So if you take half off, you can let the rest run. If we get any kind of violent bounce in the short term, at least you have, a decent trade there. You could also roll some down about 50 points so that you tag with the lower wing, maybe you tag that 64.75 zone. But those are up over 100%. So these 6,600, 6,500, 6,400s. Okay, we got about 6 minutes to go. 6 minutes to go. All right. Let's get ready. Let's get ready. 5 minutes to go. We'll be looking for a premium to sell as well, given the high implied volatility with VIX. Where did VIX close? VIX closed at 25. Where are we right now? VIX is at VIX tagged 27 and change this morning. Okay, junk bonds. Those are off again today. So we risk off. Okay, so at this point, we're looking for fat pitches, meaning we're looking for trades that have a pretty high probability of success. Short-term options trades, you could get your position moving in the right direction, but VIX drop and your option is going to lose money. So I would suggest give it a few minutes today. I would give it at least 30 minutes to 45 minutes. I usually do that anyway. Wait for the markets to settle down. If we're going to trend again like we did yesterday we did what we've been seeing recently, which is to stay below VWAP all day, tag VWAP at best, continue lower. So we'll look for a change here in direction. Let's look at SPY. Okay, SPY gapping down below the 200-day. S&B will be gapping down below the 200-day. SWMR, that one pulled back. SWMR pulled back. Where is it now? SWMR. Okay, starting to move here. SWMR. SWMR dipped pre-market. All righty. 30 seconds. And we're open. Goes without saying, first 15 minutes, I'll be taking profits off the table if it makes sense to do so. I'll be adjusting these put flies, take some off. They're up over 100%. Okay, futures just rolled over. Futures rolling over. Okay, let's look at the S&P. Okay, we're below the 200-day.
Extreme low tick alert minus 800.
Yeah, it's gonna be one of those days. Just sit back and let the institutions do the heavy lifting. Okay, Palantir is off a little bit. Palantir stocks, most stocks will probably follow the trend. Micron's off quite a bit. Micron starting to see a little volume here. Micron. Okay, watching for a short covering, little short covering rally. Any move off the low here, just short covering. Okay, consider bear flags. I am inactive at the moment. Just the only thing I want to do is take some profits off on these put flies. Consider taking some profits on these put flies. Take half off. They're up over 100%.
Low tick alert minus 800.
Okay, being below the 200-day, first thing we were looking for this morning is, do institutions look to start buying down here? What's working, if anything? What's working? We got Amgen up, Verizon. Okay, so what's moving? CRM. CRM, we've been looking for this one to move above 205 for a while. This has just been sitting here for the last few days. Merck, same thing. Basing, Coca-Cola, even showing any green today is amazing considering the whole market is down. S&P 500 leaders, Align, Align Technology, ALGN, that moved back above the 50-day. First few minutes, I'm thinking we're going to get a lot of short covering, a lot of positional changes. Are we going to continue to trend lower? All right, looks like we're going to roll over here. Maybe not. I don't know. We're below the 200-day. All right, doing nothing at the moment. Not looking to cowboy anything right now. Just want to see what the market's going to do. This is a big deal. I mean, below the 200-day, that's a big deal. Okay, Apple's starting to bounce. Oops, Apple bouncing. Apple bounce. Amazon, everything is down right now. Apple's starting to bounce a little bit.
NRGB. MUU. AXTI.
LNKS. DLTH.
MUU. AXTI. GDXD. DLO. RKLX.
EVTV.
BETA. AAOI. ECX. BIAF. AGRO. ASTX. MUU. DLO. AXTI. ALDX. GDXD. CX. AAOI. F5EE. MUU. DLO.
Our market's just kind of sitting here at the moment.
CAL.
SER.
ALDX. GDXD.
Amazon's starting to show a bounce. All right, watch futures ticking up.
MUU.
Futures.
SER.
DLO. AXTI.
LNKS.
SIG.
It should be obvious. It should be obvious that oil is the issue. Got to keep an eye on USO and VIX. Crude oil still hanging out at the high. Okay. VIX. All right. Stocks are starting to see short covering. Starting to see some short covering. Microsoft just popped. Apple turning. Okay, S&P is starting to turn up.
CRCG.
Oracle just took off to the upside. Buyers.
LNKS.
Oracle, nice bid.
ALDX. FIGG. QRR.
Bitcoin.
CRCG.
If you do anything scaling in,
KLC. BETA. DLO. LNKS. ALDX.
Palantir coming off the low.
SIG. KLC. BETA. LNKS. ALDX.
Okay.
LNKS.
A little short covering. Very easy for this to roll over.
CHNR. LNKS.
My initial idea is that any bounce short covering is going to roll over, trap the bulls. Trend is down. We're below the 200-day moving average. A solid bullish day today. We'd see that go right through 10, 10:30, 11 o'clock. If they're going to buy down here, it'll be obvious. Let's go see what junk bonds look like. Junk. This is the worst it's looked in a long time. Although trend lines are probably useless right now, we could see this bounce in this area, junk bonds. Think bull trap.
The most technologically advanced firms are actually reducing the headcount faster than anyone else, which is pretty interesting tell for many organizations. I think that they will find that they certainly don't need to hire people, or they need to hire much more selectively. And there are areas where they don't need people, and they can accomplish the same objectives and maybe 10 times more with
Think bull traps at this point until we see volume. We want to see institutions. Got to see institutions. Okay, New York Fangs still look pretty weak. Let's see how many stocks are advancing at the moment. 200, actually a lot better looking than, it's a little early, but we got 213 stocks advancing. Yesterday, near the close, we had 90 advancing. So we had 410 declining. $210 stocks advancing on the S&P, looking better.
Unlike people who live in New York City, the hardworking Americans in this country, they drive a lot of money. They can fill up their tank 2 or 3 or 4 times a week. You're filling up 4 times a week. That's $80 of disposable income coming out of your pocket after tax disposable income. That's the difference between taking your family out to dinner and not taking your family out to dinner a couple times a week. When does it start showing up in economic data? I think we're starting to see. Remember, we're sort of week 3 going into week 4. takes some time for the transmission mechanism to
KORU.
work its way through the system.
LNKS.
The other thing that you need to
GCPT
understand
vaulted
is
down.
we in the United States, we're actually in a pretty good position. We don't have a supply issue. We have all the supply we need. In fact, we're exporting natural gas, we're exporting oil right now. The rest of the world actually has.
All right, just took some of these put flies off.
So we know we've got the oil here, we know we've got the natural gas here. If you're in Asia or you're in Europe and you're running a company and you're making really strategic decisions how
LNKS.
you're going to use the oil and
CONL.
gas that you have. And in fact, parts of Asia right now are shutting down business.
LNKS.
All right, those put flies, I took half off. If we don't roll over, I'll take the rest off. Looking to take something a little bit lower on any bounce. Hopefully this is a sustainable bounce and we start to see a nice rally. Microsoft turning, Apple turning up. So far looks good. Amazon starting to turn.
MSTU. CONL.
LNKS.
WETO may resume in less than a minute. KORU.
But we don't know. The one thing about being in a geopolitical situation is you don't know when geopolitical situations change.
BMNU.
How quickly they can change.
MSTS.
There's
NBIL.
upside. And we are seeing businesses on the other hand, and we saw this before what's going on in the Middle East here. Businesses were starting to right size themselves. There was this natural
MSTU.
All right, nice rally so far. All right, this is looking pretty good. If you're scaling in, I just took some of these put flies off. Oracle, nice rally.
WETO may rise in 10 seconds.
Labor costs in companies have been going on for the better part of almost 6 to 8 months right now. And it's a natural phenomenon. As companies have input costs go up, commodity prices have been going up across the board prior to this war. We see labor costs going up. If you have commodity prices going up, labor costs going up, tariffs going up, you have two choices as a company.
Okay, nice rally. Looking good. See if we can maintain this. Institutions keep picking it up. All right, those put flies are going for 650, 690, 690, 690. Okay, they're losing value. You might want to take some of these off, these put flies. Palantir turning up. Okay, MicroStrategy turning up. MicroStrategy. Swarmer pulled back. Swarmer pulled back. Last night, it's trading 46.44. Inside day. Swarmer. New IPO on Wednesday. No, Tuesday, right? Tuesday. Was up, what, 700%? Oracle looking better. Micron catching a bid.
I know that the economics will have some input into the decision making, but at this point they're sort of committed to what they're doing, and I think they have to finish what they're doing. There's no reason to get 90% here and withdraw at this point. Let's just finish this off once and for all. We will get back to normalized recovery.
Okay, Apple.
The one thing about recovery in the oil market and the natural gas market is, it's not a day out, day out.
Nvidia short covering. Tesla starting to see some. Mm-hmm.
WTO may resume in less than a minute.
JDST, let's see. JDST. Let's say 64. 70 is possible. Yeah, you're short. All right, looking good. Still not a convincing rally. We did get a couple of stocks with some short covering, but they're already starting to see a little bit of profit taking. Anyone who took them long from the low. Okay, so it already starting to feel a little bit iffy right here. Volume needs to pick up a lot more. Volume's not there. Still not seeing volume. Yeah. Only the first day. It's only day one below the 200 day. I'd be super, super cautious. You might be thinking, oh, this is going to be a great move. This is going to be a historic move. Blah, blah, blah. Going to make lots of money. That's a trap mentally. Okay. That could screw you up mentally. We got to see volume. I don't see the volume yet. I don't see volume yet. I would trust that Money Magic will be posting soon if he saw something. Okay, Micron looking like buyers are stepping up. Micron. We got a couple of little things bouncing, but nothing really following through. Got to see that volume start to spike. You just see that volume spike like over here on the left. Can you need volume like this over here? You can see volume is just tapering off. Not convinced yet. Volume has been tapering off from the open. This volume needs a spike. It needs a spike. A lot of people are going to be talking about hammers today. All right, potential hammer. A 3-candle reversal.
SATL. AXTI.
LNA. WET.
LITX. GDXU. NUGT.
Okay, we're looking for a 3-candle reversal or doji. What that'll look like would be a big candle tomorrow. A big candle. We'd have to close green today, of course. And we need to see a big green candle tomorrow. Okay, so that's what we're looking for. We're looking for a 3-candle reversal. Just getting started. Nice.
try to get through this period.
Sure, so I think Jay Powell's
SNXX.
best line from yesterday was
SWMR.
talking about the SEP forecast.
MUU.
Said several participants had told him if there was one time we could skip the forecast, it would be
Right,
this
right.
one.
Yeah.
And that's
TSEM.
essentially what the message was, is that this presents risks to
JNUG.
both sides of the dual mandate, inflationary and growth. But to the extent that, we don't know how
WET.
long it's gonna last, that's, it's too early to say
ASTX.
what the preponderant, risk is gonna be. Right now, I'm not saying it's inflation, because it's simply we've taken out, substantial.
All right, just watching for more volume. Okay, volume's starting to pick up here a little bit. Volume is starting to pick up. And you see more.
JNUG.
This is an inflation risk right now. Now that can switch.
CTMX.
Right? Like the same thing happened.
WET.
Going into Liberation Day last year. Where you've been rising, then all of a sudden it plummeted.
GDXU. GAUZ may resume in less than a minute. ASTX.
What we look
MUU.
at is,
TSEM.
for consumers,
RKLX.
matters. Like Tom talked about earlier.
NEX2.
And for every
MULL.
$10 rise in oil prices, it's about 25 cents per gallon at the pump. Every 1 penny per gallon at the pump is 1.15 billion in consumer spending
CTMX.
on energy. So quote unquote, energy tax.
All right, just watching. Palantir's trying to get something going. Micron looking good.
SNXX. LITX.
About 115 billion.
SWMR.
That hurts, but you have to remember that's in the backdrop of 60 billion.
GAUZ may rise in 10 seconds.
on top of 130
AGQ.
billion of tax benefits
AXTI.
from gold for this year.
RKLX.
So it's in the context of this, is it a wash or just about at 100, where it starts to, overtake the benefits in the tax bill is around 100.
Micron looking good.
LITX.
I mean, the thing is, it's not just gasoline prices at the pump, right? It's the prices that companies are paying to ship everything, right? Diesel prices
SWMR.
have gone above $5
LE.
a gallon now.
NEXT.
And it's
MUU.
also fertilizer that goes, so
Yeah.
we're talking about food prices potentially
Right.
and an impact there. I saw one estimate from an
SNXX.
economist of CPI for the next 2 months.
SWMR.
The headline.
WET.
Yeah, I mean, that's one reason the Fed took up their inflation expectations on headline. We took up ours
LITX.
as well. We're about 3.3% at the peak.
SATL.
The other second order effects, though, I think that are less talked about,
LE.
but should be.
GAUZ.
Let's take the AI build out that we're all very, very much excited about. We're going to look at the capex of the top
ASTI.
four, Amazon, Meta, Microsoft, and Google and Apple.
SWMR.
Their growth rate
WET.
capex is about 250 billion versus last year, and the growth rate's about 64%. If Taiwan is starting.
Okay, I bought a little bit of Micron out in April. I bought some 40 deltas.
That's going to show the capex build out.
ALM.
And so, those are the things that I think.
I wouldn't go anything less than April, May.
Consumer side of the story is the second order effects further down the supply chain that
SWMR.
begin to impact things like
WET.
CapEx, and how fast those guys can build out their AI systems.
Well, and it's not just the
SER.
building, it's the operation too, because you're powering those data centers. For a lot of them, it's natural gas. And natural gas prices, they're affected less here than, than
470, 480.
Yeah, Europe is more impacted by natural gas prices, go up the grid for US.
SATL.
With natural gas against Asia. We're somewhat insulated from that.
Okay, Micron looking for some follow through.
Our refineries are set up more to process the heavy crude.
SER.
With places like Venezuela, so that's somewhat positive, and that limits the rise. But at the end of the day, like an export ban isn't going to help you. And gas tax holiday, it helps a little bit in the margin, but that encourages more consumption, which is not
SATL.
exactly what we're doing. And so the options here for.
Okay, let's see what hedge flows look like. Hedge flows turning down. Hedge flows turning down.
The market's saying right now it's about 2 months. The first rate of moves so far. several weeks. Once the security situation has been stabilized, it's going to take several weeks to open these gas fields, to open these oil fields. So I would say maybe the market started off optimistic. It's now gone to a more pessimistic view,
CTMX.
but there could be more to go, depending on how long this takes. And keep in mind, the administration is going to have to go to Congress at some point to get authorization for additional funding from the Pentagon. Pentagon's asking for $200 billion, and the 1973 War Powers Act, they are supposed to be funded in 60 days. So 2 months.
Do a lot of things. We'll
Yeah.
figure that out. How that
Right.
All right, so there were some pretty decent put sales on Micron.
And it's important for the administration to manage expectations properly around that.
Just to follow up on the data centers and another maybe second order effect, do you expect any decrease
WET.
mitigation or margin
KOS.
investment from the Middle East? Because the investment from there into these data center companies to build out there is pretty big.
Put sales on Micron being noted.
That's an excellent point. And they have
All right, Microsoft rolled over. Apple trying to follow through. So is NVIDIA.
so no doubt it probably puts a pause in some.
Markets are hesitating.
Keep in mind, when you talk about an energy export ban,
SWMR.
how big of a price for U.S. consumers.
SWMR.
They don't have the kind of oil that
They have a lot of oil, but it's not oil that we, yeah.
that's right.
The other thing is you just cut all these trade deals in which energy purchases
SWMR, nice rally.
for Japan, for example.
Okay. Looking good there, Frano. SWMR. Okay, we're starting to take out yesterday's high, maybe.
And so at the end of the day, what matters is getting straight
SWMR.
and consistently. And
SWMR attacking the highs. There goes futures.
the market's making a call around 2 to 3 minutes.
Futures are popping.
SMSX.
The market starts to think that it's gonna
Okay, SWMR looks good.
of oil to 150 or so, and then it begins to really bite on consumers.
Okay, so just then one follow-up question. You said at the beginning the market is pricing in line with inflation.
Right.
What would, first of all, is the market right? And secondly, if it is, what would change? Like what would tip us over into being more of a growth concern than an inflation concern?
Yeah, if they get 150 oil, then very serious and driving consumer spending story because you're more than taking care of all the tax benefits, the fiscal tailwind you have behind you, right? Like right now, consumers are getting their tax refunds.
S&P 500. More importantly, S&P 500. We're looking for this to come out of this squeeze and move higher. Okay, volume is starting to come in.
ACXD.
Okay, volume is starting to come in.
And so if you really get into 150 oil, then it's a problem. What you look at is break-evens. So
MACD's higher.
5-year inflation break-even expectation. What happens is a point where the stock going up, it's up inflationary, and they start to say, "We're circling now," because it's a growth
SWMR.
and that's what happened
SWMR.
last year.
Okay, SWMR is going. Okay, SWMR going. Going for new highs.
ACXD.
And checking in on where prediction markets see the interest rates this year, the majority of bettors are predicting 0 rate cuts this year at this current time. Well, the majority. It's a slim majority.
LITX.
From where probably market odds
NEXT.
maybe I'm trying to prediction markets have colored by Hollywood kid. Well, the Federal Reserve out with a long-awaited proposal to rewrite capital rules, potentially unleashing billions of dollars for lending, share buybacks, and dividends for big banks. Joining us for more, Yahoo Finance Fed correspondent Jennifer Schonberger. So, Jennifer, what do we learn?
SMSX.
Hey, Angela, good morning. That's right. A new long-awaited
MUU.
proposal from the Fed would tweak financial crisis era capital requirements, reducing banks' cash cushions to realign with the economy and aiming to boost lending. This is that long-awaited Basel III requirement that was supposed to come out post-2008 financial crisis to align with international capital standards, but also customize the U.S. banks. It has gone through numerous iterations since then. It also incorporates changes to stress tests and a capital surcharge for the largest U.S. banks. And under
New York Times continues to trend.
the
Okay, Micron still climbing, looking good. Micron.
The next tranche of banks, those with assets of between 700 billion to 100 billion, would see their capital requirements drop by 5.2%. And then the smaller banks, those with assets of 100 billion or less, would see their capital requirements drop by 7.8%. Still, even with these reductions in capital requirements, the largest banks in the US would
Micron.
$800 billion
I mean, I
should there be a recession.
is the drop due to profit taking?
Levels would still be twice the level
The bounce now looks like people jumping back in. So it looks really good. Micron. Can't see why this wouldn't be much higher end of year.
ACXP. When regulators put in place the regulations post financial crisis in 2008, but failed unintended consequences. And so today's rules are really aimed at recalibrating so that we see lending that had unintentionally gone into the non-bank sector, namely mortgage lending and some business lending. That's
Micron, thinking about thinking it we would see 500 by the end of the month, maybe, if not sooner. Micron looking good.
today's proposal, unsurprisingly, then Governor Michael Barr has objected to this. He, of course, was the vice chair of supervision before Michelle Bowman, and was known for putting forth a very stringent capital requirement proposal for Basel III. He called this unnecessary and unwise. He said it would harm the resilience of banks in the U.S. financial system. So what does this mean for the banks? Look, I think on net, it doesn't change their calibration all that much in terms of the capital that they're required to retain. But what it does is it simplifies the calculations. Instead of having to do two calculations, now they have to do one. So that's less burdensome for them. That's less cost intensive for them. That frees up cash and capital for them that they can start lending out into the economy. So I would expect
Market's starting to see a little bit of
this. Haven't spoken to the banks yet.
hesitation. S&P hesitating a bit.
We shall see indeed. Appreciate it. Coming up, Micron reported record results, but the shares might not be performing like you would think. We'll dive into the numbers next.
All right, Nvidia is still rising. Nvidia. A lot of good things that was said. Micron, a lot of good things said. Should help the other companies in the group.
CRCD.
Our New York Fangs are still hesitating. Okay, we rolled over, obviously. We're going to go for a double bottom. Stochastics, MACD, everything turning down. And the New York Fang. Okay, this is turned back down. Everything's turned back down now.
ACXP.
Welcome to the House of Fun, where the thrill of Las Vegas never ends. Experience excitement with over 200 slot machines, each offering you.
Oh, God, these stupid commercials. I don't know how anybody can play games all day long.
ELA. OKLS.
Okay, New York Fangs are not helping at the moment. Need to see those move up at least.
Thought, just 18 months ago. And I think what the market is struggling with is not necessarily competition, because it's hard for all three major suppliers to bring on meaningful supply, but actually just the gross margins, right? The Micron numbers, 81% gross margins, that's the top number to get much better than, right? So how are we going to beat from these high levels? Now, all that being said, I still really like the AI setup here. AI chips are going from $45 billion in 2023 to upwards of $1 trillion by 2030. Frankly, after Jensen's keynote at GTC, we probably have to pull that number in a couple of years. And I think both memory.
What's CoreWeave doing? CoreWeave. All right, still consolidating in the lower half of the Bollinger Bands. Need to see that above the 50-day. We briefly got to 88 on Monday. If you haven't already taken those put credits off, we took them off.
We were at $500 billion for the entire semiconductor industry in 2020, 2023. So we're seeing the AI chip market more than double the entire chip market from the 23 levels. And why is that? It's because the chip intensity of AI is so stupendously high. Whether it's GPUs, CPUs, networking, memory, all of these things are really, really important. And I think we saw that at that GTC keynote, right? $1 trillion of forecast, $1 trillion plus of forecasted demand at NVIDIA between now and the end of 2027.
When we talk about these extremely high margins that Micron is now promising and they're going to get, how do we not view that as basically a tax on everybody else? I mean, a lot of these CapEx numbers that are going up, much of it is sort of the scarcity-based pricing. In other words, are we adding as much capability for every dollar that the companies have to spend?
Well, if we look at the CapEx numbers, right, I think we talked about this last time. There's roughly $700 billion of operating cash flow for the industry. And guess what? That's roughly matched with $700 billion of CapEx, right? So we're at peak.
Back to VWAP.
We're way past free cash flow zero, basically, for these companies, whether it's Amazon, Microsoft, Google, Oracle, add them all up, throw in the AI.
Need more volume.
And so the question is, going forward, can they grow fast enough to continue justifying the spend, right?
MACD's turned down now.
I see, 35% plus operating cash flow growth for many of these companies, which justifies a lot of the spend. In terms of that tax that you're talking about, it's really all about elasticity of demand. On that $650, $700 billion of CapEx, probably like $150 billion of it is due to memory, right? So that memory number is a really big number, but it's not the whole thing. Where I worry more about the tax that you're alluding to is actually on the
hedge flows,
right, on smartphones. So if we look at smartphones, over 60% of the smartphones in the world that are sold are, $500. But the memory bill of materials, the BOM, is $250 today. That entire price point is now uneconomic. So AI, I think demand is so strong. I mean, we're seeing such rapid growth out of the hyperscalers, out of OpenAI, right? $25 billion of ARR, more than enough to justify the CapEx spend. Where I worry more is on the consumer side, particularly on smartphone, that we could see some demand destruction.
Yeah, we'll be watching that and just how consumers respond in general to these higher prices. Dom, appreciate your view. Very bullish picture there on tech. We'll see when that starts to feed through. Dom Rizzo, up to you, Ro.
Thank you, guys.
Still to come this morning, Intuit canceling some insider sales from executives as they look to shore up the stock after this software sell-off. The CEO is going to join us ahead to discuss. Plus, growing cybersecurity risks as the Iran war escalates. We'll ask Accenture's CEO about it, whose company did issue a warning about Iran's cyber threat 8 years ago. Of course, we're all over today's market action as global stocks take a leg lower across the board. A rough day in Europe, and of course, watching the 200-day. Stay with us.
All right.
For next year, calendar 27, into the print we're at $90 EPS, now we're at 110. The thing that is always interesting in Micron, and I also got the fact that people worry about peak gross margins. The stock really trades on the out earnings is basically a peak earnings, so I'm going to put a drop multiple on that. And I think that is one thing which probably needs to change. Hopefully will change maybe during this period of time or into next year when people realize that energy is more durable and more sustainable than in prior cycles. So I think even if you take conservatively a 5 times multiple on our $110 EPS, that's a $550 stock compared to the stock is today in the 430, 435, somewhere in the range.
Krish, I was talking to an economist a few moments ago about something, and I want to get your take on it. He was talking about the risk from the Iran war, not just to things like energy prices, but also the risk that it can disrupt this supply chain, the AI supply chain, as it were. You know, maybe whether it's helium that, you know, is used in some of these manufacturing processes not getting to Taiwan where it needs to be.
Our futures continue to fade a bit.
Yeah, I mean, I think that's, to be honest, like, a question that's beyond.
Okay, so far we just got a doji. Look better if we had a hammer by the end of the day, obviously.
Great to see you. Thanks so much for your perspective. Coming up, we'll get the top analyst calls on Wall Street and look at some of today's trending tickers. Stay tuned. You're watching Market Catalyst.
All right, so looking for initial bounces, profit taking. Are we going to get another wave of buying? Buy the dip? Okay, volume tapering off again. Volume tapering off again. MACD drifting lower. We'll see if buyers step up. Micron looks like buyers continue to come into it. Micron, so far so good. Note RSI. New York Fangs are still weak. So are the futures. Futures backing off. Palantir backing off.
The nomination now heads to the Senate to be voted on in the coming days. Mullen will need a simple majority vote by the Senate to be confirmed to the role. And the annual World Happiness Report is out, and Finland has been awarded the title of happiest country for the 9th year in a row. The study is conducted by the Wellbeing Research Center at the University of Oxford. The U.S. was number 23 this year. It also highlights
futures continue to pull back.
Contributed to a decline in well-being among people under 25 in countries including the United States, Canada, Australia, and New Zealand.
All right, let's see what VIX looks like.
Plus social media. That's right. Pippa, thank you, Pippa Stevens.
Okay, VIX turning back up.
CEO Julie Sweet breaking down the quarterly results, boosting shares, along with the cyber threat of an escalating war in Iran. We'll get into that. Plus, some big moves in gold and silver. Bitcoin down today, all falling hard. We'll get into that. Don't go away.
Yeah, VIX isn't giving up. It's still elevated at 27, right below 27. Junk bonds need a bid in junk bonds. We also need Bitcoin. To get risk on. All right, nothing yet. Junk bonds. All right, looking for hedge flows to turn back up. This looks like it could be a big sine wave, back and forth, back and forth. Look at stability. Stability is at 3%. That's telling you that all of this negative gamma, you're going to see very wide swings in the market.
They still got to sell stuff. And the problem is there's this brutal competition in that industry in e-commerce in China. Not a surprise there. So let's go over some of the earnings highlights. AI cloud is still the part that works. So cloud revenue up 36%, AI related product revenue, triple digit growth for 10 consecutive quarters. The company says the business goal of Alibaba's AI strategy is very clear. Over the next 5 years, our goal is to surpass $100 billion in combined cloud and AI external revenue, which we were just talking about. Core results were weak enough to overpower that AI pitch, though. So revenue was up 2% to like 285 billion yuan. Net income down 67%. So that's a big drop in profit. So Alibaba needs a number of things to kind of fall into place. The monetization story is still not really convincing yet. AI revenue goal implies roughly 35% annual growth. E-commerce has food delivery still the main earnings drivers.
Shopping mall. You're seeing demand surge there. Still small, very early, but you have a real commitment now that says, you can't get way to growth, so you've got to do both. There's some debate about whether AI-enabled work is a higher margin.
All right, we got hedge flows turning back up. So you're going to see expecting swings in the market.
Well, the way we think about it is that over time, technology sort of always goes to the median. So in the early days, right, very scarce resources. And so what we focus more on is long-term sustainable growth. And there's a huge funnel of work. I mean, if you think about where AI is right now, massive potential, but a lot more to come. And so we really see a very strong future because all the work is still coming.
And 3 to 5% constant currency revenue growth is your guidance, right? Is that the run rate we're supposed to think about here as things kind of wash through in and out of the business?
First of all, we did take the bottom off our guidance, as you mentioned, which is definitely showing the momentum and the confidence in the business. And if you think about how we're growing, the growth we see continuing to increase over the years. So this is where we are this year. We'll guide for next year. But again, very significant long-term growth is what we're seeing.
XTM.
We teased the segment talking about some of the work you had done a while ago, actually, on the Iranian cyber threat. And I wonder, can you refresh our memories on that? Maybe talk about how it might be relevant today.
Look, it is absolutely clear that there's another sort of surge.
Yeah, expecting a doji today. If we break out of this,
a trend, because you know, we saw the same Ukrainian war. As companies, they're really not thinking, wow, like there's something new. This has been going on for several years. It's why our cyber business is growing so much. We just invested in a major acquisition in Australia because the demand for cyber resilience is so strong. And we're really working closely with our clients right now, just continuing to, like make them stronger and more resilient.
I would imagine the hostilities create somewhat of an inflection point in bookings or something?
Well, it definitely is focusing people on going even faster in the cyber resilience. So we would expect, and that's, but I would just tell you that it's not only the war, right? Our strength in AI is massively expanding the landscape. It's also giving more tools to both those protecting and those attacking. And so I would just tell you that it's another reason to do it, but it's already a big and growing area, which is why we're investing so much. How do you think about the structure of your workforce in this environment where people are talking about entry-level analysts, potentially their jobs?
okay, we got a nice little rally here so far.
Sima, we are hiring more.
Okay, S&P 500 rally off the low. Okay, this is looking good. Expecting choppy price action. Look at the volume. Look at the volume.
Financial model place, but you can't simply do it by wishing it, right? So we've changed the jobs. We're upskilling differently.
All right, we got volume finally.
Hiring for different skills.
Looks good. Micron continues to rise.
Trying to learn from us because they want to have entry-level jobs, but you do have to change.
Bitcoin, we need a bounce. We need to get everything risk on.
I mean, do young college grads ask you for advice? Do you have a set, like 30-second pitch of advice for a young college grad?
Yeah, it's learn technology, right? Not as your job, but understand it's going to be a great opportunity to, and you're going to use it in everything you do. Coding, developing, all of it. Well, it's not just coding and developing, right? It's really a business-led transformation, because the way that you can now look at your business, that's why we do so much education of leaders, right? Is you understand it, you can now, in, like, for example, go to the mall in the model. You have to, as the head of commerce is trying to understand it. And so one of the things we're doing is training everybody. So we just had 200,000 people complete our agentic commerce, and we are going to get to 750,000. So the strategists, the industry specialists, and the technologists.
Julie, great to talk to you. Thank you.
Okay, Micron's still rising.
Still to come this morning, a fresh read on AI disruption fears with the CEO of Intuit, which have been hit hard in that overall software sell-off. They're restricting some insider sales and ramping up some buybacks. Not the only ones. We'll talk about that in a moment.
Okay, a little rally up, back up to the high. Yesterday, we were below VWAP the entire time. Tonight, we keep trying to stay above VWAP. Past 2 trading days, if I recall correctly, Tuesday and Wednesday, we were below VWAP. And we kept trying to rally above. Right now, we're above VWAP, so that's a good start. We need to get back above and stay above. Okay. Okay, Micron. Micron still rising. A little profit taken there on Micron. Oracle, almost a bullish engulfing candle. That would be good if we could see above average volume by the end of the day. Oracle gap down back above. A 21-day.
Morning movers, be the first to find out what's shaping early market action. Tech check, options corner, futures focus, technical analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network. Stay connected to what moves the market. Download
All right,
Schwab
Chevron.
stream anytime wherever you are.
Higher again today. Chevron, ExxonMobil, Conoco.
This is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
All right.
Welcome back to Morning Trade Live. I'm Sam Barnett, coming to you live from the New York Stock Exchange. It's time now to take a look at the sectors that are moving markets this morning. I'm joined by George Silas. George, what a morning. Global stocks, bonds, and metals dropping as oil is
Intuit announcing this week that its founder and leadership team are ending some pre-planned stock sales in an attempt to show confidence in the company's trajectory. Shares are down about 31% so far this year amid the broader software slump.
ConocoPhillips still going.
This month, and are obviously up a couple percent today. Joining us this morning in a CBC exclusive is Intuit's chairman and CEO, Sasan Goodarzi. Sasan, welcome back. Good to have you.
Thank you. Thanks for having me.
So walk us through some of these terminations of some 10b5-1s and this.
ConocoPhillips continuation looking good.
Yeah, I mean, it's
Following through, trending. Chevron just keeps going. Chevron. We still got some of the 195 200s. I got to roll these up 200 to 205.
We've done a couple of things. One, significantly increased our stock buyback. It's actually up 40% the first half of the year. It's going to be double that rate the rest of the year. And we just put a stop to all of the 10b5 plans, although they were all dormant, by the way. We believe that our stock is way undervalued, and so we're doubling down on what we believe in.
What indications lead you to that undervalued thesis? Is it about a bookings trajectory or earnings or something else?
Yeah, I mean, Carl, if you look at Intuit, right, we were a few years ago, we were growing high single digits.
Stock is plus 50 points from the breakout zone.
Last year, we ended the year growing at 16% and our margins over 40%. And the first half of this year,
Oracle looking for continuation.
EPS up nearly 50%. And we set a goal, which, by the way, we set years ago, that by 2030, we want the company to grow 20%. And so everything that we've invested
Micron.
is really, really paying off for our customers, and it's showing up in our growth. So that's what gives us confidence. You know, facts are friendly, and it's the facts that give us confidence.
Sasan, what's your response to this narrative or the messaging from the large language models that tax processing, the software that supports filing, can be done by them?
Yeah, I mean, first, I won't repeat the results, but you know, facts are friendly. You got to look at
Micron. Okay.
on a tear.
Let's see.
Including tax.
You said the 700?
More important is when you look at our
700's 2.4 million. Frano?
financial decisions, and if they get it wrong, which is why consumers and businesses actually spend 7 times more on people, on experts, tax experts.
And there was a lot of puts sold too.
Than they do
A lot of puts sold.
because they can't get it wrong. So in our category, it's never been about code. It's never been about software. It's always been about confidence, which is why we invested in data, AI, and human intelligence. We're one of the fewer companies that actually has the combination of thousands of experts that are AI-powered experts that sit on our platform to deliver confidence for our customers and fuel the productivity of accountants. And so for us, that's why it's a tailwind, and that's why it's shown up in our results.
How are you thinking about the landscape for M&A, considering a lot of things adjacent to your business have been beaten down in valuation, and you're deciding kind of to buy yourself as opposed to something else at this point?
Yeah, actually, I love your question. You know, first of all, our principles are such that we invest in growth, and secondarily, we look at dividends and buybacks so we can return cash to the shareholders. and the environment has never tipped us one way or the other when it comes to M&A. M&A is hard, and you got to get things right. And so just because something is cheap doesn't mean it's good. And we're looking at a lot of tech tuck-ins and acqui-hires, but sort of big M&A is not in our view, and the lower prices don't move us at all.
And what about your own deployment of whatever tools become available here from these models, from these coding solutions, and all the rest of it? How, I guess, what sense of urgency do you have around building around those things?
Yeah, as a company, we've always been very rigorous and disciplined. I mean, if you look at our revenue per employee, it's orders of magnitude better than any peer company that we have. And the reason is we've always looked at automation and tools in the last 7 to 10 years to make our employees far more productive. And just
All right, let's go see what
how we run the company. And the majority, by the way, of our margin.
see what might show up as far as unusual trades. Unusual trades here.
I would say the best is ahead of us. I mean, we use tools like Cursor,
10,000 DHT, DHT calls, PG, April 17th, one, was that 160 call?
And then we take those experiments and roll it out across the company. So our view is the best is yet to come in terms of productivity. And it's not from a sense of urgency of the market. It's from a sense of urgency that's born within the company in terms of how we run the company.
How would you characterize the timeline around embedding these AI agents?
Futures just looks like a doji day.
Talked about how as these agents come to market, it takes some time to deploy, and that was sort of why their guide was a bit more conservative than the street was expecting.
Yeah, well, first of all, if you just focus on our category, as I mentioned earlier, it's all about getting things right. So accuracy, compliance.
All right, you can see the hedge flows starting to oscillate.
Are everything. We're dealing with people's money, right? Taxes, accounting, bookkeeping. Getting things right is really, really important. Which is why for us, if you think about layers, there's a data layer, there's our artificial intelligence layer, there's our expert layer that sits on our AI capabilities, and then at the top, it's Intuit Intelligence. It's making sure that we have one pane of glass for our customers so they can understand what's going on in their business and we're there to carry out actions on their behalf. So that was a long way to answer your question.
If you're thinking bullish trend, we need to see hedge flows starting to turn up and just keep going. That'll indicate institutions.
On our platform, and we see it working, but it's very, very hard because in our world, to have AI accounting agents and AI payments agents to work right and be accurate requires human governance and oversight. So it's proliferated across our platform, and I just think the best is yet to come as we look ahead to really have it work at scale.
So I appreciate it. Good to talk to you. And you were right. It is different when you're dealing
Micron.
with people's money. Come back soon. Thanks.
All right. Thanks for having me.
A lot of software companies have been talking about how this whole deployment of AI agents is going to be a second half of the year story. Workday talked about that. HubSpot, so we'll see if that sort of is what Intuit is also getting to. Still to come on this show, a growing.
What's SNDK doing today? SNDK.
We'll get former Minneapolis Fed
SNDK. Okay, Micron, Intel. What's Intel doing? Intel. Okay, NVIDIA. At the 200-day NVIDIA, just doing chin-ups on the 200-day.
KOLD. SKE. UEC.
right, I'm just want to see more volume. Not eager to jump into the markets. Micron looks good. Took some of the put credits off, flies off.
BXLG. WET.
AXTI. LITX. AAOI. BE. SNXX. METC.
Okay. I'm expecting, unless something changes, I'm expecting price action to just be very choppy today.
LITX. LITE.
BXLG.
Tonight in a special 1-hour documentary, our Becky Quick opens up about her daughter's rare disease and connects with others determined to rewrite the rules of medicine. Here's a look at the promise of gene editing and one young patient leading the way.
SNXX.
Like right away, I kind of like had this feeling that there was something to it, even though it seemed so far-fetched. She would say things like, well, I don't want to get your hopes up. And at one point I said, Dr. Rebecca, if this thing goes sideways, our whole world comes crashing down. Like, that's on me to pick up the pieces. Like, you just keep doing what you're doing and let us know, if this comes, we'll be ready.
Doctors Rebecca Aarons-Nicholas.
Okay, snowflakes starting to rise. Broadcom rising. Micron's at the high of the day. Micron's still going.
They made it a reality in just 6 months' time.
We couldn't spend 1, 2, 3, 4, 5 years with what it usually takes to develop a drug. We would have to make it within a few months to have any chance of actually helping a patient like KJ.
CTMX.
And Becky joins us here at Post 9 this morning. It's good to have you in, Beck.
It's good to see you guys.
What do you want viewers to learn tonight?
I think hope, taking away hope and the ideas of where we are with science right now. There are technological changes that are happening fast and furious. Part of that's from AI, but part of it is just from these technologies that they've been working on for years, like KJ's. What was there to save KJ Muldoon? His parents are amazing. KJ himself is incredible. He has this gene editing.
Palantir looking for a follow through. Micron looking good. Micron's still going.
At this point, and this is something that they weren't sure he was going to live. They diagnosed what he had as soon as he was born, while he was still in the hospital. And look, there are these amazing things that can be done at this point between what we've learned with gene sequencing, how we can diagnose these things faster and faster, between what they're doing with things like ASO therapies, things like gene editing, the promise that's there, that's been talked about for decades. So many people in the industry say they feel like we really are at this moment in time where things can get done. But there are roadblocks in the way. There are things that kind of slow it down. It's frustrating, particularly for these families and these patients who are waiting for things to happen. It never happens as quickly from getting it to the lab as getting it to the patients as you hope. There are some dangerous things along the way, but what we're hoping is to raise awareness and to maybe identify some of those roadblocks and try and knock them out of the way.
Yeah, what mainly are they? Are they just sort of like choke points in communication? Is it coverage for these things? Is it actual just funding?
All of the above. Look, for a long time, investors have been reluctant to fund some of these rare diseases because by definition, you're talking about very small audiences, tangible marketable audiences patients will be receiving these drugs. What they are trying to do at this point is show that you can do this and you can make a profit on it. You can do that if you can tie together different related diseases. Maybe you find an ASO therapy and that works on one and that you can identify other similar diseases that find these things. But even some CEOs today will tell you in the industry that if you can get as many as 5,000 to 10,000 patients, you can turn a profit and find a way to do this around the globe. Insurance coverage is hard. Getting the government to sign off on these things is hard. There are regulatory oversights that sometimes make it difficult, and is particularly frustrating for patient populations where it's a degenerative situation and where the patients die over a period of time too.
I have to imagine there've been instances.
Okay, Microsoft's starting to show some life here. Microsoft.
Or emotional reasons, almost
Micron's at the high. Let's take a look at Microsoft. Microsoft coming off the low at Doji. Still inside of this base.
That I've made along the way over the last 6.5 years since our daughter's diagnosis. Some people who have been waiting for medications, some who have gotten potential cures that are coming down the road, and sometimes they're not working as well as they were at one point because we're still tweaking this, still trying to learn this along the way. The one.
Okay, that's great.
April 17th monthly options, the 57.5 strike calls. You're going to pay roughly about a 51.70 debit for this strategy. So you're buying the shares at a discount because you sold the out of the money call. Now it does cap some of your gains. If you pay 51.70 debit, that's going to be your break even to the downside also because you own the shares. You got 29 days in this trade. As you get closer to expiration, you can start rolling or adjusting that short call if you want to keep your shares. But there's some profitability to the upside on this one if the stock does.
Okay, easy going. No hurry. You can see hedge flows continue to oscillate. Looking for it to turn back up now. Got a little bit of support right below 0 day. And then more support at 65.30. Resistance at 66.30-ish. Looking for institutions to come in. If they do, most likely we would see a hammer on the daily. Let's see what bonds look like. TLT. Looking for a bounce. The 10-year yield. 10-year yield up there at 4.3%. Need that to back off. Bitcoin looking for a bounce. Still looking for a bounce in Bitcoin. A lot of people who chased Bitcoin into Monday getting shaken out back below the 50-day. Still potential for higher lows. Similar to what happened over here. Last time we ran up to 74,000. We had 4 days down before a bounce came in. Expecting something similar. All right, so that's another risk on, risk off indicator. Currently risk off. All right, we got buyers at the low of the day. We need to get through the 50-day, that green line overhead, not the trend line, but the green line here. That's the 50-day. Need a higher low. MACD, stochastic, RSI all pointing lower at the moment. No go here. A few of these are popping off the low, but might have to wait until next week once OPEX is out of the way. Breath still pulling back. It looked pretty strong Monday, Tuesday. Friday, we had this hook started on Friday. Then Monday started to rise into Tuesday. Yesterday, we dropped off. Today, we continue to drop off. So that's trapping a bunch of people. We need to see this turn back up. All right, so breath isn't there. New York Stock Exchange. All this is telling you is that just chill. You don't have to like take a lot of risk on. We're going to get a bounce eventually. Number of stocks. Okay, this is getting way overdone. 42% of stocks are on point and figure buy signals. These are extremes. Oh, you can see how far this can go. This was April right here, the 2274. April of last year. We're like right in the middle of this. Look at this is the bullish percent. This is the number of stocks on a point and figure buy signal. If you don't know what that is, if you look at point and figure, it's a column of X's and O's. Okay, looks like this. That's point and figure. When the majority are giving you point and figure buy signals, these will be reversing and moving back to the upside. Let's see what else. Let's see what Micron is doing. Micron, point and figure. All right, so we got all these O's. That's a sell signal for now. Looking for a bounce. If you look at a shorter time frame, like the 60-minute, a column of X's. So this is telling you that buyers are coming in. So a breakout would come above 472. An X right there would be a point and figure breakout. That's what we're looking for. Micron. Let's see, Chevron and the rest of these all breaking out. You can see Chevron broke out above 194. That was a point and figure buy signal. ConocoPhillips, same thing. ConocoPhillips, point and figure buy signal, took out 125. Okay, what's working? What's working in the markets right now? Okay, energy again. Immediately you see Baker Hughes turning back up. Baker Hughes, we saw that reversing at 55. Baker Hughes continuation. Baker Hughes continuation. Dell. Okay, Dell looking good. Bullish engulfing. Dell with a bullish engulfing candle. All right, that looks pretty good. Dell. Schlumberger. Yesterday, Valero was hot to trot. Schlumberger, Valero. Occidental Petroleum. OXY looking good too. Brown and Foreman. Dow Jones. Chevron, CRM. Cisco trying to bounce. Disney trying to bounce. Amgen. J&J. Okay. Okay, you can see energy. Energy is basically the only green area. Okay, so that's what it looks like right now. Apache up 6.5%. Focus on energy, some utilities, some healthcare. That's where most of the green is. We got some tech and chips doing well. Micron, a little profit taking at the moment. Micron looking for a follow through over the next several weeks or so. Microsoft trying to climb out of this. Microsoft trying to climb out of this is sitting at the VWAP right now. Microsoft. Long way back to the 420 zone. Need to break above 420. Micron. Okay, Bitcoin starting to turn. Bitcoin shorts covering. Okay, New York Fangs are looking a little better. Amazon, Google turning up. Amazon, Google. Microsoft pushing off a VWAP. Microsoft is pushing off VWAP. Bitcoin trying to turn back up. Broadcom. Snowflake. NVIDIA. NVIDIA climbing. At the 200-day. All right, there goes S&P on the move. S&P rising.
High took alert plus 800.
High tech. High tech, that's the first one of today. There goes the S&P. Note RSI. Note RSI over there. Tesla looks good. Okay, all the New York Fangs are turning now. Palantir. Palantir popping. New high of the day. Palantir with a new high of the day. All right, maybe they do save this. Maybe they do save. There goes Palantir. Palantir. Nice rally. A little bit higher to take out yesterday's high. Palantir. Let's look at the 60-minute. Palantir 60-minute. Okay, Palantir has been consolidating for like 11 days. Okay, it's above the 50-day now. If we shoot back up towards 165, that would be good.
as we talked about previously, like we haven't seen return on investment.
Tesla looking a lot better. Tesla.
And so it makes sense that people say, I wonder if like if, because it was the last question, because the conference was much more about inflation and oil, like I wonder, hopefully we'll get more on that. Like I hope that we'll continue to ask about it and sort of pay attention to his voice on that.
Well, I always like, I usually got the last question, like the 4 times I got to ask a question. It's a nice spot to be.
It is.
Because you don't have to ask about the S&P because it's already been asked 15 times. You got to come up with goofy stuff like what I asked about. You never yield curve one time, which is like, you never ask that question.
And everybody asks some version of the same question.
Because that's the question that needs to be asked. The whole thing.
Palantir looks good. ARM Holdings.
Even though the results were better than expected, we see spending higher, we see supply constraints there, and it feels like this is going to be okay, first question, is this the beginning or the end of the second quarter? How do we think about it? Is Micron wrapping it up, or are they leaving? Okay, so Micron wraps it up. All right, so even though they're wrapping up this past reporting period, it does feel to me like maybe we're starting to see the outlines of what will be a more frequent dynamic within earnings reports, which is great numbers now, and the outlook is just starting to have folks ask questions of like, this stock's up 50% this year, buying more with this kind of numbers.
Well, and it's the question of peak, right? This is, whether it's hyperscalers peak capex. In the case of Micron, the question is around peak gross margins. I was reading a lot of the commentary around it. So just for people who haven't followed
Microsoft.
High bandwidth memory is something that they make that is now vital for AI. They've taken away capacity to make
Still a doji on Microsoft. Palantir. Palantir trying to go. All right, it's above the 50-day. Palantir is above the 50-day over there.
And so the concern here is that as they sort of make more products, as they expand their production capacity, that those margins should start to will have a diminished, as one analyst said, further price increases will have a diminished impact on margin expansion. So that there actually seems to be like a maybe real concern, but it echoes the concerns we've seen.
All right, let's see if we got more on the New York FANG. New York FANG look a little better. Still not bullish on the day or the week. Stochastics, MACD, RSI all traveling lower. We need to see Netflix get out of the doldrums here. Everything else is turned back up, though. Apple's kind of sitting flat. Apple Doji.
Rewriting the idea that this was just going to be a secular trend. Many of these companies are going to be secular winners. And that maybe the cycle is as violent on the way down. I'm not saying that these stocks are going to go down 50% like they have in the past. It's just that all these names are getting secular type benefit of the gap. The way that, we don't need to pick on specific names here from other sectors and even businesses. But again, I think it's this idea of the AI cycle has been so forceful on the way up that it did feel for a long time that there was just never going to be exponential log scale all the way up.
Palantir. All right, hedge flows still doing the same thing, oscillating back and forth. Hedge flows. Okay.
Another comment that stood out to me from JP Morgan took the other side of that and said customers are treating memory less as a commodity input and more as a strategic asset. But to your point, that doesn't mean it eliminates
Amazon rising. Amazon.
it just means it's maybe not as violent of cycles with those longer cycles for something they do in the past, which I think is what it's potentially the whole cycle. Should we move on to where do I want to go? Should we go to Rivian maybe?
Let's do another cycle. Is this cyclical or is this secular? So Uber out this morning announcing that they might invest, or they will invest in Rivian up to $1.25 billion.
All right, futures trying to rise again. Futures. Okay, looks like we might get something going here. Trying to take out these pivot highs, S&P 500. Okay, we're pulling away from VWAP. This is the exact opposite of what we saw Tuesday, Wednesday. S&P 500.
I don't think so. I think that's like a pre-COVID. Well, not from the ship to sales. Like, there were plenty of stories about those initial Waymo tests when they had the really small gated area.
Broadcom's still going here, looking good.
Back in the pre-COVID era. And like there were a couple of pedestrian accidents around some of this. Like that. Like I don't think anyone thinks that there's going to be zero accidents.
All right, Nick.
Cars, but the societal acceptance of that's now a risk that we're willing to tolerate, and companies are so much better with the technology of those features being safe. Right. I feel like we're past the point of, I'm going to jump on the water, like, oh, the story in the Atlantic was slowing down adoption.
Palantir rising a bit more. Dip buyers.
Yeah, I don't know. I feel like if the technology has gotten that much better, we still have this kind of situation. I don't know. I guess we'll see. I mean, the other interesting thing about to me about this Uber situation is, as far as I can understand, I mean, Uber's done these kinds of, they bought a bunch of these from different companies. I think this is the first one they're investing in, if I'm understanding that correctly. But in any case, so it's interesting from that perspective too. Like it continues this trend of like, I'm big on the NVIDIA trend of like investing in.
I did think of this when I saw this headline.
Investing in companies that are also a client or that you have this business relationship with. And this is yet another example of that, which is sort of an interesting one. To be fair, to be frank, I didn't even know that Rivian was working on it. I mean, of course they're working on autonomy because everybody is. Yeah. And I hadn't followed their particular autonomous journey.
Well, I mean, I think that is the idea that table stakes is now, or like autonomy is now a table stakes part of any auto company's development, and a newer company that's more technologically forward, Rivian being this company, than some of its incumbent, peers. It makes total sense that they're going to be on the leading edge of this. They obviously have the commercial fleet, which they've done a lot of work with Amazon on that. So with the electrification there, and I mean, I think both technologically and just from both a consumer and a business mindset, electrification feels like it's tied really closely with self-driving cars. What's interesting is that consumer demand for electric cars has really fallen off. People who are driving cars would prefer to drive the gas cars, or rather not pay the premium to drive the electric car. But when you're operating a fleet of cars that don't have drivers, it does feel like electrification is the answer there.
Yeah, I've heard some explanation that autonomy gets better with electric cars, but I don't know the full explanation of how that works.
I could guess at it, but I'd rather.
It makes sense.
People need to hear my guesses on driving style. You're always on cruise control, so I don't know.
Something like that. Should we double back to AI, shall we?
Yeah, let's go.
Okay. So
it's graphic with us, right?
I think we have a graphic.
Full screen.
Which part do we have the full screen on?
Here we go. There's a big part, right?
Oh, okay. There we go. Okay, so these are global employees, by the way, not just in the United States, but you are the one who flagged the story in the FT that quotes the U.S. CEO of PwC, one of the big four, which is listed here as having more than 350,000 employees, that like, if you don't use AI, your days are numbered at PwC. You better be using it. And this is just the latest example of like, it's a push, not a pull, right? Like it's something that you must use. It's not something that employees are clamoring for, but this obviously takes it a step further that you're in trouble if you're not using it.
Well, it's something that their clients are clamoring for, because now if you're a large corporation engaging, or they usually would have some kind of But if you're bringing in consultants to work on some project, you're probably not going to your finance department to say like, this is not AI related. Like those investments now, the things you're exploring, like those are all AI related on the client side. So then if you're on the the provider side, you're on the consultant side, you need your staff to be only thinking AI first because that's the answer that the client needs to get to. They need to get to the AI answer. I think what's interesting about how quickly these firms is these firms basically hire talented generalists from really good schools. And a large portion of their workforce can come in, do a few years, and then move on up. But they bring in really talented kids who can kind of just figure stuff out. So they're like, everyone's got to figure AI out now.
Still a doji.
Now because our clients need to figure it out now. The question is, one, how long does that cycle last? Two, what are the results for like but then three, like how does this feed through to dynamic white collar workforce that
All right, you got to be really choosy on what you're trading today. Obviously, energy's doing really well.
we're not hiring as much because of AI, or all the best firms are doing layoffs because of AI. So now you've got this self-obsolescence mixed with yes, but we need to maintain the business now. Again, contradictions are sort of popping up to me.
Low tick alert -800.
AI story 26, which is just like the two sides don't really feel like they add up in a really coherent way.
Yeah, I think that's right. I mean, whatever the case is, like that, those numbers that we just saw are inevitably smaller, and we'll change now even, that.
So that's an interesting question. I mean, I don't know. I guess what I've never 100% figured out, only because it's too cynical to be like every company wants to employ fewer people, which is something that I say. It just feels like it can't be quite right. But if you're, but like, I guess on the macro scale, like maybe that's true. I just don't feel like as a big consultancy trying to win business from all these different clients who are trying to find AI solutions, I don't know if what you want to put out there is like, and now we have 10% fewer people because of AI. Because then the project you're pitching is one note. It's hey, you can bring in AI and cut your work.
All right, we're back down.
Companies who probably want to get good AI solutions to grow. Right, the idea of just manage the bottom line.
Back down to the 200-day.
That's just not going to work.
Apple.
That's what's up with that right now. But that's not a healthy trajectory for all this.
Yeah, I mean, and I guess the other thing is that some of the big four are private, so they also have that also implies different calculus than having the
Partnership structure,
right,
public
and having to answer
structure.
shareholders and having to cut. But yeah, I buy what you're saying. I mean, you also need people. Like AI doesn't sell itself.
Yeah, right.
Right. We're not there. I mean, maybe at some point we'll be there, I guess. But like all of these AI tools, you still need a human to talk to another human about how great all of this is and how much they need it.
Yeah, I mean, I think we would have this view being like on what is essentially like we're essentially within the marketing arm of a tech company, right? I mean, that's like the function, and the number one functions that a lot of leaders want to get rid of is sales and marketing, because it's like I don't know what those guys do. They have conversations. They went to a client dinner. Like, let's just not do that stuff anymore. And I think it can be fine to keep existing business or even grow it a little bit. You have none of these creative design, like any of these functions, but you can't grow a company without like. There's a reason why that holistic stack, what we usually have as a large employer, like there's a reason why it exists. And I do feel like we will see a lot more job cuts, and eventually one company's going to come out and be like, I don't know. I don't think that really worked out for us having 0 sales people anymore, or having the whole sales funnel go through like 3 people instead of 40 or whatever. I do feel like it will go too far, but the environment right now is going to give you that overhead to cut too far and then undo it in 3 or 4 years.
Yeah. All right. Well, that does it for miles and I. Futures are still down, although not down quite as much as they were earlier. We continue to watch oil prices. Metals, not just gold, are rolling over big time today. Aluminum is down quite a bit.
Ran out of time to be in market too. Devastating to me.
Sure. If you ask me who's going to win it all, Miles, I don't know. Okay. All right.
All right, futures look like it's going to whip back in the other direction now. We're right at VWAP.
There are so many new ways to win up to $800. First, check out the login for easy daily rewards. Next, select the machine. Finally, try your luck in the spin for a chance at huge prizes. Come back and choose your favorite now.
All right, back to VWAP, looking for a bounce. Doji, no follow through yet. Micron looks like shorts covered. A little profit taking now.
You can hit big wins like $500 or more. No ads, no scams, no withdrawal limits. You can quickly cash out to your bank account. Try it now. Win real cash with Cider Casino. All right, tests are up game. A game that's just another day at the office. Test cleared. That's $12.
Better than losing at Uno again.
In the heart of the African savannah, a male lion defends his pride. What's this? He's called over a brother to prowl the reels. Together they double their chances of winning and make quite a fearsome opponent. Success. But this is just the beginning. Hunt down your next jackpot. Download Double Down Casino and play for free.
So let's take this and fill my can, and I'll blast all of the cards.
CTMX. LRMR.
Our Netflix still trending lower, 92 and change, 92.50. Futures pulling back. No follow through yet. Got to be careful. I really won't feel a little more really confident unless we get back above the 200-day. A big reversal tomorrow. A doji today, a big bullish candle tomorrow would be great. I don't see it happening, but in this current environment, I don't see it happening. That's what I'm watching for. Just taking it easy. Let's see if we get a bounce on Micron.
When you use Moomoo, you turn data into sharper trading decisions. Follow power traders' trades and model their portfolios in just one click. And with Moomoo AI, spot what matters, predict what's next, and decide with confidence. It's everything you need on one platform, from stocks and ETFs to options and crypto. Join now and get exclusive new user rewards on us. Trade smart with Moomoo. Invest today. They're faster than us. What's that? Over there. You need to restore power. Quick. What are you? Get those torpedoes in the air. I'm a former NASA mechanical engineer. I originally started on YouTube showing off some backyard science experiments, and now I'm doing experiments for viewers all around the world. Please welcome Mark Rober, everybody.
S&P starting to bounce.
Good Thursday morning. Welcome to Opening Bid. I'm Yao Fives Executive Editor Brian Fauci. It's looking nothing like a good day for markets. I wish I had better news. I just really don't. Oil prices briefly hit $119 a barrel as Iran eyes attacks on oil infrastructure. European gas prices have surged. All this on top of Federal Reserve that appears to be in a holding pattern on interest rates. That's not to mention first quarter profit warnings this week from nervous retailers like Macy's and Lululemon. So what's going on indeed? That is sure. Now, this operation of Fury disrupts global energy.
Brent at higher. Brent higher. S&P pulling back now. All right, all the New York banks are rolling over now.
The temptation to retreat is high, but the cost of sitting on the sidelines may be higher. Joining me at Yahoo Finance HQ is Penny Aiken, Edward Jones, CEO. Penny, good to see you as always. Thanks for making time for me here. We were talking a little bit off camera. There's just so much coming right at the average investor. Like, what is the playbook when coming into this year, we're expecting rate cuts. Now we don't know. We were expecting another big year for stocks. Now we don't know.
It's a time of uncertainty. Did we go to bed last night and hope that things would be very different when we woke up this morning? As we were talking about off camera, our clients are coming in and they're saying, so how does what's going on in the world affect what's happening in my world? And that's really the critical question for each investor and their family. You mentioned the playbooks. Many of those playbooks are similar to what they have always been, which is understand your risk tolerance, your ability to deal with these kinds of up and downs and curveballs, because these will always happen. Understand your time horizon. How long do you have? Notwithstanding that we hope that this doesn't go on for a long time, we also know that there's always going to be uncertainty to deal with. So what is your time horizon? And then what are your goals? What are your hopes and dreams? It's important then to establish an investment portfolio that matches those things and that is well diversified. And right now, notwithstanding oil prices and prices that are going up, we also have some tremendous values in market, ways for clients to take advantage of what's happening right now. But as we say, our financial advisors, 20,000 financial advisors, it's our job to take that anxiety off your shoulders, put it on ours, use those sturdy rules of the road, help you rebalance your portfolio, and stay focused on your work.
Where are you seeing those areas of opportunity now? The markets, I mean, look, the markets are not that far removed from their highs. If you dig beneath the surface, there's a lot of sectors in the market that are in correction territory, and certainly in some cases bear market. I look at software stuff.
Yeah. The lesson there is not to get wed to any one sector or to assume that any set of stocks is always going to go up. Trees don't grow to the sky. And so a well-diversified portfolio that takes advantage of those counter-cyclical movements is very important. Value stocks,
Micron back down to VWAP.
Technology stocks had some tremendous days in the sun, and I think will continue to.
Looking for it to be higher by the end of the month. Micron. S&P pulling back below VWAP. Expecting whippy price action, or at our seeing the opposite of what we're looking for with hedge flows. Hedge flows making lower highs, lower lows now.
Not generally. And it is because education and insight that stems from understanding of families' needs and wants. And
this 200-day area is pretty precarious.
And so one thing that can relieve
a lot of analysts are expressing little confidence in the 200-day, this area holding.
The day-to-day predictions or curveballs have less to do with your long-term plan than sticking with it. And so we're not seeing our clients. Every conversation is going to
Downward momentum is dominant from the 9 EMA all the way down to the 200. It all depends on crude oil, obviously. So right now we're just taking it easy, small trades, if any.
We saw one of the hottest. We posted something on TikTok, and it was really blew up overnight. No pun intended. But Jerome Powell talking about the impact of higher gas prices, and he wouldn't say this is going to be the impact. But he did point out gas prices are up over $1 in some areas of the country. Is that tip us into a mild recession?
Chair Powell also used the word humility about making predictions. We don't know. There is no crystal ball about that.
Low ticker at -800.
How that affects how they spend and what they spend on has a lot to do with the economy in general.
Okay, we continue to push lower. People getting impatient, getting stopped out.
But in terms of that tipping us into a recession, we believe that the fundamentals are still very strong. Unemployment is low. Job creation is not.
So Micron, we got a IB crush, about 42% so far.
Oil prices are high. So it's these cross currents. They're a little bit hard to predict.
Calls are much cheaper now than they were 48 hours ago.
About that, we have to stay vigilant about our everyday needs and the way that we're spending, but also remain very, very thoughtful about the opportunities that gives us for our long-term planning.
AI is really top for me, Penny, in a lot of
Top firms are raising their targets significantly. Micron targets 600, Rosenblatt, RBC to 525, and Bernstein to 510. Okay, S&P continues to drop off here.
By combining my humanity with AI tools. And then what's the addition? What is the value that can be created that we simply couldn't do before? We are able to detect senior fraud using AI in our transaction data.
AI for good.
At a speed and insight that we couldn't before. AI for good, right on. We are also able to dynamically manage portfolios.
Okay, VWAP is right in the center of the range, expecting more of this chop. MACD's turned down. Now we're looking for MACD to turn back up. Okay, starting to bounce at the one standard deviation VWAP bands. Yeah, I don't like the odds of today. Today's odds are so-so.
How does it change the role of a financial advisor?
AI for good, and it combining advisor intelligence with artificial intelligence. We do not believe that artificial intelligence is going to replace the relationship of a human advisor. In fact,
All right, hedge flows, lower highs, lower lows. We got support down here at 65.60. Let's see what non-zero day looks like. We're resistance right here. You can see that resistance right there at 65.85. We just kind of oscillating around it. Got big support down here at 65.30. That could be where we're heading. Hopefully not. All the moving averages are trending downward. Price is below the 200-day. So momentum is clearly bearish. So any bounces, you're trading counter trend. Personally, I'm waiting and give it a few days, few trading days for this to settle down. If we're going to bounce here at all, we need to see at least a doji today at a minimum. Tomorrow it would be nice to see a pop above the 200-day. I don't see that happening, but that's what we'd like to see if you're bullish. Otherwise, I would suggest just sitting tight. Sit tight. If you're taking anything, looking at Micron starting to bounce right now. If you're taking anything, do it at smaller size. That way you're not, freaking out. Here's Micron. Micron trying to bounce right now with a higher low.
All of the job, but for tasks associated with the job. There's augmentation opportunity, and then there's
The place to be
so our opportunity is to be
has been and looks like it will be energy stocks. We started this one back in January. Chevron continuation. Looks good.
Lastly, leaders coming in this year, I imagine what's happening with Iran was not on anybody's bingo card. It wasn't certainly on mine. Has it changed how you lead the company? How do you adapt to what might be, what might already be an economic shock?
Well, our company has served millions of clients for 104 years. So we have served and advised through 100% of those geopolitical shocks, the up and down in the markets, those unforeseen circumstances, and we'll continue to do that with calm, with an intention focused on the needs of our clients, family by family. We'll use that same playbook, we'll be adaptable, and we'll give advice that relieves anxiety.
Thank you, as always, for the incredible insights, Penny. I appreciate it. Thanks for making time for me. It's a full day of power players and opening bid. You just heard Penny awesome insight on markets and really frankly life. And I know my next guest will be equally as awesome. Gary Cohen steps up to the opening bid. Mike, next.
Yeah, it's been great. I saved hundreds when I switched to Progressive.
Molly Burke is passive progressive.
That's so great. Maybe you can buy a bigger sun hat.
Molly doesn't have progressive and takes it out on those who do.
You know, if they make one.
Chevron, ConocoPhillips.
Let's eat, girls. I'm so happy to blow all your savings upgrading to a better room.
ExxonMobil, all these oil and gas, Apache, doing well.
People on Depop really want your style. Sell your clothes and make even more money with no selling fees. Download now.
Sometimes a spark is all that's needed. In nursing, it's compassion in action. Every shift builds strength, empathy, and purpose. You're not just helping others, you're growing yourself. It takes heart, it takes knowledge, it takes grit. With high demand programs, affordable tuition, and a community that's been building futures for 60 years, let's build it together.
Stick with the energy stocks. Those are doing well. All right, Apache turning back up. Chevron turning back up. ExxonMobil. ExxonMobil looking pretty good here. Exxon. Looking forward to retake Tuesday, Wednesday's highs. Chevron, ExxonMobil.
Did they achieve everything they were hoping for a month ago? Motivation is a lie. The plan is the truth.
Oh, boy.
Insanely low prices are taking over every aisle. Markdown madness has arrived at Hamrick's. Get Houseflags door hangers and more for $10. Judy Blue denim, 30% off. Microfiber sheet sets, buy one, get two free. Modern fashion tops, $15. Ladies dresses, $20. Garden favorites, 50% off. And men's polos, shorts, and swim, $12. Crazy low deals await you at the store. It's Markdown Madness only at Hamrick's.
One app, every market unique. This is Kraken. Over 11,000 U.S. stocks and ETFs and over 300 crypto assets together.
They say the house always wins, but that's about to change. Meet Novik, the commission-free exchange. Here you trade against real people, not a sportsbook. Build parlays your way. Take total control of the odds and get ready to win big.
Low tick alert minus 800.
All right, we'll continue to move lower now.
No hidden fees, no limits. Download Novig today and use this limited time offer code BONUS50. Get $50 when you spend $5.
Tap tap, match up, skills on fire. Weak fights, bright lights, could win big if you play right. Yeah. Tap tap, match up, score, climb higher. What's my game?
What's interesting about it is that the most technologically advanced firms are actually reducing their headcount faster than anyone else, which is a pretty interesting tell for many organizations. I think they will find that they certainly don't need to hire people, or they need to hire much more selectively, and there are areas where they don't need people, and they can accomplish the same objectives and maybe 10 times more with less people as well.
The thing that I think a good number of people on the committee are concerned about is just the very, very low level of job creation. If you adjust what has been the trend job creation over the past, let's say, 6 months, if you adjust that for what we think, our staff thinks, is the overstatement due to overcounting, effectively there's zero net job creation in the private sector.
Okay, Chevron, CVX.
On the one hand, the cost of living is on the climb, higher oil prices filter through the financial statements of very large companies. Then there is the generative AI revolution as it shifts from a form of curiosity to a structural disruptor. The question is no longer if the job market will change, but how many millions will be caught in the transition. Here with me now is IBM Vice Chairman Gary Cohn. Gary is the former director of the National Economic Council during President Trump's first term. Gary, good to see you. I love that you always come prepared. You got the dot plot here. I mean, that's my love.
Chevron continues to push, looking for 205. That would be plus 50.
Make a lot of sense to every single time. So we heard from Chair Powell yesterday. He didn't want to commit to how higher gas prices are going to impact the economy. For the average human out there, is what we're seeing with oil prices transmitting to gas prices, is it recessionary?
It's absolutely recessionary in the short term. Like, there's nothing more instantaneous to a consumer than standing there holding down the gas nozzle and watching the numbers tick on the pump. You know, every consumer in this country knows exactly what they paid the last time they filled up their tank, what they paid a month ago. And if they're paying $80 a week ago and they're paying $85 this week and they were paying $60 a month ago, they know that I lost $20 of disposable income in filling up this tank of gas. And unlike people who live in New York City, the hardworking Americans in this country, they drive a lot of miles. They can fill up their tank 2 or 3 or 4 times a week. You're filling up 4 times a week. That's $80 of disposable income coming out of your pocket after tax disposable income. That's the difference between taking your family out to dinner and not taking your family out to dinner a couple times in a week.
When does this start showing up in economic data?
I think we're starting to see it come through. Remember, we're sort of week 3, going in maybe week 4. It takes some time for the transmission mechanism to work its way through the system. The other thing that you need to understand, and you do, we in the United States, we're actually in a pretty good position. We don't have a supply issue. We have all the supply we need. In fact, we're exporting.
Chevron, looking good. Energy, turning back up. Chevron.
So we know we've got
Need more sectors to participate.
If you're in Asia or you're in Europe and you're running a government there, you're making really strategic decisions how you're going to use the oil and gas that you have. And in fact, parts of Asia right now are shutting down businesses, closing down schools, asking people to work from home, and doing all the
Chevron turning back up right now.
saving and economizing the amount of oil you consume. So in many respects, we're in a better position than most of the world right now.
I'm going to get this question. So I'm going to put it to you before I get out there and ask. Are we in a recession, or we are slowing down going into one?
SPX may resume in
I
less
think
than
right
a minute.
now, we're more in a stagflationary environment. We don't have growth, but we have prices increasing. Now, with the prices increasing could be relatively short term.
we don't know. The one thing about being in a geopolitical situation is you don't know when geopolitical situations change, how quickly they can change.
There's no line of sight to when this is ending.
There's no line of sight. And we are seeing businesses on the other hand, and we saw this before what's going on in the Middle East here. Businesses were starting to right size themselves. There was this natural squeeze on profitability. So you go back to the quarterly earnings reports.
Still going. Chevron.
A lot of major companies were talking about 30, 40, 50,000 layoffs. There was hundreds of thousands of pronounced layoffs in last quarter, which is Q4 earnings that are coming out now. So this trend to cut labor costs in companies has been going on for the better part of almost 6 to 8 months right now. And it's a natural phenomenon. As companies have input costs go up, commodity prices have been going up across the board prior to this war. We see labor costs going up. If you have commodity prices going up, labor costs going up, tariffs going up, you have two choices as a company. You either raise your prices or you...
All right, so we're trying to get back up to the high of the day. It looks like stocks, people are taking profits. Imagine a lot of people are second guessing positions, maybe reducing their exposure. Not a bad idea if you have profits. Maybe reducing your exposure if you haven't been able to sleep at night or whatever. Usually it's because your positions are too big, too large. Markets have been moving lower for the last few weeks, so all the moving averages are pointing lower. 200-day will as well if this continues. Fingers crossed for a move back above the 200-day in the short term. Bottom line is, until we see a resolution to crude oil and the Iran conflict, there's still going to be a lot of concern, and people will most likely continue or step back from buying in a big way. We need to see those institutions step up. Institutions need to step up. That'll show up in volume. Looking for hedge flows to turn back up now and break this downtrend, higher, lower highs, lower lows.
We will get back to a normalized recovery. It will take some time. One thing about recovering the oil market and the natural gas market is, it's not a day out, a day to get back. Every day you're out, you add more and more days to recover.
The economy doesn't just snap back.
We're not going to snap back. That said, if we know that oil could freely move through the Straits of Hormuz, and we know that it's available, and it's just a timing of getting a wells back up and getting some pipelines fixed and getting some motors fixed and replacing some of the dam, the psychology of knowing that's happening will probably affect the market more than the actual shipping of the barrel. It's always trade the news, the actual event's not that interesting.
I'm glad you're here because I want to talk about AI too. The clip we had coming back from the show, I talked to Circle CEO Jeremy Allaire at the New York Economic Club, and he was saying, look, we're like 6 months away from a massive change in the labor force because of AI proliferation and a spike in unemployment. Like, do you see that? And how bad could this get? And how quickly?
Look, I don't know about a 6-month thing. So making these predictions.
Yeah,
I'll make a bold prediction. I don't think he's right. It could be 4 months, could be 12 months, or 6 months.
It's coming.
Like, it's coming in some respects, yes, but there's also new opportunities being created. The one thing I always point out to people, if you go back in the history of this country, go back in the history of the world, go back in the history of this country, and show me a major technological advancement that didn't overall grow levels of employment. Because when you create a major technical advancement, what do? You create productivity. When you create productivity, you create a larger economy, you create a larger GDP, and we need more people. Now, we may need them in completely different jobs. So, back in the cotton gin days, we needed people picking cotton in sorting. We don't need those anymore. Back in the horse and buggy day, we needed people managing stalls, shooting horses, feeding horses. We did need that. But lo and behold, the internal combustion engine came, and we needed people fixing those internal combustion engines. And in fact, there were a lot more internal combustion engines than there were horses because the economy grew. Even when you get back to the internet, I remember when we got internet, we got email, and everyone looked around the floor of the office and said, "Well, what are all those people going to do? That person there prints memos, puts it in the mailbox, and tells me what time to be at a meeting today." Well, that person's job lasted.
All right, we're trying to turn back up now.
But every company that got email is probably 2 or 3 times bigger today because they have a much bigger geographical footprint.
You can sense people are very cautious.
So, look, I'm not saying there won't be some disruption. There will be some disruption in employment. But I think at the end of the day, we will need different skills and we'll continue to need people to make sure our economy grows.
What happens to the displays? I've heard.
All right, back above VWAP pretty quickly here. Volume picking up.
I think displaced workers will be retrained and they'll get other jobs. They were talking about things like this when the horse and buggy went out, when the internal combustion engine came in. They were talking about things like this many times again. There's always this natural reaction. It's going to be horrible. It's going to be bad. It's going to be the end of civilization. It's going to be the end of the way we live. It's not. It's going to be different. And you know what? Different could be a lot better. If the economy grows dramatically.
What's Dell doing? Dell looked pretty good this morning, right? Dell? That dipped intraday back to VWAP with everything else. A pretty good run up in the morning, though. Let me go to the 5-minute chart. 5 minute. It's like a 382 Fibonacci retracement so far. MACD looking for that to turn back up. Watch for a dip buy on Dell.
With your home and auto bundle from Progressive. Oh, sorry. I'm just trying to figure out the right caption to post about this.
Maybe something like, I have protection, just need a life.
What about that emoji with the shocked face?
Or maybe flooded with emotion.
That's too much. Try it out. Tuesdays.
Dell looks good.
Technically, you don't post everything that happens online. Life is meaningless without affirmation. Am I right?
It's easy to start selling on Depop. Just snap up the photos and we'll take care of the rest. And with no selling fees, you can keep even more money. Download now. SPX may resume in less than a minute.
You can win up to $500 in this app. No money needed to start, no withdrawal limits. You can quickly cash out to your bank account. Try it now.
2 ways to trade with Kraken. Whether you're buying crypto instantly on the go or executing precision strategies on Kraken Pro, Kraken gives you the best of both worlds. No matter your style, Kraken has the perfect platform for you. Fast, simple buys or pro-level trades. Why not have both? Build your crypto portfolio with Kraken.
You guys are really good at this luncheon.
Starman TV, we produce emotional dramas for the whole family that are meant to uplift and entertain. Starman TV only on Samsung TV Plus.
Okay, looking for a bounce. Dell. Okay, stocks are starting to see people coming out, sticking their heads out of the shell. See if we get a bounce at all. Yeah, Dell looks pretty good. Showing relative strength. FTI also looking good. Futures turning back up, looking good. S&P trying to get back above VWAP. I'm expecting this is just going to be a choppy day. If for some reason we wind up with a hammer, then we'd be looking for a follow-through day tomorrow. Right now, if it's a doji, same thing. Not expecting much, not putting much on the line. Being the trend is down. Don't need to trade every single day. NVIDIA turning back up again. If you got time, maybe you're buying out in June, July, August, towards the end of the year. Third quarter, maybe. Buy in the money. Instead of putting a bunch of money on shares, maybe you buy some options. You have a risk-defined trade. Buying out in, say, September, third quarter. End of the third quarter. Just talking out loud right now. Just talking out loud, not doing much today. I have to see a lot more than what we're seeing so far that would indicate institutions are interested. Let's look at a few indicators. Let's see what junk bonds are doing. Junk bonds. It's another way to look at the markets. If you get a bounce in the volume, because the volume is tapering off. So these traders are absent the market right now. Something we need. If you're bullish, you need to see junk bonds bouncing. It's one thing I learned over 30 years ago from a friend that was a bond trader. Risk on, risk off. Currently, it's risk off, junk bonds. Same thing with IWM, lower, risk off. If we get a test of the 200-day and a bounce, that's several days off, most likely. Also, Bitcoin, that's something new that we've been using as risk on, risk off. Bitcoin, right at the 50-day, 21-day. The last time this pulled back after a higher high, we had 74 after we hit 72 over here on the left in February. 72, 74. We tapered off for 4 days and then rallied over 2 weeks to make that new high at 76,000. So I'm thinking we're going to do something similar. If we do, that would be bullish. S&P is still rallying now. S&P is still moving higher, back to the top of the range. A significant change would be a break of the highs this morning. Let's see what they're saying over at CNBC.
There's a lot of military defections also. You have a lot of military defections in Iran. I don't blame them.
All right, so the president is speaking.
I told him don't do that, and he just won't do that. We didn't discuss. We do. We're independent. We get along great. It's coordinated, but on occasion he'll do something, and if I don't like it, and so we're not doing that anymore.
And the last one, if I could, the Fed chairman told me yesterday that he plans to stay until the new Fed chairman is confirmed. And he also plans to stay on the board until the investigation of the Federal Reserve is done.
Well, he's under investigation because he's building a building for hundreds of billions of dollars more than it's supposed to cost. The building you see over there is under budget and ahead of schedule. That's the ballroom. The ballroom is a much bigger building. It's a much more complex building than what he's doing, and it's a fraction of the cost. Something is going on, whether it's contractors. That's what I do best in the world. I build great buildings. I've always done it, and I build them under budget and ahead of schedule. They could have $4 billion. This is a renovation.
There's not a lot of people that can say that.
If you look at the
Under budget and ahead of schedule. I worked for a firm that was always doing that That was their modus operandi. Under budget and under schedule. Ahead of schedule. Under budget, ahead of schedule. All right, just watching the markets right now. I'm looking for the telltale signs that institutions are coming in.
He's a stubborn, incompetent person, and that's a bad thing. You know, when you're stubborn and incompetent, I think it's the worst combination. And he's also not a smart person. But he's building a complex.
NVIDIA turning back up.
Under his jurisdiction, he started it, and it's out of control. It's billions of dollars for a little building. I could have built this building and made it beautiful for $25 million. $25 million, and it would have been beautiful. Look what I've done at the White House, fixing it up, and I mean, the place was in bad shape. You see the floors and everything; it was in bad shape. I could have made that building beautiful for $25 million. They're spending
ExxonMobil.
$1 billion. All right, so it's
Apache. Off the highs of the day, but that's still looking really good too. Energy stocks are the place to be. Don't buy up here at the high of the day, obviously. We could be a day or two off of, peak oil, peak energy.
But whoever the contractor is an extremely rich man. He's going to make, he could make millions of dollars. I'm hearing numbers from $3 to $4 billion. That would make it the most expensive building on a square foot basis ever built in history. And you're not even building a building, it's a renovation. The exterior skin is staying, the steel is staying, the structure. So all I want to do is bring out to the public that this guy is incompetent. He's a very incompetent guy. And he may be a dishonest guy, but somebody's dishonest because there's no way that building could be $3 to $4 billion.
Thank you. Mr. President, you just mentioned Japan.
This looks like one of your people.
Thank you.
Is he good or bad? Good. Is he a good reporter or bad? You know?
So.
Not a, all right, looks like it does. Go ahead.
Mr. President, you just mentioned Japan is stepping up. What kind of support do you expect from Japan in the future?
Look, I expect Japan to step up because, we have that kind of relationship, and we step up in Japan. We have 45,000 soldiers in Japan. We spend a lot of money in Japan, and we've had that kind of a relationship. So I expect, I'm not surprised that they would step up. We don't need much. We don't need anything. Honestly, we don't need anything from Japan or from anyone else, but I think it's appropriate that people step up. In the case of Japan, I hear they get more than 90% of their oil through the strait. So that's a big reason to step up. We've demolished, that country is close to demolished. The only thing is the strait. It's very hard. You could take two people and they could drop little bombs in the water and they're holding things up. We don't want that to happen. But honestly, Japan, China, Europe, parts of Europe, get a lot of their oil through the strait. We get none, practically. We're less than 1%. We don't have to be any percent. We don't even, I think we do it just to be nice. But we think of it, we don't use the strait. We're defending the strait for everybody else. And then in the case of NATO, they don't want to help us defend the strait, and they're the ones that need it. But now they're getting much nicer because they're seeing my attitude. They're getting much nicer. But it's, as far as I'm concerned, it's too late. UK wants to send aircraft carriers now. And I said, I want the aircraft carriers before the war. I don't want them after the war is won. They want to send me aircraft carriers after the war. There's practically nobody to shoot at them. Their missile count is down, Pete. Maybe you could discuss it by about 90-something%. The drones are way down, and the factories are being demolished.
Yes, sir. Our missiles being shot are down over 90% since the beginning. One-way attack drones down 90% since
since the beginning, which is a reflection of overwhelming firepower. But you mentioned the most important part, Mr. President. Their defense industrial base. If you can't make more of it in the future, then you have a limited supply. So we're going after all of their defense contractors that make all of their exquisite weapons and ensuring that even if they wanted to rebuild more launchers or more missiles, they couldn't in the future. And that's a level of devastation for their military that they've never seen before.
So we have, in literally 2 weeks, we've demolished their Navy, their Air Force. All technology is gone. All communication is gone. And all of the leaders are gone. Other than that, they're doing quite well. Okay, how about one more question?
All right, we're pulling back in a little bit.
For the Prime Minister, let me pick a beautiful-looking person from Japan. A question for the Prime Minister. Go ahead. Yeah. Oh, he doesn't believe he's beautiful. Oh. He sounded shy. Go ahead.
Of course, no, Japan and US are very good friends. But one question, why didn't you tell US allies in Europe and Asia like Japan about the war before attacking Iran? So we are very confused about three Japanese citizens.
Well, one thing, you don't want to signal too much. You know, when we go in, we went in very hard, and we didn't tell anybody about it because we wanted surprise. Who knows better about surprise than Japan? Okay, why didn't you tell me about Pearl Harbor? Okay, right? You know, he's asking me, do you believe in surprise? I think much more so than us. And we had to surprise him, and we did. And because of that surprise, we knocked out, the first 2 days, we probably knocked out 50% of what and much more than we anticipated doing. So if I go and tell everybody about it, there's no longer a surprise.
Why would you tell anybody about that? Makes no sense. Oh, man.
Are you good for the Prime Minister?
Yes, and
Go ahead, for the Prime Minister.
thank you very much. Japan's DG Press. Japan's biggest concern is China. Now they're giving us export control and very harsh terms to criticize us. So could you?
That's the president alongside the Japanese Prime Minister in the Oval Office, as you can clearly see, giving an update on the war, which he continues to call, as you heard numerous times, an excursion, a little excursion. Said he knew oil was going to go up, said he thought it would be worse. He obviously continued his criticism of NATO. As for the war, I think it's going to be over pretty soon, said the president, that we are substantially, as he said, ahead of schedule. And then a familiar refrain in terms of the criticism of not only the Fed chair himself, but the building renovations, which are still the subject of that federal investigation. We'll bring in Eamon Jabbers now, who joins us live from our Washington newsroom. So what do you make of what the president had to say, Eamon?
Well, Scott, I was actually focused really on what Prime Minister Takaichi had to say here, because the question is, what is the Japanese and international commitment going to be to this coalition that might put together a naval force in the Persian Gulf? She had a couple of stark things to say at the top. She said that the global economy is about to experience a hit because of a huge hit, she said, because of this development, that is the Iran war. And she says that she's brought specific proposals to calm global energy market. She didn't detail what those proposals were.
All right, so the New York things are looking a little better, but still an issue. We got a doji for now on the daily. I don't expect much. Not doing much. Much prefer a trending market, not one that we're currently looking at where we have chop. One day it's up, the next day you get stopped out. That's no fun. S&P. I took half of these off, by the way. These put flies, took half of those off.
A very warm hug from Prime Minister Takaichi to President Trump at the beginning of this meeting out on the South Lawn, and then we'll see where we go from here throughout the afternoon.
Still trying to sell this, it sounds, Eamon, as a short-term thing by calling it numerous times a little excursion. Certainly implies that, saying directly this is going to be over pretty soon, I think, substantially ahead of schedule, and the idea that they are not going to put troops anywhere, even as you have the issue of the Strait of Hormuz still in question.
Yeah, the president said he's not going to put troops on the ground but he wouldn't telegraph it if he was going to. I think the key thing to focus on is the money. There are these reports that the Pentagon is asking for $200 billion in Iran war funding. The president was asked about that here, didn't dispute that number. He just said it's a small price to
Low
pay to make
ticker
sure
minus
that we stay
800.
tippy top. That is, in terms of military supplies and capability. So the president here, seeming to endorse a large number for Iran war spending, that signals, I think, a more extended commitment than maybe some of his rhetoric. Okay, appreciate that from you, Eamon.
All right, so off more than 6%.
Welcome to the halftime report. Of course, I'm Scott Walker.
We've got another pivot right in this area.
Josh Brown, Shannon Sakosha, Malcolm Etheridge are all here at Post 9. Let's check the market for you, though, and see where we are trading. We've been in this range for a bit now, Dow down almost.
Okay, so this area right here is potential support.
Lower as well as crude oil makes a move here. You almost, Josh, have a two-pronged problem for the market. Not only the move in oil, WTI probably doesn't best represent the jitters in the market just because, Brent today topped 119. And then you have the Fed chair who was more hawkish than not and said inflation's not coming down as much as they, quote, hoped. The odds of a Fed rate hike by June are now higher than the chances for a rate cut. That's the backdrop. That's what you need to know. A hawkish Fed and oil that continues to go up, and stocks as a result are uneasy.
I don't often question the wisdom of the market, but I think in this case, that's crazy. The Fed knows damn well there's nothing it could do with interest rates that would change the price of gasoline at the pump. It's almost an absurd proposition. So I don't believe that to be the case. I understand why the market believes that. Just looking at what oil is doing to the inflation numbers, what high gasoline prices are doing. But the knock-on effect to the consumer is actually disinflationary, more so than it is inflationary. It is absolutely causing people to think twice about spending, and I think we're seeing that sentiment everywhere we look. So I don't believe it. The bigger issue for me is the state of the financials. They look absolutely horrible. The 2-year is up the most on the curve right now.
Sure. 385 was what it hit earlier today. We can look at it as Josh is talking. I didn't mean to interrupt, but just to give context to that, yields are definitely up, especially on the short end, on the back of what Powell had to say yesterday and where the Fed seems to be positioning.
Yeah, no, Judge, it's the right interruption because that's really the most important thing. This is the highest we've seen the 2-year since August of 2025. And in the meanwhile, it almost feels like there's nowhere to hide. The last couple of days, gold just broke down below its 50-day moving average. Metals and mining on the whole are the stocks themselves are negative. The materials are down 2%. We've lost the home builders because mortgage rates are not coming down at the rate that we had hoped earlier this year. And now you've got 26% of the S&P 500 below the 50-day, which is the lowest reading since Liberation Day almost a year ago. That is a 2 standard deviation below the mean, and it's problematic. 52-week lows on the NYSE are now at 5%. That's the highest since November. So it's a risk-off tape, and we've lost a lot of the areas that we were using as sort of like all right, here's a little bit of a hedge, or here's a little bit of a non-correlated asset. People are just right now looking at a lot of these developments, looking at the bond market, looking at oil, and just saying, you know what? I don't need to figure out the next thing I want to invest in right away. Let me move some cash to the sidelines.
Stan, it's the stats continue along the lines of what Josh was talking about. This was as of yesterday. Less than 30% of the S&P stocks are above their 50-day. It's the lowest since April of 25. So go back to Liberation Day, to when the market really got upset, and you had a number of stocks below their 50-day. So we're not looking great under the surface. Metals, gold is worst week since '83. And Jonathan Krinsky at BTIG says, buckle up, that the 200-day moving average of the S&P 500, which is 66.15, looks unlikely to hold. We're below it now, okay? So it's unlikely to hold. He thinks a move towards 6,000 has a decent probability. That barring a close back above 6,900, so that's a few hundred points higher from here, that the bears maintain the upper hand.
Well, I think one of the reasons that we saw this broadening out, particularly since August of last year, was this expectation of accelerating economic momentum. Part of that explanation was a continued accommodative monetary environment, not just here, but also outside of the United States as well. Josh already pointed to disinflationary trends. And then there was also this expectation of improving margins due to the implementation of AI. At this point, several layers of that value proposition, if you will, in terms of
More of this back and forth sine wave pattern in hedge flows.
as much accommodation. We're actually looking at potentially more restrictive. We're already seeing some tightening financial conditions, not just from yield, Scott, but from some of the carryover from what's happening in the private credit market. And then you look at the state of where to hide. I mean, with energy being the only sector that's positive this month, most investors are underexposed to the energy market based on its percentage in the S&P 500. And so where do you hide in this environment? You still have this bit of this hangover from the AI disintermediation obsolescence argument. Now you get potential challenges in the Middle East. And if you're sitting in cash, cash yields look kind of attractive right now, especially if they're not going to be moving lower. And so if you're wanting to put money into a market that perhaps is reflecting more attractive valuations, you're feeling like maybe you have a little bit of time to do that, given where yields are.
You got a choice of Malcolm, wherever you want to go, because we've covered sort of everything that's moving around. Dubravko Lakos over at JP Morgan's cut his S&P target to 7,200 from 75, just to represent where sort of the risk factors are now and where sentiment seems to be, and that the market in his mind is continuing to price in a short term, a quick end to what's happening in the Middle East, and he's not so sure, and nor are other investors too. How do you see it?
I think those two things run together. I think you made a really good point about the 50-day moving average when you harken back to Liberation Day, but the 200-day moving average, which is now fallen below, we haven't seen us breach that level since May of 2025, which was sort of the backswing from Liberation Day. And so I think that's meaningful here too, because it shows just how much pessimism has just kind of come into the markets all of a sudden. I think it's also a little bit disappointing to the point that Shan's making about where we are, because earnings were actually really strong in the first quarter. We blew out expectations by a wide margin for the majority of stocks that reported. And I think that's disappointing moving into a market that now is being uprooted by oil shock concerns. We're being uprooted by now private credit concerns that already.
All right, New York Fangs, it's almost like no one's interested again today. Makes sense, right? Why would you want to be buying when you can just sit back, go play golf or whatever, see what happens tomorrow or next week, see if there's a better opportunity?
Similar to a video a couple weeks back.
This is a huge high flyer. The stock's down 5% on what I said was a blowout quarter by any estimation.
Yeah. So I alluded to the financials for a reason. I think that structurally they were extremely important to the bull market that we experienced in 2025. And I think from a sentiment standpoint, we can't afford to lose them to the extent that we are. They're not as big as tech. They're not as big as consumer discretionary. But when traders, when investors think about the lack of follow-through from the financials, it just makes them second guess all of the other rallies that we have been seeing. And now that lagging performance has actually turned into detracting performance. These stocks are very important. Capital One Financial is down 26% year to date. That very rarely happens outside a much bigger disturbance in the financial system. Wells Fargo is in a 20% bear market. Prudential not far behind. The breadth of poor performance in the financials is 100% creating a psychology problem amongst the bulls. Out of 70 financial stocks that are in the S&P 500, literally only 5 of them are up this year. Only 5. And they're not necessarily the 5 that you want to see. CME and CBOE, which are two companies that thrive on market volatility. Interactive Brokers up 5%. Then you've got CB and Travelers, and that's it. All of the other financials are in the red, and many of them substantially so.
All right, what about coal stocks? I see some commentary about coal stocks, BTU Energy, BTU breaking out, HCC, HCC, Warrior Met Coal.
Respectively there. Jonathan Krinsky, again, Malcolm, opining on this, says there's little evidence that the downtrend is over. So what do I do with that?
I don't disagree with that, but I do think we're in an environment now where net interest margin matters less for the big three, Goldman, JP Morgan, and Morgan Stanley. I think that we're in an environment that is ripe for IPO activity. We've got 3 blockbuster IPOs set to happen at some point this year, presumably, between SpaceX, Anthropic, and OpenAI. I think all of those will be additive to the overall system, and I think regardless of how interest rates move throughout this year, those 3 are going to participate in just about every single big M&A transaction that we see this year. So there's still opportunity for them to finish the year strong, even if the entire sector doesn't actually go in.
So you bought Goldman.
I did.
Is that a new buy?
Yeah, it's a brand new buy for me. I've been wanting to complete that trifecta I just mentioned for some time.
Okay.
But Goldman was the strongest one among the 3, and the price really wouldn't come down from the 9s.
Well, it did.
And so finally, around 785, I got an opportunity and decided to start buying.
I like the move. Because I don't think things are falling apart, and if they don't, capital markets and investment banking, M&A, all the things that Goldman does literally better than anyone else should continue to shine. I'll show you the anti-Goldman. Give me a chart of Robinhood right now. The stock is literally sitting on a breakdown level. You got to give me longer than that, guys. This is in a 50% drawdown. You want to talk about an indicator of investor sentiment. And I know there's a lot of crypto in here. Look at this level of support that Robinhood has been sitting on top of basically since the beginning of February. You don't want to see what happens if this breaks down. You could be looking at a $50 stock relatively quickly. That's concerning because I think that stock, more than most others, speaks to the risk appetite of the regular investor. The other name that
hold on real quick. Let me just. Okay. I don't want you to get off that yet, because this plays perfectly off of what you're just talking about. According to JP Morgan, retail money invested is down about 15% week over week, and in total, 43%. Retail money invested down 43% more or less since the start of the conflict.
It turns out people really love instant gratification when they put money to work, and when they don't get it, the trend weakens or goes in reverse. I think that's what we're seeing here. We've had a very long run of people getting that instant gratification. I put $10,000 into the market. It's worth $11,000 a week later. Look what a genius I am. When that goes into reverse and 10 becomes 8, obviously you start to see that enthusiasm slow a little bit.
I don't want to get off the banks. Just I want to give Shannon a chance to comment on it, because you're the same day that you get a big win for the banks, the new regulatory recommendations, the requirements under so-called Basel III are a huge win for the industry. You're going to have much more lenient capital requirements. Presumably, you can lend more, you can give more money back to your shareholders. It's undoubtedly a huge win on something that the industry has been lobbying heavily for a long, long time. How do you see that?
Last year, this is all we talked about was Basel III endgame and the fact that we were moving away from that. And Scott, to your point, and to Josh's point, you get a reversal here in terms of the rate outlook, and you go from even, expectations of flat to a hike for the Fed, and you price back in one interest rate hike or one interest rate cut, You also start to see
Freudian slip. Freudian slip. You watched that news conference a little too closely yesterday.
The other thing that I really think that Malcolm just mentioned is that there's a significant amount of capital market activity that's going to come in the second half of this year. We're already seeing a pickup in M&A transaction deal flow. Those haven't closed yet, Scott, but that is not going to last forever.
ExxonMobil still grinding higher. Micron hanging on to VWAP.
And I think that this could be an excellent opportunity if you're underweight in this sector to start dollar cost averaging into positioning based on the fact that there are some of these things that I think will become tailwinds once again, coming from headwinds right now.
What do you think?
I think that it also makes sense that we have to consider how many refinancings are going to come into the market very soon if we do see a move in rates.
You get a better get a big move down in rates and real quick.
Well, I don't mean residential real estate. I mean more from the commercial perspective. I think the banks are taking back some of these loans we've been asking questions about from the private credit market over the last year. I think that's probably going to pick up because a lot of investors are moving away from that space, and so the capital available for it is going away too. So we're going to see more traditional lending pick up too, I think, in the larger business segment. if we do see interest rates become more favorable.
All right, let's squeeze in a break. We've got some breaking news, obviously, off the top. We're 30 minutes in. Dow's down a little more than 300 still, and we have a gutsy call today for our call of the day. It's from Morgan Stanley, and it is in one name that has been beaten down since this war started. We'll discuss that and more. Josh Brown's best stocks in the market, too, just ahead.
Oh, do. All right, so S&P just sitting here. Doji, I mean, it could be worse. It could be a shooting star or, you know, you name it. Right now it's a doji, so the bulls and the bears are obviously at odds. We did gap below the 200-day. I don't like that we're below the 200-day, but it is what it is. So what am I looking for? I have to see volume. If price moves back towards the 200-day, most likely initially gets rejected. If for some reason it gets above the 200-day and we get a big green candle, I just drew this in just to give you an idea what I'm thinking. You'd have to see this kind of action for me to even consider longer term swing on the S&P 500 or the Qs or IWM or SPY, because the odds are just so against the bulls at present. I didn't see what the Money Magic posted to date yet. Is updated. Did he update anything? Money? Yeah. So S&P, very precarious position we're in. Right? We got these previous pivots over here. You got this breakout pivot. That was back in September. We broke above this level, came back and tested it twice. We're down at it again. We're down 6%, more than 6%. RSI is nearly oversold. Could turn up if we got any kind of good news. I don't expect any good news. I'm just thinking the opposite at this point. You know, prove me wrong, basically. Show me news that's bullish. All I see is bearish.
All right, welcome back. I thought we would highlight what I think can be described as a call of the day, even with no direct ownership on the desk. It's nonetheless feels like a gutsy call today for Morgan Stanley on Carnival Corp, the cruise line. They upgraded it today.
Yeah, Carnival was looking pretty good the other day.
You know what's happening? Let's back that
It's at the low. Carnival, Royal Caribbean, NCLH, Royal Caribbean.
A little further back than that, please. They say historically the best time to invest in travel stocks has been following demand shocks. So we're working on the chart. But yeah, okay, demand shock, stock goes down.
NVIDIA is still trying to bounce. I have to see volume, folks. We must see volume.
Well, there's two sides to this argument. Number one, we have seen periods where we anticipated, for instance, the sharp rise in interest rates to essentially disarm the consumer entirely, and we didn't see that. We really didn't see a change in experience spending coming out of those interest rate hikes. The other side of this is that there is going to be an impact on non-discretionary spending from at least even a short-term period of higher energy prices. But Scott, we haven't seen demand deterioration in travel despite compounded higher prices over the last couple of years.
Yeah, so, but I mean, you start to game it out, right? You're down 23% month to date on Carnival because obviously if fuel prices are going up, not to mention the psychological impact of traveling when you're having a conflict like we are, but then the added input cost of rising fuel prices doesn't help these stocks.
But there's a lot more. I mean, we're talking just about cruise lines. There's a lot of transparency about forward bookings here too. So I think that there is probably more so than what the airlines can estimate. Three cruise lines are benefit from that future booking scenario. I do think that the call is gutsy, but if you look at consumer discretionary and you look at the pressure that it's been under, there is going to start to be some more interest in buying up some of these stocks that have proven to be where higher middle income and high income spenders have continued to traffic.
We'll see. You have to see to what level oil prices get up to. If they stay, I mean, the commentary seems to suggest right here, okay, we can deal with that for a little bit. You start to get up to like 130 and even higher than that, then you're going to start to have some demand destruction on the price of oil just going higher and higher. But I want to move on to Jeffrey's call today. They downgrade Kinsale Capital to a sell. It's underperformed. The target to 312 from 392. So back that up a little bit longer, guys, too, if we can see the stock more meaningfully. Yeah, thank you. Down 15% year to date. You on it?
Yeah, so this is a very niche business within the insurance industry. I've been in it for a little while. I've been adding to it on dips. This year has provided a lot of opportunities to add to it on dips because it's been nothing but dips. I think this is mostly in line with the overall insurance sector. These stocks had a really good couple of years. This is not their year. There are obviously technological concerns about some of these companies possibly seeing competitive threats from AI. I really don't believe it in the case of Kinsale. I'm not worried about it. And I think the valuation here is fine. So I would not heed this call. I am not planning to sell any of my stock.
Let's take a look at both Uber and Rivian, guys, if we could, because Uber's going to invest up to $1.25 billion in Rivian in a deal to launch 50,000 robo-taxis. It's an interesting one. Josh, you own the name. We can take a look at I want to look at the reaction of both stocks, though, before you. Can we show that today? Is that a today?
No, it's here today.
Can we show it today? Guys, on both of those names, that's what I'm trying to get at, please. So Uber's down, Rivian's up. There you go. Thank you very much on that. It's interesting, too. Let me just mention this because Megan Reeder, one of our producers who follows the auto space with Phil LeBeau, points out that buried in Rivian's 8K today is the fact that the company says, quote, in addition, the company no longer expects to be adjusted EBITDA positive in 2027 due to an expected increase in R&D spend associated with the acceleration of its autonomy roadmap. It was an important point that Megan wanted to make sure that
still chop.
So thanks for flagging that.
Sine wave in dealer hedge flows. We're not trending one way or another at this point.
Literally, what choice do they have? By 2030, most of the cars rolling off the factory floor all over the world are going to be autonomous ready. Part of that is because many of them will be working with the NVIDIAs of the world, and there are other providers with the software, the chips that enable autonomy. And part of that's going to be consumer demand. Why do we still live in a world where there's the possibility of getting hit by a drunk driver? It makes absolutely no sense. All of these cars should have at least the capability to drive themselves. In the case of Uber and Rivian, Uber has said publicly is not interested in owning fleets of autonomous vehicles as part of its strategy. That's what sets it in distinction from Tesla and Waymo. However, they are willing to use their balance sheet to kickstart an ecosystem where there are other providers beyond Waymo and Tesla.
Apple dropped off. Microsoft dropped off. So did Amazon. Google, NVIDIA, Broadcom trying to hang in there. Not enough to keep the New York FANG afloat at the moment.
With the user. And I think this is just one more step in that direction. They did a similar deal with Lucid a month ago, did a similar deal 2 days ago with Nissan. They are working with everybody to make sure that the autonomous future belongs on the Uber app.
I would just add to that really quickly that Rivian is also already set to be helped out by the R2 rolling off the line, right? It's going to be a lower cost option that gets to compete against like the Ford Explorer, the Jeep Grand Cherokee, things like that. So at a time when oil is spiking and there's probably going to be renewed interest in EVs, it's probably already a stock that's going to be on the move.
All right, let's go to Pippa Stevens now with a CNBC News update. Hi there, Pippa.
Hey, Scott. Director of National Intelligence Tulsi Gabbard said that the United States has high confidence that it knows where Iran is storing highly enriched uranium. Gabbard testified publicly in front of the House Intel Committee this morning before moving to a closed-door session. The testimony comes as Iranian attacks on energy infrastructure continue in retaliation to Israeli strikes Wednesday. Eli Lilly said its next-generation obesity drug has cleared its first late-stage trial on type 2 diabetes patients. The injectable drug helps patients lower a key measure of blood sugar levels across different doses at 40 weeks compared with the placebo. And it appeared to be more effective than other popular diabetes drugs in helping type 2 diabetes patients lose weight. And the 2026 John F. Kennedy Profile and Courage Award will be presented to Fed Chair Jerome Powell. The John F. Kennedy Center said Powell will receive the award for protecting the independence of the Federal Reserve. The people of the Twin Cities, Minnesota, will also be honored this year. Scott, back to you.
All right, Pippa, thank you. That's Pippa Stevens. Coming up, Josh Brown's best stocks in the market. He is focused today on an under-the-radar way to play the rise.
Or Micron trying to turn back up. Micron. S&P trying to do the same. S&P trying to do the same.
Given the asset mix that it has, where a successful movie can then spur lots of business on the theme parks, consumer products, Disney Plus, and all of the other pieces. So when you think about how important content is to drive the overall flywheel at Disney, that's where it starts, and we are actually very excited about the upcoming slate. So I do think they are on the right path on the content side, and there's a lot of good stuff coming.
Just to dig in on this a little bit, Dana Walden, who is President and Chief Creative Officer, seems to have gotten a little bit more power through this transition, even though she didn't get the top job. I mean, their content slate has been okay over the past couple of years, right? In particular, the Pixar stuff has not really been hitting in the same way, except for the more recent one, Better. But it's interesting that they keep the same person there, where the content hasn't been as consistent. SER. So LITX. Do they need to mix that up, or does she need to think about it differently?
I think you will likely see a change in approach. That doesn't necessarily mean you need to change the people, but I do understand the question. So I do think with this new focus of the company and it is a handoff, right? That this is not like an abrupt change in terms of Bob Iger passing the torch, which, again, has been a very successful era, less so from the stock's perspective. We very much understand that. But the strategic actions that have been put in place to position the company for the future success today, we would argue it is very strong given the asset portfolio that they do have and all of the premium IP that comes with it, back to your content point. So when you think about how they can reinvigorate that content slate, again, I think they're doing it now. With the content, it always does take longer to play out. And so this is a couple-year process. And what happened out of COVID and out of the strikes is you continue to get delay after delay. And so you're starting to see the culmination of some of that reinvigorated content starting to come out. You mentioned, the recent Pixar one, Hoppers, and what we think is coming, again, is a pretty strong slate, capped off at the end of this year with the return of Avengers. So we do expect a lot better content slate, or to build on the recent success.
Robert, we'll get to some of the other points, but I do have to address that stock chart, which, as you know, like the numbers underlying the revenue numbers, the earnings numbers, all of that has been fine. The stock price has gone nowhere for 10 years, right? So does all of this change that equation? That's really what needs to, if you're a shareholder in Disney, like that's what needs to happen. What is the thing that makes that stock break out?
So it's a very clear answer to us. I mean, yes, it comes down to content and all of the other pieces around it, but the way that the stock can get unlocked is through the value of streaming. And being the digital centerpiece that was called in the memo, what it takes is to really show Wall Street and all the investor base how they're going to bring all of these different streaming services together and what that can deliver over time. The reason Netflix has been so successful is they gave investors what the dream is, what the story is, and then they execute it nearly to perfection. And so when you think about where Disney can go, and we've seen this, from the stock chart, when the stock really broke out, it was the excitement around streaming. So we need to bring back that excitement first and then continue to execute, which they have been doing over the past couple of quarters, and continue to build upon that success going forward.
Do they need to spin off ESPN?
I don't know that they need to, but we do think it's something that they should reevaluate and figure out if they can make that transaction work while still being able to use the unique advantage that ESPN does bring to the company, owning and having access to all of these sports rights to play a critical role within this streaming ecosystem. And so that is one of their clearly differentiated assets today, but it has been, looking backwards, an overhang within the stock as the economics of the business has shifted away from linear. ESPN now does have their own over-the-top service, Unlimited, and that was a long time coming. So that the fact that that's out there right now allows them to capture some of these cord cutters and cord nevers in a different way. So using ESPN as a unique asset within this larger streaming portfolio is something that we are still kind of waiting to hear how they're going to fully utilize that capabilities.
Will be very interesting to hear about all of that. Robert, thank you so much. Appreciate it.
Thanks for having me.
Coming up, we're going to do our own version of Market Madness for March Madness. We'll explain when we come back.
SPX.
What happened to all the challenges and all the motivation to start? Did everyone already hit their goals?
SPIR.
Did they achieve everything they were hoping for a month ago?
BCS.
Motivation is a lie. The plan is the truth.
You can hit big wins like $500 or more. No ads, no scams, no withdrawal limits. You can quickly cash out to your bank account. Try it now.
Win real cash with Cider Casino.
Welcome back, and we really missed you. Did you know there are so many new ways to win up to $800? First, check out the login for easy daily rewards. Next, select the machine. Finally, try your luck in the spin for a chance at huge prizes. Come back and choose your favorite now.
Win real cash with Cider Casino. Boys, no, it didn't pan out last week. This week, I got the locks! Yeah! Today, it all pays off.
While everyone is sweating picks and scrambling for answers, you've got Outlier. See why over 100 million bets have been analyzed on Outlier. Download on the App Store or visit outlier.bet to start your free 7-day trial.
Yahoo Finance has started our own competition for March Madness. We're calling it Market
Low
Madness.
ticker at minus 800.
Two companies against each other in a tournament bracket. Who wins, you ask? We're letting our guests decide. Stock pickers. Adam Coons is joining us now. Winthrop Capital Chief Investment Officer. Joining now for Market Madness, brought to you by Everpure. Our first contestant, I guess, is what we're calling it. Our first matchups that we're taking a look at today. Adam, thanks for playing. So we're going to run through these pretty quickly, and then we're going to kind of zero in on a few of them. So I believe we're taking the right side of this bracket first here. So I'm going to take it, I think, from the top bottom here, and then we'll dig into a couple of them. So first on the matchup, we've got JP Morgan Chase and TJX, the retailer. Which one of these would be your pick?
Yeah, here I'm picking JP Morgan. I think just deregulation is on the horizon. I think we've got some news today, so I think that's really the propellant here for large banks.
All right, we're going to come back to JP Morgan in a minute, but let's get straight to the next one. Boeing and Netflix. This is an interesting one.
It really is. But right here, I think you got to pick Netflix. They're going to emerge from this kind of bust of a merger or acquisition, and I think they just have more that they can do with their cash flow. And Boeing just keeps screwing everything up.
Gotcha. So not a lot of options with the upside there. ExxonMobil and Amazon. As we know, ExxonMobil's been having quite a year so far, but where do you think they both go from here?
Yeah, and that's the reason why I picked Amazon over them. I think you've kind of seen the most you're going to get out of increased oil prices being priced into Exxon. So there's probably more downside than upside there. So Amazon, a lot of different stories you can play into there that makes it the winner for me.
Okay. Next up, we have Delta and Apple.
Another interesting pair up here. I think Apple is just one of those companies where it's kind of hit a wall. Having to use Google for their AI it kind of tells the story there. So for Delta, I think you're looking at more business travel. The consumer remains very resilient, so travel is going to maintain. So that's why we picked Delta.
Okay, that's an interesting one. Nvidia and Paramount.
Yeah, you got the behemoth here, Nvidia. I think look. Paramount and Warner Brothers, I think you got two sinking ships. Just because you tie them together doesn't make anything any better. So here, that's why I got to pick NVIDIA. Just sticking with the classic AI story here, I think there's still more upside for them.
All right. Next up, we were just talking about Walt Disney and the new CEO, Josh D'Amaro. They're getting matched up against Mickey D's, McDonald's here. Who do you like?
Yeah, so this is a tough one. I think, if you look at what can kind of be the upside story, it would be Disney. I think it has more upside potential, but there's just a lot of execution risk. So I think, to play it safe here in the bracket, I'm going to go with McDonald's. Tried and true, kind of can stay the course through an economic downturn if we see that.
Okay, next we've got Microsoft and Coinbase.
Yeah, so this is what I call my Cinderella story in the bracket. Obviously, Microsoft, again, similar to NVIDIA, is a behemoth in the AI story. But I think being tied to OpenAI is going to hurt them. And so, again, I think it's a tough one. This is kind of the outlier. But I think Coinbase is obviously highly levered to crypto, which is very volatile. But I think we're going to pick a Cinderella story in the bracket. This is it.
Oh, interesting. Okay. And then finally, and as I mentioned, we're going to go back to a couple of these. Finally, Ford and Nike.
Yeah, a couple of American brands are just really struggling. I think the reality here is that Ford has more downside, just having a hard time executing on the EV story. Nike obviously has a lot of headwinds, but it's a really strong brand. I think that they can make a comeback here, so that's why I like Nike.
All right, as promised, I want to come back on a couple of these and sort of double click, if you will. First of all, JP Morgan, you mentioned the deregulatory situation. I mean, we got to say also, all the financials have not been doing well this year. There's been concerns about private credit, right? There's the rate outlook for cuts to rates being pushed out. So what do you think turns things around here?
I think it's just that I think you've kind of overblown several different stories in the market when it comes to banks and their exposure, especially someone like JP Morgan. Similar to some of the kind of software sell-off, what you're seeing in banks is that they're all being kind of thrown out here. But JP Morgan is fairly, fenced off from private credit massively, unlike, a bank like Jefferies, it's highly levered to private credit. So I think that they're removed from that. I think that the risk of interest rates coming down significantly, I think, is a little bit overblown. Actually, after yesterday's meeting, you saw the probability of rate cuts in the futures curves move to 0% that we're going to see any more cuts this year. So I think the market's starting to rethink that. And then, like I said, the bigger story here is you're going to see more M&A activity just broadly, but also in the banking sector. As you kind of, obviously, there's been some distractions of some sort from the Trump administration, but one of the platforms they ran on was deregulation. And we do think that's on the horizon. Like I said, we got a little bit of news on that today. And so I think those things unlock earnings potential for JP Morgan. So that's just why we like it right now.
All right, let's, and the other one we want to double click on is McDonald's. Those shares are okay year to date. They're up 2.5% here. So what do you think? Why does that look good to you?
Yeah, as I said at the beginning, this would be more of a safety play, more defensive. McDonald's is obviously, and just different kind of economic volatility regimes can outperform because it's just stickier revenue. They've struggled outside of the U.S. lately, but overall, we think that it is kind of that tried and true type name, and so that's why we're picking it here. It definitely is a safer way to go. I think that there's just too many unknowns when it comes to Disney. I think it's obviously a great brand, a great platform, but they've just had too many missteps lately. And so I think they can get it turned around, but like I said, there's a lot of execution risk there. Yeah. So Disney definitely has more upside potential than McDonald's, but it also has a lot more downside potential. So that's why we went with the safe play McDonald's.
And you're okay with the way Chris Kempczinski eats a burger, I guess?
You can't escape that.
No, I guess
every
seems
to make these little balls, but yeah.
All press is good press, maybe. All right, Adam, thank you so much for playing. Really appreciate it. And you can stay tuned. We'll have more Market Madness. We got to go through the rest of the bracket. We're going to look into the other side of the bracket. That's coming up Friday on Market Domination. That does it for me and Market Catalyst. Thanks for watching. More Yahoo Finance is coming your way.
Hi, it's tanning day, and I'm using Beauty by Earth Self Tanner Body Lotion. This one is so good and clean, which I love, and it's not smelly or anything like that. You guys, this is the day after my tanning. TMI. I have so many friends and family asking me about this product. You guys, bet your bottom dollar this is going in everybody's Christmas presents because this is like a must-have.
SPX halted to the upside.
BCX.
BCX.
You can win up to $500 in this app. No money needed to start, no withdrawal limits. You can quickly cash out to your bank account. Try it now.
Welcome to the fun side of solitaire. Bridge Repair Streak.
BCX.
Half Repair Streak.
BCX.
Pirate Ship Bonus. Big win. Let's go for the treasure. Congratulations. The treasure is yours. Join us at Tiki Solitaire Tri-Peaks.
Doesn't feel like we're going to move above doesn't feel like we're going to move back to the top of today's range. If we do, I would expect it to happen after about 2 o'clock. Stocks are just fading. They're all mixed. Micron's pushing them back up, trying to retake 450. It's at 446. Micron looks okay. The energy stocks look good. I did notice that coal stocks are breaking higher. So check out coal, HCC, Warrior Met Coal, and BTU, Peabody Energy. That's breaking out. It makes sense. You got oil and gas at such prices. You got LNG, Cheniere Energy at highs, spiking. Some of these look like they're about to pull back in. Maybe we could see some increases in coal stocks. Watch coal. Yeah, Bitcoin's not cooperating that much. It's at the low right now, below the 50-day. Last time we rallied for about 2 weeks, came right after a very similar pullback that we're seeing in Bitcoin at the moment. So presently, I'm not doing anything. I'm just sitting tight. I did take a little bit of Micron earlier. That's a longer term play out in April. I took some put flies off. Took half of these put flies off that we've been talking about for, I guess, about 3 to 4 weeks now. These put flies, the 6,600, 500, 400. I took half of these off. That worked out pretty well. We got this band of support potentially. This band of support, we've hit this level several times since breaking out. Back in September, we broke out above this level, 6550. If you recall, back in September, we were looking for it to get above 6,500, 6,550. We finally did it. Ran higher into October, dropped right back down on a big bearish day. This is like these 2 bearish days right here are much worse than what we're seeing, this trickle down effect that we've seen for the last 3 weeks since we weren't able to get back above the 50-day. For the last 3 weeks, we just kind of trended lower, 6.5% lower. Same level that we bounced before back in October and November. So nothing tells me that this is over with. Need to see opposite type of volume. Need to see a lot of green, like over here. Back in December, we had these spikes in volume, and the markets rose back up to new highs. Okay, we do see RSI a bit oversold, so that's maybe a possibility. Stochastics is oversold, so we're almost there, maybe. I would suggest not doing a whole lot. Keep your cash. It's going to be obvious when institutions come back in. All right, we're about to make a new low right here, S&P. S&P is about to make a new low. For the pivot low right there, these pivots are the lows so far. And the ultimate low right here from this morning. Imagine a lot of people are talking about dojis, hammers, boldly proclaiming that it's probably over with. I don't think it's over with. I don't think this downtrend is over with yet. So I would keep your cash. Keep your cash. There's a few things that are working. Energy. Micron looks pretty good. The chips look all right. Okay, even these stocks, these were all green this morning. Disney, Merck, Amgen, these were all green. Now they're red. S&P 500, Baker Hughes, big move on Baker Hughes, back above the 50-day. Closed above it yesterday, follow through today, looking good. Baker Hughes is more than just an oil and gas company. They're also selling gas turbines to these big data centers. So this pullback was actually a little bit surprising. But the whole market pullback. So people were taking profits off, probably taking cash. End of February, this was at the highs, end of February. So to start off March, taking some profits makes a lot of sense. New York Stock Exchange, when in doubt, you always want to check the New York Stock Exchange. That looks like it could keep going. The 200-day is right there at 21,550 or so. This is 2,400 components, 70% of which are American companies. About 25% are American depository receipts, international companies, and about 5% are REITs. It almost looks like a 618 Fibonacci. Okay, so from this low over here on the left, up to the high, 618. Yeah, we're right through 618 right now. Okay, we're past 618. This pivot over here. Okay. So we got this pivot up to that pivot high. $618. All right, oversold on the New York Stock Exchange too. This is really important right here. Okay, a double dip. So do we get to the 200-day? I would project that we will. 200 days right here. Okay, so keep the majority of your cash at the ready. I don't think we're there yet. The downtrend continues. Apple, Microsoft, oh, these look ugly. These look ugly. Netflix looks ugly.
Low tick alert minus 800.
Okay, low tick alert. So we're making new lows here. Okay. They're going to come down and test this low, it looks like, down here. There's a low there.
Let's talk markets, and because it is now time for market show and tell, and today we're looking past the headline index number and into market breadth, which is a way to judge how widespread a market move is by counting how many stocks are participating. We've covered this before, and there are lots of ways to do this. Because here's the main thing: the S&P 500 can look like it's going nowhere, even when a lot of stocks are quietly getting healthier. So we're going to look at market breadth through this lens. How many S&P 500 stocks are trading above their 200-day moving average? The 200-day is just a long-term average of prices that shows the current trend. And when more stocks get above it, that's a sign that the rally is spreading out, not just riding on a few good names that we've seen in the past. So Kevin, when you look at this breadth measure, what does it tell you right now about how healthy this market really is, even if the index is feeling a bit choppy?
Yeah, so overall, still relatively healthy. If you looked at the whole universe of stocks in the NYSE universe, which is, I call it the market, then that's right at 2/3. That's the yesterday's close. So you're at a pretty healthy territory and sort of atmosphere. But even over the past several months, that percentage has actually been grinding higher, a little, slowly, but it's been grinding higher, even as you've had a lot of this carnage in certain sectors like tech, and that's depressed, the index level gains. But even for something like the S&P 500, you've been kind of hovering right around close to 70% on average lately. And I think what's been a little bit more remarkable has been the catch up in that statistic for the Russell 2000. The small cap is catching up.
Yeah, let's talk about small cap.
Yeah, I mean they've been so weak for so long in this bull market that we've been in since 2022. Sort of had these historic years in a negative sense for small cap participation or lack thereof in 2023 and then 2024. So we've been waiting for so long for them to really get up and going, and I think that for many reasons, strong fundamental reasons, they really started to turn higher now, and they really started to catch up. And one of the metrics that confirms that is that breadth statistic that you mentioned.
And just really quickly on software stocks, will we see a rebound here?
Well, the easy answer.
Do you have a fear of them being obsolete?
The short answer is I don't know, and nobody does. I think that I think for a sector like tech, because that's where software is, a lot of the questions have been around how much of this is an earnings-driven move versus how much of it is just multiple compression. So far, it's just been the compression and valuation and multiples, and I think a lot of sort of de-risking, whether it was tied to any leverage or not within that space in particular, but I think just a lot of de-risking.
Low tick alert -800.
Everything around the AI narrative and sort of pushing a lot of those.
Remind me of DeepSeek last year.
Exactly.
Catalyst.
Yeah. Yeah, and I think it's sort of that one area when you look at significant gains relative to the S&P over several years. It was that area that was quite extended. It was that industry that was quite extended. So to the extent that investors wanted to take profits in a certain area.
More low ticks. Everything looks pretty ugly. Google's managing to hold up fairly well. Google, Micron, even though it's lower on the day. Not doing much today. I think that's a good suggestion. Sit tight unless you're bearish.
Do need to take a short break, but coming up, we're talking energy versus tech. And it's a sonic runway battle that music investors fear. Stay tuned.
Still moving lower. Okay, the lows from this morning coming into play. Lows of the morning coming into play right here. These lows. This low right there. Let's see if we can bounce back up. MACD still drifting lower. Hedge flows, sort of a slight downward sloping look to it. If you look at this closely, lower highs, lower lows, tight range. And then we have these drops.
Portion of our portfolios.
Yeah. So let me then, if Gemini's right that you're a chess player, always looking 10 moves ahead, Nancy, please enlighten us. Maybe again, just going back to, so big picture for this year, we come in, everyone's overweight, everyone's got high price targets.
All right, Apple's starting to turn up. Apple's starting to turn. Day traders only. Apple. We're at the 200-day double bottom. Looking for opportunities. We got to see the index bounce first. Okay, but we got what looks like a triple bottom here. Apple. Potential support here on Apple.
Energy was half again as much of a percentage of GDP as it is now. So I think what we have to do is step back and say high-end consumer discretionary is probably going to be okay because the top 20% or 70% of spending, which is not to say I'm not empathetic to the lower 80% because I think energy costs will have to come down. But I think this administration is aware of that. I think the CEOs are aware of that. And if you look at productivity, which is something we've hung our hat on, there's no better place to measure it than in oil production, where we're using fewer rigs to produce more oil, and that should be able to continue. So I'm pretty optimistic that we will get hurt less by high energy prices, and rest of world will get hurt more, and that will give us a chance to return to fundamentals as investors.
And then the last thing I want to emphasize in your holdings here is you do have a number of defense names like L3, Raytheon, or RTX, I guess we're calling it now. You have some exposure on, again, to the kind of the energy pipeline, GEV, and Quanta, a name, one of your larger holdings that we don't talk as much about. So those are, I guess, the other larger narratives where you're placing your bets.
Yeah, I guess I really didn't answer your question, Kelly. Those are places where we've been adding, and Raytheon and L3Harris were names that we added 2 years ago, and that's how this works. We added to them somewhat, but we've been actually trimming RTX in recent months, and we will likely be trimming LHX. That is how you make money in the markets. You buy from from panic sellers and you sell to greedy buyers. And so that's what we're doing. We're trimming back the winners and we're adding to the names that have been clobbered that we think have potential. We launched the thematic portfolio at the end of September. That is also where we're making our bets: space, robotics, nuclear, and quantum computing. That's going to change the way we live in the next 10 to 15 years.
All right. And by the way, Q4 earnings are pretty good. I was reading Yardeni this morning. What was the growth rate? 13% or something?
Yeah.
11 quarters in a row?
Was good.
It's crazy.
The triple plays, Kelly, the ones that were, beat and raised, they got clobbered as well. So that's the opportunity. That's the dislocation in the market. It's not just earnings because they're backwards looking, but it's also guidance.
All right. Nancy, appreciate it. Thanks so much.
Thanks, Kelly.
Nancy Tangler with Laffer Tangler. Coming up, Micron pairing its 9% drop after that massive earnings beat where revenue nearly tripled as demand for memory soars. Our next guest now sees the stock climbing to 500, but says suppliers could now end up being the biggest winners. He'll join us next to make his case. Plus, JP Morgan still sees no rate cuts this year, even as Fed Chair Powell admitted it's too soon to know the precise economic fallout from the Iran war. What impact will Warsh have on the committee's thinking if he's confirmed by the June meeting? And now people are saying maybe he won't be. We'll debate with the 10-year back at 428. And we're watching shares of Ecolab, the Wall Street Journal reporting they're near a deal to acquire the data center cooling company
Cool IT Systems from KKR, the $4.5 billion deal, and Ecolab's trading down about 3% on that. We're back with a whole lot more after this.
This is The Exchange on CNBC.
Okay. Any bounce that we see here, I think, is going to be short-lived. Think being the opposite word, I have no idea, no way of knowing what institutions are going to do. I'm looking for the telltale signs that institutions are buying. That's going to be volume. It's going to be it'll pick up quickly. I don't see that yet. So there's no reason for me to do anything until I do. Okay, we got a little bounce. I'm just very, very cautious. Probably way too cautious, but I much prefer trends.
You mentioned shares of Micron are selling off about 4% today, despite blowout earnings last night. It really doesn't get a whole lot better than this. For Micron, revenue tripled, nearly tripled, I should say. EPS beat by 31%. Guidance was 37% above consensus, and their $34 billion revenue guidance for next quarter now exceeds its full-year revenue for every year in its history.
ExxonMobil continues to step higher. Micron is just kind of holding right in this area below the pivot high that we put in around 10:30, 10:45. Micron's still looking forward to catch a bid, maybe not today, tomorrow, next week, most likely. But with the earnings that they project, I don't see why we can't see more upside. I would like to see us a bit higher. No doubt about that. It's been a beating for most stocks. Most stocks taking a beating for the last 3 weeks, with few exceptions. Bitcoin, I'm looking for that to turn back up. We had 4 days down the last time it pulled back, and then we rallied for 2 weeks. I see you guys looking at the same thing I'm looking at. Looking for a bounce in Bitcoin.
putting a lot more tools in them. So names such as Applied Materials, Lab Research, I think are very well positioned.
Yeah, we were looking at Applied Materials yesterday before Micron earnings. Let's see how that's doing. Okay, so Applied Materials. Whoops. Applied Materials managing a bounce. That's a good sign.
Pricing is so high is because there is not enough clean room capacity available. So whatever limited capacity that we have is being directed away from PCs and phones towards AI, and it is driving a very strong pricing environment. A year from now,
All right, Applied Materials having a nice bounce.
becoming available, and even a Micron has invested in new fab capacity in the US, in Taiwan. You know, we have the Korean memory makers who are investing in new capacity, but it is going to take another year. But as that clean room capacity comes online, you're going to have to fill it with tools. So semiconductor company, equipment companies like a Lam Research, Applied, KLA, they benefit from additional clean room capacity coming on in memory. And also, by the way, a lot of the reshoring trends, right? More Taiwan semi fabs, you know, the possibility Intel gets into the foundry market. So they benefit from multiple levers beyond just this 1 year memory cycle.
So what I'm watching, I'm sure you and everyone are, and I think it was that Micron announcement this week or last week that they were going to add capacity in Taiwan. We were watching for the market to sell off, and it didn't. Those stocks rallied that day. The moment, and it's funny, it's almost like it's less about what the company's saying earnings, maybe, probably more about the first time one of these memory companies says, we're doubling capacity in XYZ place, and the stock sells off 12%. I mean, that might be the moment. Is that the way to think about it?
Yeah, absolutely. And you know, one thing, I know it's always risky to say it's different this time, but what is perhaps different this time is that for the same amount of capacity that you need for AI versus non-AI, you need 3 to 4 times the number of wafers, right? In past cycles, what used to happen is demand went up, supply went up commensurately or even more, and pricing came collapsing down. This time, as demand is going up, you need to have 3 times the amount of supply, right, to counter that. That is what makes the supply-demand equation favorable for memory makers for at least another year or so. That is the reason why we felt that the more prudent thing would be to continue to stick with this for the next year. But inevitably, in another year or so, you're right, people will anticipate new supply coming on board, and that is sure to compress margins and pricing. And that's the time when I think the semiconductor equipment trade.
Google looking better. Google. Yeah, I just saw the same thing, Nick. Google. Okay, got a hammer, a gap down.
Going into it, when the cycle turns, does that mean you kind of have that leverage working against you in the other direction?
100%. Right now, what perhaps saves them for some period of time is that today markets such as PCs, such as smartphones, are being starved of memory capacity. You know, soon it's very possible even the automotive sector might be starved of memory capacity. Wow. So it's possible that as that initial memory capacity comes online, it just goes to backfill demand that is being lost on the PC and the phone side. So we still think that, you know, there is time for that supply and demand to become unfavorable. And then the other thing to keep in mind is the AI complexity cycle is not stopping. You know, I gave you the 3 to 1 trade ratio, 3 times the number of wafers. In NVIDIA's next generation Vera Rubin product, that trade ratio goes to 4 times. It's possible that in their future product, that trade ratio might even go to 5 times or more. So it's not a static cycle, right? And that's why I think these memory companies are feeling very good that this can be an extended cycle for them.
Yeah, it's stunning. I mean, it's really stunning to look at more revenue in a quarter than the company's ever done in a year. It's pretty crazy. Vivek, thanks so much. Appreciate it today.
Thank you.
Vivek Arya with Bank of America. Coming up, it's private equities paying commercial real estate to engage. New data shows a staggering amount of fundraising by those kind of commercial real estate funds. We'll talk through the details next.
Relative strength and Micron, Applied Materials. right, so that looks good. All right, nice, nice.
University and an MBA from Miami University, as well as the Chartered Market Technician designation. Brian is regularly featured on Yahoo Finance, CNBC, Fox Business, and Bloomberg. Well, Brian, welcome to the show, and thank you for joining us.
Kenny, thank you for having me. I appreciate it. I just hope we have something to talk about. I don't know if I'm boring you. It'll be okay.
For some reason, I think you and I are going to have plenty to talk about. I saw you this morning on CNBC with Morgan Brennan. I thought that was a great, it was great for her. It was her first show. It was great for you. Once again, I always enjoy your level of excitement and your outlook, your positive outlook, very much like me. So I'm excited to have this. So why don't we jump right in and just talk about this 2026 outlook? Because I know you have a fairly aggressive, you or Carson Group has a fairly aggressive view of where we're going to be.
Oh, you're right there, and not there. I like to look. I keep it simple. I'm a simple fellow at the end of the day. I look at credit spreads. I look at advanced decline lines. Credit spreads are still telling us there's no stress in the system. There's this monster under the bed that they kept telling us is there. We would see it, right? High yield relative to treasuries is like breaking out the multi-year highs. The way I learned it, that's a good sign that credit's not worried. And advanced decline lines, that's the big
Private equity firms are under some pressure amid concerns over private.
Now, tech peaked in late October, right? It's kind of gone sideways, struggled a little bit, but other areas, industrial has done great. I mean, energy and materials, obviously, clearly small caps. We've had 14 days in a row of the Russell 2 small caps outperforming the S&P 500, like one of the longest streaks we've ever seen. But the lifeblood to a bull market is rotation. And when we see new highs in advanced decline lines, that's the market breadth, which is what we've just been seeing, like literally this week and last week, that normally means there's at least another 9 to 12 months before the market historically has peaked. So long story short, yeah, we're stretched. Maybe we're due for some volatility, right? It is a midterm year, 17.5% peak trough correction on average in the midterm year. And everybody remembers the last 2018 and 2022, not good years for investors. But we can use the F word on this, right? The F word, the Fed is an F word, okay? Figure you'd like that, freeze it for a little bit. Anyway, but the Fed was hawkish in 18 and 22. They're not, we can talk more about the Fed if you want. The Fed is not hawkish now. That's a big difference between those last couple of midterm years that weren't great for investors.
Well, I want you to do two things. First of all, yes, I agree with you. If you've noticed, in the first 3 weeks of this year alone, the small and mid caps are up 9.2%, way ahead of the S&P. I think it was up 0.5% year to date. Now, the industrials, I think, were up a couple of percent. Transports are up 4%. The equal weight S&P was up 4%. And so, yes, mid, to your point, are really breaking out and setting themselves up for what I think is also going to be a very good year for them. But I want you to explain one thing, because I think this is interesting, and I think some of the listeners may not be clear. So can you define or explain to the listener when you say credit spread? Explain to them what that means and why they should think about that.
There's a lot of ways to do this. I look at things like triple B spreads, right? Like companies that are kind of, I don't know, they call it junk bonds, and technically they call them junk bonds. That would call them high yield. If you're worried about getting paid back and you're investing those, you need to get a little bit higher premium, right? Because the market sets this, right? So when there's not a big high premium from the market for investing in more of the riskier, quote unquote, companies to get paid back, you're going to loan them money. That's kind of what we're talking about when we're talking about credit spread. Now, again, I like relative things like the S&P 500 relative to small caps, this and that. I mentioned it earlier, but if you look at like high yield relative to treasuries, think about what hits the fan. Treasuries usually do better. Well, high yield's usually not going to do very well. We're not seeing that at all right now. We're seeing that continued kind of appetite for risk.
Low tick alert minus 800.
And I think that's a real important factor. One more comment on this. Last August 2024, when we had the carry trade unwind, April of last year, when we had the big.
All right, so more of the same. S&P 500. Not expecting a big move. People are very cautious. You can sense it. Just given the doji, it's telling you exactly what's going on. The bulls don't have it. The bears don't have it. But we're below the 200 days, so that's bearish. We've been down for the last few weeks. That's bearish. We just keep looking for a reason to get a little bit more exposure in the markets. We can't do that until we see volume. Once we see volume, that'll be the first signal that maybe there's a follow through, imminent follow through.
Absolutely. So we'll get to that. We'll probably talk about inflation for a second. Inflation is stickier. I mean, inflation is closer to 3% than 2%. Like, yeah, we modeled our portfolio.
All right. I'm going to take about a 10-minute break. I'm just going to get a breath of fresh air. The markets are not going anywhere. I'm just sitting here staring at the same thing that's been going on for the last couple hours. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Thursday, March the 19th, 1:36. We got about 2 hours, 23 minutes left to go. Give me about 10 minutes. I'm just going to take a walk, get some fresh air. I'll be right back.
But again, big picture, the economy's strong. Inflation running at 3%. It's not spectacular, but you know what? It's not the end of the world either. Go back and look at history, everyone. Inflation is usually like 3.5% a year on average. Usually it's trending that matters a lot more. So we still say the Fed is a little bit more dovish here than hawkish. As we go for one more, I can go all day on this. One more. When the Fed cuts near an all-time high, like they did, Kenny, just last quarter in December, November, and October, a year later, the S&P 500 is higher 22 out of 22 times. I mean, that's the old saying, don't fight the Fed. I mean, that right there tells you they can cut your all-time highs, and they just did it, and usually it means you're probably going to be higher a year later. So that's just one little data point to have in the back of your mind.
Okay, so I will tell you, I'm glad to hear you say that because you and I agree on 90% of what you say. Because I agree the Fed's not cutting. They're not cutting. They're not cutting in January. They're not going to cut at the next meeting. And in my mind, in my head, the next cut is going to come after we get the new Fed chair. I don't think it's going to happen before then. I don't think Powell's going to cave. Nor do I think he's going to change his message. I think his message is going to remain the same. We remain data dependent, and right now the data says that we hold. I think that's what he's going to say, right? Now, that being said, I don't personally see a rate cut coming. Now, I don't see it coming because I'm not sure we need it. I think if we get one, it's going to be because they're going to force it on the Fed. That the new Fed chairman, whoever it is going to force it. Now, we can talk about that too because I'm thrilled that you said Rick Reeder because I've had my money on Rick Reeder since his name first came up as the dark horse in the race. And if you notice what happened over the weekend when Kalshi, the predictive market, Rick Reeder went from a 20% shot to a 50% shot, and Kevin Morse went from 65 down to 30. So I'm curious what's going on there because I love the idea of Rick Reeder being the next Fed chair. And so I think there's a lot of people suggesting it should look away from the typical or usual. Rick Reeder would be an outsider, but I think Rick Reeder, I think he's fantastic. I think he would be a tremendous Fed chair. And so I'm curious if you have a thought. Are you in the Rick Reeder camp?
I think I am. I think a lot of us, market geeks are because he is an outsider. He isn't like, he's not maybe he is a doctor if he is, I'm sorry, but he's not like versed in this stuff. He's a real world. He's been doing this. Listen, when you manage your money and you work with people and you work with emotions, it's a lot different than just writing a newsletter. I mean, all of us have done that. We know that. And he's done that. So, and he's a great communicator. Obviously, he's been in front of a camera most of his career. I'm not saying the Fed has to be in front of a camera, but most of the Fed chair people are pretty darn boring. I mean, Janet Yellen has a really good personality, but she had to act a certain way in front of the camera. And then you take her, you get her beer. She's hilarious, by the way. But for the most part, I think Reeder will be an excellent communicator, which the Fed needs to do that anymore. But also, he'll be more real world. I don't think he's going to be setting his ways on hawkish, on dovish, on this or that. But let's be clear. What you just said, I'll wrap it up with this. The truth is, who gets picked next Fed chairperson? The president. There's probably like a little bit of a pressure to, you better cut a couple times this year just to keep your boss happy. And then once you get through that first year, then you know what? Then you can go from there. I'm not saying it's right. I'm not saying it's wrong. I'm going to say it's kind of where we are.
Okay, keep that thought for a minute. We're going to take a break and come right back.
may resume in less than a minute.
Save Yeti from himself. Play Candy Crush now.
What happened to all the challenges and all the motivation to start Did everyone already hit their goals? Did they achieve everything they were hoping for a month ago? Motivation is a lie. The plan is the truth.
AZTR may res in 10 seconds. BCX may resume in less than a minute.
What is it you fellas said? We're burning daylight.
BCX may res in 10 seconds.
Top of the morning. Look what I've got. A pot full of riches from the green nut shop. Get 1 million free chance and start to play at Double Down Casino when you download today.
Play Solitaire Grand Harvest with Popeye. Go to your profile and monitor your props as you enter. Harvest your props. Prop 24. Congratulations! You've reached your goal. Solitaire Grand Harvest features Popeye for a limited time. Play now.
Okay, I want to pick up on that thought because you're right. Whoever it is, Rick Reeder or Kevin Walsh or someone else, they are going to get pressure, I think, coming from the administration to do something. Now, I'm in the camp that I think we're good. Unless the data starts to fall off the edge of the fall off the edge, I don't see why we have to go any further from where we are. We're 3.25, 3.5 right now. Right? We are well within what's considered a normal range. We're not the high end, we're not the low end, but I don't think the economic data suggests or demand that we be much lower. I mean, look at this. You just said it. We're going to see great earnings. We're going to see great forward guidance. We're going to see stronger economic data. PMIs remain in the expansion zone, right? The jobless claims numbers and all that, it's not falling off the edge at all, right? We're not seeing jobless claims and continuous claims suddenly spike up. We're not seeing unemployment spike up. It actually ticked down in the last NFP report at 4.4%, which is considered full employment. So we're not in the area where unemployment is 6% or 6.5%, where you start to say, okay, there's something wrong there. At 4.4%, that doesn't scream to me the place is on fire.
No, I don't disagree with what you're saying. I mean, it is clearly not on fire, I think. We did just have 7 months in a row of alternating up, down on job data. So, that's the first time since late 50s or 70s. So, we did it since Liberation Day and different things happened with immigration policy and all that stuff. The truth is the labor market is weak-ish. Is it cracking? I don't think it's cracking. We're in a low fire environment right now. And again, I think the time we're doing this hedge fund futures are looking for like a 0.42 or 0.43 of cuts. So that's less than 2 cuts. It's less than 2 cuts. Again, at the start of the year, people saying 3 or 4 cuts. We always said it'd probably be more like 2 or 3. So we may be a little bit on the under. And even with our models that we run on bonds and things like that, we're kind of even weight bonds at most in terms of duration, I should say, even rate duration. So we're not to the long end. We don't think they're going to cut massively. We think the economy is on pretty good footing. We just don't think, you get the job, maybe there's a handshake you need to cut a couple times, and that's where we are.
All right, so let's finish that first conversation about the triple tailwind, because then you are assuming that we're gonna have accommodative fiscal policy.
Yeah.
Right? And that ongoing continued AI CapEx spend, which I agree with you. I think all those things are true, which suggests again to me that the economy is going to be fine, and the markets are going to do well.
Yes, AI, I mean, it is what it is. It's not slowing down. Our friend Dan Ives keeps talking about this. It's not slowing down. The 5 largest companies in the U.S. looking to spend like $520 to $550 billion in CapEx. That number keeps increasing. We'll see this earnings season how it shakes out. But Taiwan Semi recently said AI spending is not slowing down. In the fiscal side of things, the tax cuts that went in play last year, a lot of people getting retroactive in their paychecks just right now. As some of those tax withholding schedules are changing. There's the deductions on tips, there's deductions on elderly income, there's different things that people. Oh, by the way, Wells Fargo came out and said the average. What did we see before with consumers? We gave them money back in 2020 and 21 and 22. Well, they're going to go spend it or pay some down some debt. So that's kind of where we are. So I think that fiscal policy is positive, AI spending also. Well, last comment on AI. The first half of last, well, I love stats. I know you do too. This is one of my favorite ones from last year. The first half of last year, our economy, U.S., grew 2.2%. That really picked up the second half of the year. But anyway, first half of the year, 2.2%. 1.1% of that, if my math is right, half of that was AI CapEx. Now listen, that kind of went down overall as the rest of the economy improved second half of last year. But that tells you right there that AI CapEx spending is a real part of this economy that can keep it going. And one more thing I want to point out. We talk about GDP and earnings all stuff. Productivity in our country, the third quarter is of 4.9%. It was close to 4% the quarter before that. Go back and look at history. When you have strong productivity, what you also have those years? Better economy, better earnings, and better stock market returns. We saw that in 23 and 24, big time. And then last year sort of pick up again. So I think in this low fire world that we're in that better productivity, and that can be the magical elixir to pay a little bit higher wages, put a little bit of a cap on inflation. We talked about inflation a lot earlier. I think a cap around 3% makes sense, especially if productivity continues to improve here, which we think it can.
Listen, I think the Fed has now accepted 3% as the rate. The whole talk about getting to 2%, I don't think we're getting to 2%. And I think the Fed has already in their minds, they haven't said it, I think in their minds they're accepting 3% inflation rate, right? And so as long as wages continue to grow and they're growing faster than the rate of inflation, and people can start to feel like they're not only keeping up but improving, then I think things are okay. But if people are looking for physical prices of things to come down, they're not going to come down unless we have a full-blown recession in this country, which nobody really wants. But if you want to see the price of chicken and meat come down, okay, you're going to have a full-blown recession in this country, right? You agree?
That's a great point. Yeah, I've used that for a couple of years now. And you bought this,
Right.
Maybe the toilet paper you bought used to cost $15. Now it's $22. When's it going to go to 15? And everyone kind of gets it. Never. Because if it does, we've got a really big problem on our hands. And utility bills. And my goodness, as cold as everybody heating up their house, all over the country right now, utility bills have really soared. Natural gas obviously soared. I mean, crude oil's down here, but most other commodities are up there. So there is that upward bias that's out there. And you mentioned wages. Wages are still solid. Wages have been coming down year over year. Again, maybe this is a little bit of a lid, if you will, on inflation. At the end of the day, wages are a big part of inflation. It's a messy crystal ball for sure. But the reality, again, is I just think that 3% inflation makes a lot of sense. Not 2%. I love what you said there about the Fed. They're not going to come out and say it, but I think they understand. And again, look back in history, everybody. What we just went through for 15 years during the ZIRP period, 2% inflation really isn't that normal. What happens to that? We have low yield. You don't get anything for cash. There's some negatives to that. So we're good with it. We're good with 3%.
I agree with you. I think 3%. I think people just have to. They're going to have to just get used to that. Because they were conditioned to think it's 2. The Fed's going to go to 2. We're not going to do anything with it. 2. We're not getting to 2. We're just not getting it. We'll get close, but we're not getting to 2. And so that's why I think right where we are, 2.83%, is actually okay. Okay, so let's talk about concentration methods. There are 500 names in the S&P 500. There are 7 of them on the MAX, right? The MAX 7 names. But there are 493 other names that are in the S&P 500. So I think you and I are very much on the same page about this. But go ahead, talk about the myth.
Yeah, so great question. So we've heard for years there's only 7 stocks going up. And I think that's kind of gone out a little bit. I think because people are realizing literally like last week the S&P 500 equal weight hit an all-time high. So
Right.
Again, yes, on market cap weight in 23 and 24, if you didn't have a big allocation to large cap tech, we underperformed your benchmark, underperformed your peers, underperformed everybody. But what we're seeing now clearly is more of a broadening out theme. And we look at like the S&P 500 last year gained right about 19% on a total return basis. Last year was the first year in 4 years where the 493 actually contributed more to that gain than the Mag 7. Yeah, the Mag 7 a couple of years before obviously contributed more. I think these are some important things. The other thing that I think is neat, we looked at 25 of the largest developed countries and looked at their ETFs, right? And we looked at 10 components. How much of the 10 components of their overall stock market? Well, U.S. is 39%. We've heard this for a while. The top 10 are 40%. The media tell you that like it's bad. I'm not saying it's bad or good. I'm just saying, then you look at the data, Kenny, that is actually one of the lowest top 10 concentrations out of all of them. I think it's India and Japan are lower than us. So obviously less than 39%, wherever that is. But most developed countries around the globe, their 10 largest companies contribute more. And I get it because of the small-ish countries in Europe. They got a couple big companies. That's why. But listen, if we're saying the U.S. is so top-heavy, I'm looking around the globe. We're not as top-heavy as other places. That's busting some myths that are out there from that only 7 stocks, and we're top-heavy, in my opinion.
Yeah, no, and I agree with you. And I think we made this point at the very beginning. If you look at what's happening, there are certainly other areas of the market that are excelling. SMID for sure, and SMID are typically not part of the Mag 7. So you got to look. You got to look beyond just the 7 names. I'm not saying get rid of the 7 names, not at all. I'm just saying there are, like you, that there are other opportunities.
Right.
Okay, so talk to us about your bull market cycle theory about that in your opinion, we're still in kind of the younger stages of this bull market, and that there's a longer runway ahead of us.
Yeah, when I say this, it sometimes surprises people, but this bull market turned 3 last October, October 12th to 13th of 2022, vicious bear market, and market's been rallying ever since. So we're in the 4th year of this bull market. Kenny, we went back 50 years. We found 5 other bull markets that made it into their 4th year. There's some that were shorter, but they kind of, flamed out fast. But once you get extended like this, get moving, I think markets are like bull markets are like a cruise ship. Once they get moving, they're hard to slow down, they're hard to stop, they're really hard to turn around. Well, look at those other 5 bull markets that made it to this point, the last 50 years. The average length was 8 years before they actually peaked. The shortest was 5, and then we had 2 that went double digits. I have no idea how long this was going to go, but I guess what we're really trying to stress is this bull market is likely much younger than most people think. And then you want to get real wild with it. I mean, small caps just now are breaking out the levels they were trading at 4 years ago, right? Energy stocks are literally at the level they were trading at 17 or 18 years ago. How about Germany? Germany just last year, in Europe for this matter, the German DAX just broke out above levels early last year. It was trading at in 2007, 2008. So I'm talking about the U.S., yes, but we can look at other parts of the globe. You could argue, and I am, that some of these bull markets are really, really young, and those are some areas you want to have. Last comment on this. We manage real money. We've been overweight equities a while. Yes, we have a globally diversified portfolio. We like the U.S. We like Gulf International. We don't like EM quite as much. We don't really trust China. But again, from a portfolio point of view, you want to own a lot of these other areas. We don't think last year was a one-off. We think this outperformance from the rest of the globe, or at least keeping up with the U.S. from the rest of the globe point of view, is probably here to stay for several years.
Yeah. Listen, Ryan, I could talk to you about this all day. Today, I'm going to give you pasta maggioli. Now, pasta maggioli dates back to ancient Italy, when beans were the primary source of protein long before meat was even affordable. Early versions were essentially bean stews thickened with whatever grain or pasta was on hand. As dry pasta became more common in the Middle Ages, the dish evolved into this comforting marriage that we now know as pasta and beans, olive oil, aromatics, and a tomato sauce, right? Now, there was never one recipe. In northern Italy, it might be lighter. Sometimes it's going to be a different bean. Sometimes it's with a touch of pancetta. In the south, it's heartier. Garlic, tomatoes, rosemary, maybe even the rind of the Parmigiano or the Pecorino Romano that simmers slow in the sauce. Listen, I made this yesterday.
All right, we didn't make much progress since I took that walk. Oh, yep.
When the Italian immigrants came to America in the late 19th and early 20th century, pasta fagioli came with them. Why? Because it was cheap, it was filling, and it was endlessly adaptable, earning its place as a staple in the Italian-American comfort food. At its core, it's not fancy, and that's
Still a stalemate. Doji, we don't know what's going to happen until tomorrow.
Can be unforgettable. Now, you can scan the QR code on the screen for the full recipe, and trust me, you will thank me later. That's a wrap.
What does VIX look like? VIX, if we can get volatility to fall off a bit. It's fading all day. VIX.
Email me at tradertalk@yahooinc.com because we're always listening. Until the next time, stay sharp, stay disciplined, and stay in touch. Stay tuned.
This content was not intended to be financial advice and should not be used as a substitute for professional financial services.
So, Jessica, is there anyone you like?
Like anyone here?
Oh my gosh, let's do Home Court Explorer.
Yes, it helps you shop, quote, and buy the right coverage for you, even if it's not with us.
What do you think of this option? You look so good together.
Don't hate me, I just told them that you're interested.
Oh, you did not.
Oh, I know. Let's prank call each other.
That's not how that works, Jamie.
Why do I take Chagrisso? Chagrisso, I can make pancakes. Chagrisso, I can share my handiwork. Chagrisso, I can play dress up. Chagrisso is a once-daily pill that's a targeted therapy approved for adults with non-small cell lung cancer and certain EGFR mutations when lung cancer has spread to other parts of the body. Chagrisso helps patients live longer. Serious side effects that may lead to death include severe lung problems, heart problems including heart failure, and blood and bone marrow problems. Other serious side effects can include eye and skin problems and inflammation of the blood vessels in your skin. Tell your doctor right away if you have trouble breathing, shortness of breath, tiredness, weakness, cough, fever or infection, pounding or racing heart, swelling of your ankles or feet, dizziness or any eye problems, severe blistering and peeling of the skin, purple spots, skin redness, large hives that last more than 1 day, or easy bruising or bleeding that won't stop. These are not all the possible side effects. Chagrisso can harm your unborn baby. Ask your doctor about pregnancy, breastfeeding, and birth control. Chagrisso, I can live longer. Chagrisso, I can ask for the #1 prescribed medicine for EGFR positive metastatic NSCLC. Ask your doctor if Chagrisso is right for you.
AXTI.
People on Depop really want your style. Sell your clothes and make even more money with no selling fees. Download now.
Can you cover this as well? No, sorry.
Alright, I'm kids, and I'm gonna get this for free. I'm playing blackjack. What's up, Rummy Boss?
That's $20 in. 9, 19. Oh, stay. 16. Oh, 25 at the first.
Yeah, so I just won 25. It's in my account right now.
Millions of slot players choose to play Slotomania, the #1 free slots game in the world. Download now to receive 1 million coins and a free piggy. Slotomania. What will today spin?
It's time for Yahoo Finance's Market Minute. U.S. stock continues to slide here on Thursday as Oil prices spike, strikes on key Middle East energy hubs stoking already intense inflation concerns on Wall Street. Comes expectations for interest rate cuts dampen, even as the Fed signals one cut could still be on the table this year. Sticking with the Fed, the central bank unveiling its proposal for lower bank capital requirements. This move would reduce banks' cash cushions to align with changes in the economy. Under the proposal, the largest banks like JP Morgan Chase and Bank of America would see capital fall on net by 4.8%. And lastly, Five Below shares surging after a great holiday quarter. The off-price retail chain reporting same-store sales growth of 15.4%. Company, however, coming off more cautious about its full-year financial guidance. Five Below citing tough comparisons in the quarters ahead. And that's your Yahoo Finance Market Minute.
Welcome to a new episode of Opening Bid Unfiltered. I'm Yahoo Finance Executive Editor Brian Sozzi. Let's get right into it here. I want to welcome on for my special guest here for this episode, Dr. Songyi Yoon, founder and managing partner of Principal Venture Partners. Also on the board of HP, a company that I've known for many years, and I've known a lot of executives over there. Songyi, so great to see you. Thanks for stopping by to do this. And this is quite a moment in AI. It's so amazing. The technology is moving at such a fast pace, yet in my world of stocks and markets, stocks aren't doing well. I'm just curious to get this started. Your assessment on this moment in AI. Where are things?
First of all, thank you so much for having me today. It's really it is great to see you here. As a person who's been studying AI for decades, I think this is a really tremendous moment. I think technology moves. One of my favorite quote is that the feature is already here. It's not just evenly distributed yet. I have seen that over the last decades. A lot of the technology that we're talking about, like whether it's agents, swarm intelligence, like the synthetic data generation, and word models, etc. Those are the new concept. That those concepts themselves and ideas have been around for many decades in different type of publications and research labs, etc. This is tremendous now because now finally it's in the hands of a lot of people. A lot of people get it. The capital is behind it. There's a lot of compute, data, and talent. So it's becoming a reality, and I think that makes this moment so special. However, I think it's just like any other platform shift moment in the past. I think it's really we're at the very early inning of this the kind of most platform shift. We're still building infrastructure. We're still trying to figure out what is a paper-based system for the coming decades. And so I think there is a lot of optimism and sparkle of imagination. But I think that we have to also go in with a level of caution.
How does I still remember when I started to hear about AI agents. I think it was from Salesforce co-founder and CEO Mark Video. It was 2 years ago. I didn't even know what he was talking about at all. Now, obviously, I do. And now we're starting to see these AI agents permeate very large companies at a very rapid pace. What is the evolution? Which I guess I'm trying to figure out what is next on the AI agent front. How might these agents look different a year from now, 2 years from now than today?
I think I don't have a crystal ball. I don't know exactly what's going to happen in 2 years. Agent is a very interesting architecture. Like it allows them autonomous kind of action taking by all this artificial creatures in our system. So I think it really helps with the automating processes. There's a lot of but the agent themselves is kind of the limited amount of information they're taking, and also the processing power. There's also I think there are many different ways to take it. Like for example, we talk a lot about physical intelligence. A lot of agents could be living in the last miles and physical devices that we deal with, and I think that could be one avenue to go. Another thing is the concept of swarm intelligence, like what one agent can may not be robust enough. There could be tens and thousands and tens of thousands of an agent collaborating to come up with solve problems together that could give more robust and reliable answers. And that's a way of like also implementing intelligence. So I think it's really hard to say in one sentence what an agent will look like in a couple of years. I think there are many ways how it can evolve and how it can be more deeply integrated in everything we do.
What do you think about that? Was it Citrine research report?
I mean, I think it kind of rattled the internet. It was an interesting prediction. Um, but I think it's what really matters is not just about uh, how the technology is going to evolve in its own, but I think this is a moment that participation of all of us is needed. I think technology is interesting. It's fascinating. I think it captures attention of a lot of us, but the question of the resource allocation, or prioritization, where things are, our kind of resource and energy is going to be deployed, has been prioritized and deliberated through a democratic process and participation of all of us, for the consumers, taxpayers, and the users and investors. So I think it's a very important moment because a lot's happening at such a kind of unprecedented pace. Instead of just kind of standing at the like a sideline, just watching what's happening, we should be able to participate and shape the future in a way that we'd like to live in.
I recently caught up with Block's CFO, and we were discussing a lot about, they laid off 40% of their workforce, and 4,000 human beings now that don't have any more jobs, and they are really leaning into AI and various other technologies, and they're not alone. They're not alone. I imagine it's going to get worse. Is it, some of the worst case scenarios that Citrine put forth? I mean, is that even possible? Is that what's the possibility on something like that happening, and unemployment spiking and people out of their jobs? It's so dystopian.
Yeah, I mean, I think it's a lot happening. I mean, I think it is true that some of the processes and the work that we've been doing in a traditional manner has been becoming more it becomes more efficient, and it requires a lot less kind of involvement of certain type of labor as we did in the past. I think it's that kind of transition happened every time that there was a kind of new GPT, like that ChatGPT, like general purpose technology was introduced, and there was a shift in platform. Imagine like what NASA looked like um, decades ago. It was we didn't have small computers. We didn't have the processing power that we have on our fingertip. It was like tens and hundreds of people doing very complex calculations together surrounding supercomputers. That has been all shrinked. We're not saying that, oh, like it was a kind of a technology evolution, and those talents are doing working on other problems, solving kind of other really kind of doing like performing other frontier research. I think it's a word is I mean, it's not like the word is short of problems to solve. I think we're finding ways to solve problems in a more efficient way, and I think there'll be a lot of interesting new jobs and new kind of the areas that needs the level of human attention and a talent and intelligence. However, I think this transition is not easy. It doesn't happen automatically. And as a society, we have to really pay attention how we can upskill the workforce, how we can provide opportunity for them to be trained and get ready to take a new challenge. And I think those are the things that we have to be very conscious of and make ample attention and investment.
What role should government play in helping to retrain the country's workforce? Because I had one CEO remark from the other day and said, Brian, you're no longer very soon going to be managing human beings. You are going to manage agents. And I looked at them like, wow. I There's just a lot for me to take. Maybe I'm just a manager of 500 agents and not even a single person.
Yeah, that's right. Yeah, I mean, I see a lot of interesting startups these days. They come to me and like pitch their a business plan, and they say, I ask, how many people do you have? Like, what is the kind of full-time equivalent? And they say, oh, we have 2 people and like 16 agents.
That's the business model of the future. This is two humans and hundreds of agents. I mean, that's quite the potential ROI, right? That's the health investment.
Yeah, right, yeah. I mean, I think it's
No progress.
here. I mean,
Markets just keep going back and forth, back and forth. The sine wave sine wave of death really is what I call this, because it goes nowhere. There's no trend. Expect a doji by the end of the day. That's exactly what we're seeing right now. Doji price action.
Of this technology, and I think that will be very, very critical. And also, we have to think about what the future of education should be like too. If we look at the education today, it has been optimized for delivering knowledge, and knowledge is becoming commoditized to a certain extent because we have this kind of search. We have agent at our fingertip, memorizing and just kind of having the knowledge delivered the most efficient way. I mean, that's the most important role of education. It is all about fostering creativity. That's going to be more important, and problem-solving skills and how to adapt to the new environment are the skills that's needed, and need to be educated. And what is education? What does a classroom should look like? How we should set the curriculum so that the kind of the workforce of the future is ready, get ready for that type of environment. It's something that we have to think about, cannot be complacent.
What are the type of questions that board members of public companies should be asking?
Hi, Tick Alert plus 800.
All right, high tick alert, high tick alert. All right, we got a spike here.
That's the topics we're touching today, right? I mean, I think of how companies themselves have to evolve with evolution of technology and also expectation about our customers. Our customers expecting for us to deliver at embracing and utilizing the kind of best technology exists in terms of the productivity, in terms of the kind of performance of the product and services that we will deliver and the way it's delivered. And I think company has to be ready to make that transition and evolution at the pace that the market expects. And I think in the boardroom, I think we have to ask those type of questions. Are we ready to go through that transition? Is our workforce prepared?
All right, high tech alert. We're continuing to move higher.
To make that transition and have them educated and upskilled to deliver that type of new type of service and product to the customers and consumers of the from the next generation.
All right, high tick alert.
When you scoop a spoonful and stir it in chicken soup or some ramen to stew, a pot of rice or breakfast casserole too. Marinated steaks and veggie skewers that shine. With better than bouillon, your dishes become divine. Just one little jar for all that you do, because everything is better with better than bouillon. It's true.
I'm Mark Lynch, and I've built my debt-free business for 40 years here in South Carolina. Lindsey Graham's been in D.C. 30 years, confirming Obama's judges, pushing amnesty for illegal aliens. I'm Mark Lynch, a true America First conservative who will fight for you. With your help this year, we dump Lindsey Graham. Click this ad or scan the QR code and donate now. D.C. needs businessmen, not career politicians. Donate now to retire Lindsey Graham. I'm Mark Lynch, and I approve this message.
Congratulations.
Win real cash with Cider Casino.
Arcade LB. Unveiling something to celebrate. Go to resdifferent.com.
for the right to remain silent.
Sing on the radio, all wearing all white. It actually looked like his nicer cousin. Many of the refiners, PBF, Par Pacific, Delek, Valero, they're up 49 to 75%. They've already had that run. Is this, just to wrap it up, is the natural gas issue in Qatar, in that region, is that necessarily bullish then for Venture Global, for Cheniere, for EQT, for Expand Energy?
Yeah, it is. I mean, I hate to use the word bullish because I'm so upset by the situation here. I mean, I'm thinking about what's going on in the Middle East. It's appalling. You know, we just had a call with Israel, and it's you know, now the attacks are at night, but it's a very disconcerting situation. We do have the potential for regime change. For example, in Israel, they have elections in November. Obviously, we've got the midterms, and that might be the regime change that we get out of this. For the US, as you know, natural gas prices were very low, very abundant natural gas. Our systems are all working. I just would ask the administration not to get involved in free markets at this point. And as the previous guest was saying, sort out the Straits of Hormuz is a matter of immediate urgency.
Don't want to make it worse. I know what you're saying, but they're going to probably get desperate here soon. Paul, thanks very much.
Thank you.
Paul, thank you.
Yeah, and by the way, like we said, we kind of gave a small tease earlier. On Monday and Tuesday, we're going to be live at the CERAWeek conference in Houston with a pretty amazing lineup of utilities, gas, oil producers, renewables. Peter Orzag of Lazard will join us as well. GE Vernova. It's all AI. You know, I always say, Kelly, AI is not, it's a software story, it's a hardware story, it's an NVIDIA story, but
it's an energy story.
It's an energy story.
Absolutely. And that probably would have been the whole thing about this conference if we didn't now have an energy story of a very different kind. After the break, stocks are lower. Yes, energy prices are higher as the fumes from the Iran war hit the markets and your money. We'll ask noted investor Kyle Bass for his strategy on how to navigate all these conditions. And Power Lunch returns.
VW. MEOH. VW. MEOH. HNRG. VW.
No follow through. No follow through on that last high tick. Just some shorts covering most likely. The shorts are trying to take it lower. The bulls are trying to take it higher. They're fighting a losing battle at the moment. If and when we see a push in one direction or another on higher volume, that'll give us a clue what's next. I don't have a whole lot of hope for the markets at the moment. Not to sound dire, I'm just saying hopes in terms of, are we going to start the trend in a short term, or are we going to just continue this downturn we started 4 weeks ago? I suspect we'll continue to move lower, but hopefully we get a bounce. NVIDIA's making a new high, Snowflake a new high, Apple turned a corner. Broadcom at the highs.
don't even know where to start because it's a very nuanced question, and it can one can answer in
Let's get a check on the markets, which are selling off as oil prices remain high and rising. WTI crude is down slightly now, but it was over $100 a barrel earlier after those Iranian attacks on energy infrastructure in Qatar. Talk more about how to invest amid all of this. Let's bring in one of our favorite power players, Kyle Bass, founder and chief investment officer at Heyman Capital Management. Kyle, it's great to see you. You don't need a preamble from us. What are you following in terms of the recent developments? And our last guest just brought up Taiwan as well, and he's thinking through the geopolitics of all this.
Yeah, I mean, first of all, I'm glad to be here, Kelly. I think that, China's watching this very carefully. She has told us since 2017 that he's going to take Taiwan by force if necessary. And, what I'm following is, believe it or not, the defense supplemental bill going through Congress and the fact that, we need to spend, at least $50 billion on precision munitions, and that's got to happen soon. And so we just need to replenish our stockpiles of both legacy weapon systems and we need to create new weapons stockpiles. So that's what all of this means to me when you look at the global tension and what's going on in the Middle East and continental Europe.
I'm glad you brought that up, and maybe you can give us some bigger picture context on all this. The bill is going to be high. One of the things people talk about in the 90s when we were able to kind of turn deficits into surpluses is that we had the peace dividend from the fall of the Berlin Wall. We kind of have the opposite of that going on right now. So our interest costs have exploded. Our defense costs need to go higher, it sounds like. We already have a lot more debt than we did back then. We already have big deficits. I guess this would explain why if anything, it's surprising that we're at 430 and not higher.
Yeah, I mean, Kelly, you just laid out a perfect case, something that I talk about behind the scenes with, other sovereigns and our investors is this is the largest peacetime accumulation of debt in world history. Typically, when economies like China's or Japan's or ours, when we get to 300% total debt to GDP, not just sovereign, but including corporate debt, that's a big warning sign. And that's typically two sides deficit spending going into a major war. And historically, to the victor go the spoils, and to the loser goes defeat and default. It is unprecedented, the debt levels that we speak of. And there is no doubt in my mind that over the next decade, we're going to see defense spending as a percentage of GDP go from roughly right now a little over 3% in the US, and Europe collectively got to 2% last year to meet its NATO pledges, although there were a few countries in Europe that didn't get there. Just collectively they did. I think you're going to see the spending go from 3 to 5 to 6% of GDP, which means deficits are going to widen, which means that Fed's balance sheet's going to have to grow again, and we're going to have a larger gap between the haves and the have-nots, and it sets the stage for more conflict, not less conflict around the world, and also internally. It starts to tear at the social fabric of everything, and that's the insidious nature of the inflation that we helped create post GFC, and then really accelerated that once COVID propagated from China to the rest of the world.
Kyle, how do we think about Europe as an investment? I hate to be so, talk about investments or whatever. We're CNBC, so that's kind of what we do. Europe has had a better run than America in terms of dollar-based returns. But as you know, I just got back from Europe yesterday. My flight was mostly empty on the way home. I talked to cab drivers, Uber drivers. I asked them, they're all energy costs, eating into everything that they do. And it was before the war. By the way, they already had this. Europe then re-stimulated, right? The Germans arming up again, whatever you think about it, it helped their markets. How do we view Europe as an investment? Do we look at it like, well, okay, they're going to have to add to the deficit and stimulate, therefore it's a good thing, or they're in big trouble?
Yeah, the way you think about Europe, Brian, is it's the retirement community for the world. You go earn your money in the US, you earn a living, you develop a life, and then you go spend it in Europe. Europe has so many problems, and they have an energy dependence problem where, what's gas, LNG is costing them now $60 an M, where it costs us $3 here. Europe's going to have to spend more on defense. So European defense names vis-a-vis the rest of Europe, they're going to do much better. The only reason Europe's doing great in dollar terms over the last 12 months is we had we introduced tariffs, right? I mean, our effective tariff rate around the world was roughly 16%, and the dollar declined by about 10%. So that was something that we knew going in, but we were trying to simply reset the largest trade deficit in the world because we have the world's hegemonic reserve currency. So going forward, I don't expect the dollar to depreciate vis-a-vis the euro or any of the other developed nations' currencies. So that kind of trade is over. So if you're thinking about investing in Europe, I would invest in European defense if you have to. If you don't, I would leave. I would keep all your money in the U.S.
And they are. I mean, there was an interview recently, and I think it was the Journal. It might have been Reuters. Kelly, help me out if you know, but it was with the head of Norges Bank, the giant Norwegian investment fund, and one of the most powerful investors in the world. And he was saying that their percentage of investments in America as equities had like doubled in a couple of years. Like they're basically a European company that's slowing its investment in their own continent and buying more U.S. equities. And I wonder how much of that feeling is occurring elsewhere as well. That the Europeans, well, it's a lovely continent. To your point, it's nice to visit from an investment perspective.
All right. A few stocks are turned up. NVIDIA is trying to push a bit higher. NVIDIA.
I mean, look, I drove to the ranch yesterday. I paid $3.59 a gallon for premium unleaded. So, whether you're in California paying $5.50 because of bad policy, or you are in Europe and you're paying $60 an M for LNG, Europe, Gerhard Schroeder sold Europe to Russia in 2005, and the rest of Europe kind of followed in. It was unbelievable to see them doubling down on the instant replay. The fact that the Germans...
All right. NVIDIA still looks like it's pushing a bit more. NVIDIA pushing above these pivots. Trying to push above this pivot.
Hasn't changed. It's got to change. They have to realize that they need to do things where they're also developing hydrocarbon reserves.
Micron squeezing at the moment. Micron. It's 228 on the East Coast. 228. Looking for institutions to add.
But I think when you think about Europe writ large, right, in the last 20 years, Europe has grown its GDP collectively, the EU 27, about 20%. The US in the last 20 years has grown 100%. It is without a doubt the pro-business, pro-entrepreneur, best place to be in the world is the US. And if Europe would just change its mind, if it would just understand the way the world's going to work for the next 10 years, they could get out of their own way. But so far, they can't get out of their own way. They finally realized that they need to get to 2% of GDP spending on defense 3 years into the ground war in Europe. It's unbelievable to me that they didn't get there immediately when that war began. But it's just the entrenched psychology of the Europeans.
And financial capacity problem, and that we were just talking to Nancy Taylor last hour, and this reversal now, where she said she always viewed Europe as more than a trade than an investment, and that's so people are changing minds. By the way, Kyle, thank you, Kyle Bass of Payment Capital Management. The head of the Norges Bank was talking to CNBC when he made those comments. So for king and country, folks.
There you go. I gotta say, my flight back from Europe yesterday was really empty.
But
I fly all the time, and almost every plane I fly on everywhere in the world is full or almost full. I was shocked when I got to Newark for customs because it was coming in from Europe. It was also empty.
Strange.
And maybe it's a one-off. I'm not making a pronouncement on an anecdote, but it was something.
All I know is they're also doing financial deregulation. So that's something. There is something happening to keep an eye on when it comes to Europe.
It is beautiful, though.
Beautiful.
I mean, just the send.
Yeah. Everyone's retiring to Portugal now.
Yes, they are. All right, let's check in on some of the biggest movers. One of them, by the way, goes right to what we were talking about. That is natural gas. That is EQT. That stock is up about 3%. Going the other way was the name we talked about a lot last night, Micron. That's down 3%. Why do we bring these both up? Because your trader is going to talk to you about it in Power Check. Next.
That you can do things on chain, you've got securities. And so
No follow through. Snowflake also trying to break higher. Applied Materials having a good day.
So which one?
Applied Materials.
What it will do for the cryptocurrencies, except to say that we now know that things that we weren't sure if they were commodities are being defined as commodities. The SEC listed 16 different currency objects that are now defined as commodities. So before we knew Bitcoin and Ether were commodities, and now we know that Bitcoin, Ether, and Solana, and a whole host of other ones are now commodities. So that will mean that it's easier for ETF providers to build commodity-based ETPs that they can trade crypto as equities.
So we think about, I had a guest on, obviously, who thinks we're going, he was a crypto person and he was all about, crypto moving higher. He was launching the Abra in a new ticker symbol and just really saying, look, it's not just individuals, but it's institutions, it's governments that are now getting involved. What does that tell you when everybody's on board like that?
So I'm going to tell you, the last 2 weeks, literally, is probably the biggest shift in market structure since Reg NMS came along in 2006, 2007. What you've seen just over the last 2 weeks, you had the ICE investing in OKX to establish the NYSE as a conduit. You had NASDAQ announce a deal with Kraken. You had the SEC come out with its taxonomy. And then just yesterday, the SEC approved NASDAQ's proposal to tokenize equities. So now you have this moment where the large players have woken up and they're getting involved. And you're seeing a convergence between the digital side and the traditional side.
Didn't we hear that BlackRock was doing a lot of that anyway? The tokenization like that of equities?
Yeah, BlackRock has started to tokenize some funds, and they're using tokens as a mechanism for streamlining the process of investing in funds. But that's only beginning.
And where do stablecoins fit in? You haven't mentioned stablecoins yet.
So stablecoins is one of the things that the SEC defined as not a security, definitionally. And what it means for stablecoins is we got some guidance from the Genius Act, and we're waiting for the Clarity Act to see where that goes. But it means that stablecoins are now established as an institutional tool.
Oh, as a tool, right? As opposed to what these were commodities. Bitcoin, Ethereum, Solana, you were calling those commodities.
Correct.
And so stablecoin right now is a tool.
Correct.
It could change.
It could change. There are situations where the SEC left itself an out. You can always have something that's not a security.
Micron.
It's like the escape clause. But mostly stablecoins are now going that banks can use for settlement, that they can use.
Micron. Pretty decent bounce so far today. Filled the gap.
How long does it take now to get that through?
Snowflake.
Change what it is, how it's classified.
Snowflake coming out of a squeeze.
Is their interpretive guidance from the commission. There was staff guidance in January. This is now the commission itself speaking. So they're seeking comments, but this is now the policy. They've now given us clarity.
And what do you tell folks when they say, I'm interested in crypto? How do you tell them to diversify a portfolio? What do you advise to them based on what you've seen? I mean, there were people who, lost their money in the wallets. They lost their passcodes. And that was the interesting part of Abra, for example. He was going to have wallets for, sort of your own safety.
Baker Hughes continues to ramp higher. Baker Hughes.
How do you think people should go about having crypto? And should everybody have some crypto?
So I'm not a financial advisor, so I can't give advice on that. But I can tell you that what we're seeing is a regulation environment, regulated convergence.
Baker Hughes continues.
Comes out of the Wild West and becomes a regulated entity. So, for example, DTC is going to be tokenizing securities. You'll be able to settle certain trades as securities.
And so,
and those things will have wallet protection. So if you lose your token, DTC can replace it.
And do you think that it's also regarded still as a safe haven or a way to get away, DeFi? For example, we've been hearing that people in the Middle East are changing money to Bitcoin. Have you heard some of that?
I've heard things about that. I think what you're going to see is that it's now another asset class. It's not a thing that's off to the side, and it's going to behave the way any other asset class behaves. There's going to be correlation between one asset and another.
As
then just finally, what other regulation are you waiting on? Is there anything else sort of near term? You did mention the stablecoin and whether or not it will change from tools to commodities or something else. I guess, is it more likely to be a commodity or a security?
Stablecoins would be kind of their own category. It's one of the 5 classifications.
So, anyhow, what other regulation are we waiting on that may be very important and very telling for investors?
So the thing that I think that is most exciting is the entry of the exchanges. So GIX is an exchange as well, and we have a digital strategy for bridging between traditional and tokenized securities. I think that is the big unknown right now. Over the next 3 years, you're going to see DTC doing a pilot. You're going to see the exchanges really accelerating their work, and we'll get a lot more market structure clarity as we at NASDAQ and New York begin to integrate these into their.
And just tell people, folks, exactly how you
Baker Hughes trending all day.
Is overall.
So GIX is a registered
Chevron.
exchange.
All the oil and gas stocks are continuing today. Almost 50 points. We get to 205, that'll be 50 points from the breakout. ConocoPhillips, Valero, all of these doing well. Maybe sell some covered calls up here. All right, we're turning back down again. Okay, so yeah, more of the same. Chop, chop, chop. Hedge flows. Not trending. Let's look at AMD. AMD. Micron. All right, so these are all taking a break. Taiwan Semi, Netflix. Netflix, we see some put selling down here. Put selling and call buying on Netflix. I don't see any reason to do anything. I mean, most of you probably already have positions that you're looking for to go green anyway. Apple, we got put selling on Apple, put selling. Let's see where they're selling puts. Puts. $6 million trade on Apple, buying the June 2027 280 strike call. 6.3 million.
Tailor the platforms to your unique needs with nearly endless customization and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Welcome back to the Watch List. I'm Nicole Petalides, and we're live on the floor of the New York Stock Exchange. I'm so glad you're with us. We have a few movers for you right now. Five Below, wow, rallying to a 4-year high today. Did beat on the top and bottom line estimates for the fourth quarter. Discount retailers saw revenue grow more than 24% for the quarter, driven by comp sales growth of more than 15%. Five Below posted revenue and earnings per share guidance for both the first quarter and full year that beat expectations. Then there's Evercore ISI taking emerging TrackDot coverage of 2 freight rail companies, the firm upgrading Union Pacific to an outperform, downgrading CSX to in line. For Union Pacific, Evercore says that despite merger-related trading purgatory, the company is operating at an elite level. On the other hand, Evercore believes potential upside for CSX is already reflected in the stock. And you may be hearing some excitement on the floor. There's always excitement, but some of that
All right, Apple, not making much progress, but we do see some call buyers out in June for next year. Put sellers, most likely, let's see where the puts are being sold. 300 strike. They're selling puts down here, so they want to get assigned shares.
Good to be with you, Nicole. So I think he sort of articulated both sides of the dual mandate, the tension that they're seeing, which is that inflation has been stubborn. We're still above their target. And now we've had two, for lack of a better term, shocks over the last 12 months. The first one being tariffs. Now we have war in the Middle East. And this isn't causing a problem for the Fed's normal textbook ability to, quote unquote, look through inflation and try to find the underlying impulse and adjust monetary policy accordingly. Instead, I think Jerome Powell is looking at things like inflation expectations. He actually mentioned that yesterday. As long as expectations remain anchored, then they can continue along the path that they're on. But I'm not sure he's so certain that over the near term they will remain anchored, given that we're seeing so much upside in terms of gas prices, which consumers feel very directly.
Right. I mean, he did say, for example, the tariffs will take time to go through in 9, 10, 11, 12 months, then that will actually maybe bring inflation down a little bit. So that was why he wanted to wait. But yes, I think the big picture was that inflation had the potential to rise. And, the jobs picture seems somewhat stagnant, not changing that much in his opinion. So what's your case here, or best case for equities at this point?
Yeah, so I think we're going to continue to experience volatility over the near term. I know that's trite to say, but we know volatility clusters. We know as uncertainty rises and we have these kind of, big geopolitical events, which, make no mistake, this is a pretty big deal. I think we're going to see that
day's kind of dead, right?
Near term among traders and the fast money crowd continue to adjust and push things around a bit. But as we kind of zoom out a bit and look at, what are the underlying elements that really impact stock prices over the medium and longer run. And so let's say into, as we kind of finish out 2026, I don't know the exact timing, but what do things look like underneath the surface? And we still like the economy. It still looks like it's growing somewhere around 2%. We don't see that changing much. We think inflation, despite what's going on in the Middle East, is largely anchored to kind of the mid to upper 2 range, maybe 3%, but that shouldn't be problematic for stocks. And then we still largely have the Fed on our side. How many cuts? We've been kind of in the camp of 0 to 1 all year, but rates are no longer restrictive. And so I think when you add all of that up and then overlay that with 10 to 15% earnings growth and the adjustment we've seen in the market in terms of valuation, we think the year ends higher than where we are today.
All right. Well, with that being said, do you have certain, I know you have stocks that you actually like. I want to hear a little bit about some of those. Do you have some favorites?
Yeah, there's a handful that I sent over, and I think the theme that cuts across all of them, they're in various sectors or different companies, but the common theme is growth at a reasonable price, what we in the industry call GARP. These are stocks, whether it's Citigroup or BlackRock in the financial space, or whether it's Amazon and Microsoft in tech, Salesforce in software, Lockheed in defense, Visa in financials and payments. These are all Uber as well in kind of tech and industrials. These are all companies that are growing their earnings anywhere between 8 and 25-ish%, and they're trading at PE somewhere between 17 and 25. And so what we're looking at are PEG ratios that look really attractive. Again, we want to make sure we're owning good companies that are growing, but we don't want to overpay for them. So you can cut across any one of those and find that type of profile.
Yeah, Visa, Citi, Pepsi, Amazon, Uber, Salesforce, Microsoft, Lockheed Martin. Lockheed Martin, really, this is all about just more defense spending, right, from Washington, and that seems maybe an obvious sort of go-to. What about Salesforce? When you saw the IGV and software and all that selling off, where does Salesforce fit into the picture, CRM?
Sure. Just want to touch on Lockheed real quick. This is not a trade for us. We've owned it for several years. We think there's a rising defense.
All right, futures dipping more. Not much to do here.
Look, software complex has been under pressure because of obviously AI and in particular vibe coding and the potential changes that OpenClaw, NemoClaw, and these things could put on the industry. There are certain software companies that are going to be.
Oh, this is boring.
I'm probably not saying anything that other guests haven't said already, but there are
Yep.
some in the group that we think have a foundational element within the enterprise. They're more than just code, and Salesforce is one of those. They were early to agentic. They've been talking about Agentforce for almost 2 years now, and we think that there's going to be a hybrid model that Salesforce deploys that protects their economics, and the stock is trading at 14 times. I've never seen Salesforce at a 14 PE as long as I've been doing this. It was 20 years. So we think it's a great opportunity for long-term investors.
All right. And what about a name like Visa? We are seeing people still spending.
Oh boy, this is boring as hell.
The airlines, certain groups, obviously the more upper end of the socioeconomic brackets, the top part of the K-shaped economy is the one who's the K-shaped economy are the ones who are spending, but still, Visa, for example, maybe you could put American Express in there too. I don't know. Visa has a real international footprint too. Tell me about why you like Visa.
Yeah, great setup. Look, Visa is a global company who's seeing their total transaction volumes here in the U.S. and cross-border growing still, high single digits, low double digits. The top line, because of things like Visa Services, which is growing faster than the overall business, is something around 12, 13%. So revenue growth, low double digits. They're seeing operating leverage, and they're seeing margins improve because of things like AI. We're looking at like 15, 16% earnings growth, and the stock's trading at 23 times earnings. Again, I've been doing this a long time. Visa usually doesn't get below 25 times, but right now it's below that. So we think there's a great opportunity to buy a great business working in a duopoly with MasterCard at a low valuation. I will say one thing that's really interesting about Visa is they're also in the stablecoin. You talked about stablecoin in your last segment. I think they have a great exposure to that opportunity as well. And the company is, I think, in a great position to capitalize over the next 3 to 5 years on what are some pretty clear secular growth trends.
And last but not least, where do you think oil, we can handle oil at $96, I think, for a time. Can we handle oil? What was it, 120 at one point? I'm talking about West Texas. Where do you think oil's headed, and for how long?
Yeah, it's a good question. The honest answer is I have no idea, because it's really going to depend on what happens in the Middle East. Are we going to bomb out all of this oil and gas infrastructure? If we end up setting ourselves back in terms of our ability to supply the world from that region, that's a big deal. If it's really just about the Strait of Hormuz and we don't completely incapacitate the ability to produce oil out of the Middle East, which is still a very big contributor to global supply. If it's just the Strait of Hormuz and we're able to pry that back open, then I think this is going to be fairly short-lived. It's not so much what we've learned from things like Gulf War I is it's not about the airstrikes, the missiles, and the bombing and the war. It's about when oil stops going up, it's going to.
All right, so just a doji.
Now, given what's happening in the Strait,
Spinning top.
seem to be, or at least Israel and Iran seem to be blowing up critical infrastructure in the region. So we need to see that stop. I don't know when that's going to happen, but I think it will eventually, because it's just too important to the global economy for it not to stop. So something that can't go on forever will stop, as we've learned, of course, as good market participants.
All right, Jason Ware, it's great to see you. I love that painting in the back, too, by the way. Jason Ware, Chief Investment Officer, Head of Research at Albion Financial. Thank you, Jason. All right, folks, still ahead, we're going to talk to all about Alibaba and some of the tech stocks related to China. We'll be right back. The final 90 minutes of the trading day, that's when markets make headlines and traders make decisions.
From earnings shocks to sector rotations, we're tracking the catalysts that move markets right into the close.
Here on the floor, I bring you real-time sentiment from traders driving the action.
And in Chicago, we break down the data, technicals, and trades you need to see before the bell rings.
Live coverage of the close every single day. This is Market on Close, live weekdays 3 p.m. Eastern, only on Schwab Network.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. all with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Hey, investors, you know the market moves. And Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Sam Barnes, live from the New York Stock Exchange. When the market moves, we're on it, getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com. Welcome back to the watch list. I want to bring in and speak with Ron Westfall, VP Networking and Infrastructure at Hyperframe Research, to talk about Alibaba, which is down about 7% right now. Some of your thoughts, shares were dropping after the earnings. What's going on with Alibaba, and does this provide a buying opportunity?
Yes, I believe that it's showing that Alibaba's fiscal 26 performance is showing that's going through a strategic pivot. So despite that 7% dip, I would say that Alibaba is becoming increasingly attractive in the remainder of 26 as a solid investment. And the reasons include that the cloud intelligence division is really delivering, and that it serves 35% due to the Twin AI ecosystem, that's its LLM capabilities, is really delivering triple AI-specific products. And this is, I want to think, underscore their ability to meet their $100 million revenue target in 5 years within just their AI and cloud divisions. So despite this hiccup, I think Alibaba is looking pretty good overall.
Do you think people really even realize about the Quinn AI ecosystem for Alibaba? It's sort of come on in the last, I'd say, 6 months or so that we started to hear more about Alibaba in the AI realm, right? It wasn't something we've talked about Alibaba so many times over the last few years, but we didn't really see it as an AI stock. Is it an AI stock now because of this?
I would say unequivocally yes, and the reason is that the Quinn AI ecosystem is definitely making inroads in China. It's already up to 200 million users, and Alibaba already has overall 800 million users because of its e-commerce model. So you can see the upside is significant. And what's interesting is that Alibaba did its homework. That this is an LLM that can actually, in some metrics, key metrics, outperform the usual suspects. The OpenAIs, the Google Gemini LLMs, and so forth. So this is not, a flash in the pan. This is indicating that Alibaba is truly diversifying.
Markets are truly constrained in this range, going nowhere. Hedge flows back and forth. You can see dealers aren't doing much of anything.
And Meituan, that they're birds of a feather, that they are akin to Alibaba, really diversifying their revenue streams. And Tencent actually has gone up recently, and I think that's reflecting that they have, I would say, even a more flexible near-term financial model. That is, they excel in areas like gaming as well as advertising, and so they're less dependent on strictly e-commerce revenue streams. And the reason why I mentioned that, because in the previous segment, energy costs are a concern. And so that could put a damper on some of Alibaba's prospects over the next quarter or so until that situation is more clear. In addition, when it comes to PDD and JD.com, PDD specifically has the TMU application, which is a heavily discounted commerce app that actually has traction in the U.S. somewhat like TikTok. And so what this is all pointing to is that overall, The China tech stocks specifically are looking attractive because they already took their, I would say, devaluation hit in 25 during the tariff conflicts and during the uncertainty around that. But now
Back up into the range now. God, this is boring.
there will be a better trade stabilization between the countries, and that will be good news definitely for Alibaba and the other China tech stocks.
Yeah. Olivier Blanchard, wanted to get your thoughts here on Baba and the Chinese stocks.
Hi, Nicole. Hi, Ron. Good to see you.
Applied Materials, having a good day. Recipient of some of that CapEx from Micron. Looking for this to continue trending. That looks good. Applied Materials, a little bit off the highs right now by about 4 points.
And so the good news is that we're seeing triple-digit growth in the AI services and the AI kind of like intelligence services, but they're still struggling to decouple their revenue from that majority e-commerce source. And so what we're seeing with Alibaba is still 50% of their revenue comes from these commerce sites, and only 15% comes from the AI services. So we're still seeing that transition happen. We're seeing companies also balance how much spending they're throwing at AI, and so you're seeing that difference between, for instance, Baidu, Alibaba, and Tencent. Tencent is seeing really good revenue from global gaming, from a lot of its AI and services side of the business, but it's not spending as much money as Alibaba is on building out the AI infrastructure. So I think we still have to be patient. Yeah, right now there's still more spend than revenue, and it's a shift. So it's just a question of time.
Yeah, well, thank you both, Olivier Blanchard and Ron Westfall. Good to see you both, Ron and Olivier. Thanks. And Alibaba right now down about 7%. Folks, thanks for being with me here. The Dow right now is down 355 points, and the S&P is down 41. Look, it's been down about 1% earlier today, so we are off the lows of the day, but keep a keen eye on everything. Stay nimble between now and the closing bell. We'll have Market on Close for you next.
High took alert plus 800.
Another high tech, maybe this time.
Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row.
Maybe this time, high tech.
You get the award-winning features of our checking account, plus cash management solutions, all
Looking good.
for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide. No
Extreme high took alert.
Ooh, extreme high tech.
keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy. From the opening bell to the closing bell, we've got you covered. Get inside the minds of pro traders.
My point is that they're getting sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp
Extreme high took alert.
with shows built for action.
Okay, there we go. A little pop.
With speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand. Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it, to leave everything behind, literally come across the entire world. I think we totally met what their wishes were. Schwab has been with us for almost 25 years.
Extreme high tech.
Houses, opening up our business, having children, they've always been there for us.
High took alert plus 800.
A company that can help
what moves the market. Download the Schwab Network app and stream anytime wherever you are.
All right, here we go. Breaking out. All right, let's go. LETSGO.
Extreme high tick alert.
All right. Got a high tick, extreme high tick.
Even names with good news not doing much. Take a look at Micron today. Blowout quarter. Wouldn't know it from the stock. It's off the low. It's still down more than 3%. Just shows the kind of market that we are in right now. Not too many places to hide, are there? Which takes us to our talk of the tape, the road ahead for this once resilient market. Let's ask our panel. Solis's Dan Greenhouse and Morgan Stanley's private wealth Sherry Paul, both with us.
Futures are ripping.
Yeah, you say you're still pretty wary of dipping your toe into this market with all this news flow.
We talked about this last week. I get the concept of buy when there's blood in the street, and conceptually that makes sense, and historically it's accurate and it's true. I just don't know that there's too much blood in the street right now. You look at the headline index. Yeah, we're now up against the 200-day moving average, which is sort of a level that you want to watch. Yeah, a third of the index is down 5%, but there's not really too much blood. And as we talked about last week, you still have this growing risk that this conflict in the Middle East goes longer than people originally anticipated. It already has gone.
Wow, we moved back above the 200-day. This is what I was looking for all day.
Extreme high tick alert.
You're starting to see it bleed into Brent now, and it's probably only a matter of time until you start to see it more dramatically in WTI.
And yet, Sherry Paul, I use the words resilient market off the top because it has been. And any downturn like the one we're witnessing now, the market has been bought. Even today, got Brent above 100, WTI is backed off a little bit. Maybe that's why the market's coming back. Who knows if we're going to close positive? We got the last hour of trade here. Anything obviously can happen, but how do you see it? Are you wary, like Dan says he still is?
I'm not feeling too wary. I think that the fact we're down, 5% with all the conditions that we're facing all at once. I mean, you look out at the last, 20 plus years, we've kind of touched on each of these issues over the last 2 decades, which is remarkable, but now we've sort of accelerated.
Okay, that could have just been shorts covering too.
Where we've got, an oil shock. We got
Does definitely look good though.
Credit kind of
Snowflake, there goes Google.
rotation due to tech innovation. And so I think that's left investors head spinning. I think they are very weary. But we have to move forward with smart investing strategies, and that's what I do for our clients.
I mean, this feels like sort of the obvious statement to make, but it's no shock that I don't think crude oil comes down a little bit, and now the stock market is coming up, and the S&P is trying to work its way back into positive territory. There's WTI on your screen, and if we show you the S&P, it would look inverse to that.
All right, that was the most excitement all day.
Political football, and it represents less than 4% of the S&P in terms of the index, so it doesn't have a lot of influence on the index itself. As far as constructing client portfolios, we want to be in these enduring thematics that sort of transcend these shock political or policy-driven moments, and that puts us right back into. I think,
all right, did we follow through or not?
Particularly in the tech sector for people that kind of missed out the last few years, to start to pick up selective names and to look at kind of bringing income into the portfolio and staying short to the intermediate part of the bond portfolio because inflation is a very real thing here in 2026. And saving cash.
High tick alert plus 800.
Guarantee yourself a loss.
But you're trying to determine what in your mind the all-weather portfolio looks like, right? Those are the
extreme high tick alert.
There we go.
Such a thing? Yeah. In periods like this.
The other thing I put in there is we've got a portfolio like it's 1999.
Oh, I saw that.
Okay. So there is such a thing, and I think it's enduring. It's been proven over time. But really the key, and remember, I work with individuals that live in their money and they breathe in their money. And so they're a part of the variable in terms of volatility and producing returns. And so the financial planning corridor to prepare people for what they're spending, their expenses, their gifting, how to produce a return net after tax is really key to compounding rates of return for people. And doing that, I think, through rebalancing and through broadening out, which we've been doing across the sectors in this market for some time since the end of last year, has been key. And those sectors have outperformed the broader market.
We're just prisoner to what's happening now until there's more clarity on oil.
and the Strait. Like obviously a positive, a really positive development out of that region.
Extreme high took alert.
Impact on the stock market.
Everything she said, Sherry said, is obviously 100% accurate for what she. The chunk of us that are a little more active in markets, the short term becomes far more consequential. And as we talked about last week, and I'll repeat here, and you just asked, oil could go, WTI could go to 100. I mean, it's already 155 bucks in Dubai. And oil WTI goes to 125, 133, whatever it might be. If this goes on, is not going to be good for the short term. I mean, you got our gasoline prices at the pump already 380. They were
Boom. Holy crap. Nice move.
And I wouldn't be surprised if this goes on to see markets not down 5%, but maybe down 10 to 12%.
No, I know. And the opposite of that, obviously, if it doesn't go on
Well, yeah, I mean,
that long, and I think
bad.
no, but I think the prevailing view so far, S&P just is that this is not going to last all that long.
Extreme high took
The
alert.
spike in oil prices isn't going to be that durable past however many weeks or whatever you want to suggest that it might, and therefore.
There we go.
By the way, Dow positive too. I don't know if there's a headline driving that.
It is coincident with you and I being on air together, so that might have something to do with our chemistry. But I think
maybe March Madness than the madness and volatility we've been witnessing in the stock market, but nonetheless,
could be our
we'll have a look at those. I think it's more complicated than oil's moving lower, stocks are moving higher.
That's exactly right. So
Crude oil.
Bad things are bad for the market. And
Crude dropping.
Any given day, that's what investors wrestle with. The case I've been making the last 2 or 3 times I've been on, and I'll repeat now, is we just have no
Crude's dropping.
how long this is going to last. Obviously, nobody does. So when we build out a model for what happens to GDP, what happens to earnings, et cetera, Sherry's correct.
Extreme high took alert.
To really be consequential to the market at this point. Exxon and Chevron, et cetera, huge companies, but on balance, the sector's too small. So you're left with the sentiment channel by which stock prices will be affected. And if you end up with $4+
Crude oil dropping off.
Companies talking about seeing the consumer act in a certain way, in the short term, it's not going to be good.
All right, stay with me a minute, because our next guest says investors should quote unquote buckle up for more downside, especially if a key level in the S&P doesn't hold. Let's welcome in BTIG's Jonathan Krinsky joins us once again. It's good to see you. So it's an interesting move that we've just witnessed in the market. So we're back above 6,600. I mean, that's important in and of itself, that people were trying to defend for a while. That looks like it was about to give itself up. 6615 is the 200-day moving average, but you suggest there's a number that's even more important than that.
Wow, look at this move in crude oil.
Well, look, I think, the note yesterday was really highlighting the fact that we were testing the 200-day or the area of the 200-day for the third time, and typically the more times you test a level, the more likely we saw that break this morning. But yeah, I think the more important level is around 6520. That's the November low. That's also the fourth quarter low. And so, if you were to lose that, that really suggests a change in psychology or dynamics. It could really open the door down.
All right, so this is the obvious thing I was looking for. All right, looking a lot better now. Cool. Cool. That's what I wanted to see. That's what I needed to see. Our Bitcoin turning. Bitcoin's turning up, Scott. So keep an eye on Bitcoin.
There's a Bloomberg headline moving that I might as well read to you, because I think that's what's taking place in the market. That according to the Israeli Prime Minister Benjamin Netanyahu, Israel is helping the U.S. open the Strait of Hormuz. That's a headline that the market is obviously digesting. Where
Here goes Bitcoin. Watch Bitcoin.
The ability to manufacture missiles, according to the headlines that are moving and obviously filtering into the market as it digests all of that and everything else that's coming into play in terms of oil. As long as we hold those key levels, Jonathan, and it doesn't really matter on an intraday basis, I would submit whether you know those or not, because it can be a good test of sorts for the market in and of itself. Are we all right as long as we close above certain levels like the ones you're watching?
Look, I think for the short term, yes, that's a positive. And what we've been saying
Bitcoin's going
in
here.
regards to any headlines you get, the worst outcome for the market would be if you get a positive development out of the Middle East, the market rallies, and then that rally is sold, right? And I think that's possible because if you go back 3 weeks ago, before any of the Middle East headlines came out, we were already dealing with software that was down 25, 30%. Different parts of the market, private credit, et cetera, was already had issues. The Russell 3000 growth index actually peaked that last September, October. So we've been dealing with issues for a while, and so I don't think resolution in the Middle East is the all clear that many people think it might be. So let's watch the reaction to the reaction, and today could be a good example of that.
Yeah, it's a good test, if nothing else. Again, we're positive now on the S&P 500. You're looking at the spike here as we came on the air, albeit a slight move into positive territory. Nonetheless, it is a stark reversal from the way that stocks have mostly traded on the day. Financials, though, really can't get out of their own way. And that, according to many, Jonathan, is a problem within this market. You agree?
Yeah, I mean, again, there were issues with financials before the Middle East. The financial sector peaked in January. We know about the private credit concerns. And the banks really were kind of the holdout within financials. And they've kind of started to give it up. The biggest name, JP Morgan, losing its 200 moving average. So I don't know that it's, anything that ominous at this point, but clearly a sector that's in a downtrend. The 200-day moving average on the financial sector has just inflected lower. So we care about the slope of the 200-day more so than whether you're above or below it. So there are a lot of signals that suggest the financials are in a little bit more stress. And I think it's more than just private credit at this point. But again, I don't want to make too much out of it. It's just something that is not acting that great.
Okay. Yeah, I mean, on a day where they get a big win from a regulatory standpoint,
Okay, that was exciting.
same breath, and they're not obviously reacting all that well to it, but nonetheless, it is a positive. Jonathan, thank you. And on that note, I do want to bring in our Leslie Pickard, who continues to follow this space. And just bear with me for a moment as I look away, Leslie. I'm just looking for more headlines here that are moving, which have seemingly moved the market. Again, the Israeli Prime Minister Netanyahu going forward and a lot faster than people think. So again, we're watching all these move in real time and seeing how the stock market reacts. But Leslie, I'll come back to you. This notion that the banks did get a big victory today. You wouldn't necessarily see it in their stock prices, but it speaks to the bigger issue that has affected this group.
Yeah, no, you're absolutely right, Scott. Bank regulators, they did share those details of a revised proposal for a slew of capital requirements that significantly waters down the controversial one from 3 years ago. So for big banks, a group of
S&P needs to hold above the 200-day.
requirements by 4.8%. According to agency officials, the reduction in excess capital for the largest banks would amount to more than $1 billion, which could otherwise be loaned out or returned to shareholders. The proposal from 2023 under prior Vice Chair Michael Barr would have raised capital by 16%, but it was met with fierce opposition from the bank industry, which argued it would restrict lending and impact the economy. So tied to today's news, Fed Vice Chair this proposal makes targeted, reasonable changes to better calibrate requirements based on risk. The Bank Trade Associations issued a joint statement following that, calling today's news a, quote, important step forward, while noting they'll review and provide feedback after assessing the impact on the industry. Now, the proposals are subject to a public comment period, Scott. So we'll kind of wait and see those 90 days what they come back with. But as you mentioned, net appears to be a pretty significant reduction in capital for the biggest banks.
Yeah, well, speaking of public comments, the leaders of the major banks.
All right, so far it looks like shorts covered. Is there new money? It's hard to say. If we close at the high of the day, that would be a good sign.
Terrifically before. The one pushback I would point is, while clearly private credit and the alternative asset managers have their own problems, the earnings reports from the big banks were really terrific. And if you're going to get a little deregulation here, and short-term trading aside, those big banks look pretty good to me.
Yeah, well, financials now are positive too, Sherry, on the day. We started, remember what I said at the beginning of the program, that energy was the only positive sector in the market. Well, healthcare is now, tech is now, financials as well. How do you see the group?
Well,
Looks good.
actually, the headline we just got that the war might be over soon kind of speaks to my point about trends over trades. And how
I don't know how much more pounding Iran can take.
trend investing is actually quite active investing, but what you're able to do is to move through
I mean, different kind of mentality, the fanatical side of Islam. I don't think that's the same kind of people that we've dealt with in the past. Fingers are crossed. Fingers crossed. So we need to get a close up here above the 200-day.
Regardless of what happens in Iran, that military build out is a go within a theme of what we're witnessing in Iran is what does the new military look like? It's a tech chassis. And what does that mean for corporations when they're trying to reimagine supply chains and get out of the way of deglobalization? And manufacturing, onshoring, here in the U.S., replacing expensive human labor, all of those CapEx spending converges within the tech suite. Now, that said, we moved into the
Come on.
in the fourth quarter of last year.
Tick is rising. That's telling you that they're buying for now. Let's see. Let's see the 60-minute. Looks like 60-minute.
As we're seeing a rise of technically holding companies within tech space. So I just want to distinguish between that nuance because you can trade within trends, but if you're trading without a trend, you're lost in a rabbit hole. And this is how clients actually end up losing money because they're emotionally tied to an outcome that they think somehow is going to be influenced day to day by policy, when in fact the market science tells us that that's not the case, that compounding rates of return is where people make markets. So yes, I am positive on tech.
Holders of Micron might be understandably emotional today.
They're a little emotional today.
They might be because the stock is certainly not reflective of the kind of earnings report.
I don't know. Micron's turning back up. 1 day does not make a trend, Mr. Wapner.
As the day began, Christina Partsinevelos is following that story for us and joins us. Was this just a matter of a stock that had just gone up and to the right and almost straight up into the right, into the print?
That is part of it. It is heavily owned, and a lot of people had anticipated just a blowout quarter. And it was really just one of the strongest reports of this cycle. Revenue and earnings way ahead of already high expectations. Guidance pointing to 81% gross margins, which is higher than NVIDIA. And yet, to your point, the stock sold off immediately after earnings yesterday, still selling off today despite the turnaround in markets. And so we're seeing the same frustration we heard after NVIDIA. If this kind of print doesn't work, what will? Micron, though, says key customers are still only getting half to about 2/3 of the memory they actually want. They've signed their first 5-year strategic customer agreement, which is a really big shift from 1-year deals that Micron normally signs. Samsung, a competitor, moving to 3 to 5-year contracts. They just said that they're working on that recently. And then SK Hynix's chairman, just within the past 2 days, said he sees shortages running towards the decade's end. Analysts are definitely leaning in today. You're seeing price targets increasing across the boards. Daiwa, Cantor, Fitzgerald, both at $700 price targets, saying the cycle just doesn't peak in 2026. But Micron, taking CapEx above $25 billion this year with another step up in 2027. And that's got some investors worried. To your question, Scott, we're closer to peak tightness and possibly peak margins. Companies and researchers say memory stays tight for the long term, but the market is treating Micron like these could be the best numbers for a while.
Yeah. Christina, thanks. We'll continue to watch that one into the print. Some will say that this stock is bubble personified. Others who would say, no, it's actually justifying where the AI boom is and where it's going.
Two things can be true. You look at the chart, and it's hard not to take a moment and say
suggest the former.
At the same time, and Christina just obviously accurately, I mean, 80% margins. They beat on every metric by an amount.
It was a blowout.
There's a blowout quarter. Now that said, the fact that this is the important point. The fact that the stock is not going up on such an incredible report. I think Christina's final point about maybe all these names are in a bit of a holding pattern right now. But admittedly, to get back to Krinsky's point, you've seen that for a couple of months now. That a lot of those AI AI type names have not really done very much, and it's been rotation that we've talked about week after week.
All right, Bitcoin continues to rally up. That's looking a lot better. Bitcoin.
Was on the network earlier today. Sanjay Malhotra, I mean, supply is tight. Not demand is problem. Supply is tight, and that sort of leads to the this is justified till it isn't story. This run up in these names.
Yeah, without question. I mean, look, markets are anticipatory, right? Economists and earnings are showing us what's already happened. We have to look forward to projections. People made a lot of money in these stocks, and to be rotating out of them just seems very organic. It doesn't mean that the trend isn't over. It just means that the trade for today might be.
Okay, you can see that there's still a lot of profit taking up here. Got to see this follow through. Got to get a follow through.
Hey, Scott. The Wall Street Journal is reporting that Jeff Bezos is in early talks to raise a $100 billion fund aimed at buying manufacturing companies and then looking to use AI to speed up automation. Now, citing people familiar with the efforts, the report goes on to say that the fund is being pitched as a manufacturing transformation vehicle targeting sectors including chips, defense, and aerospace. Now, if true, it would surpass some of the world's largest buyout funds and rival SoftBank's $100 billion tech-focused Vision Fund. Bezos was recently named co-CEO of Project Prometheus, a startup building AI models designed to understand and simulate the physical world, with separate talks underway there to raise as much as $6 billion for that company. Scott?
All right, interesting news back. Thanks, Mackenzie Segalis. We're just getting started here. Up next, Aldridge Anker Crawford. She's back with us. We get to take her take on this late day turnaround, especially some trying to rally. NASDAQ on this young year so far. Does that change anytime soon? We'll ask her next.
All right. Come on. You can do it. Stay above this level. Haven't heard any more high techs. We only have 37 minutes to go. 37 minutes to go. Okay, looking for more upside. Swarmer has caught a bid. Swarmer. Okay, watching Swarmer for a bid. Okay, starting to get a little bid here. Looked pretty good this morning. Looked like it was going to follow through. Not like yesterday or IPO day. SWMR. Okay, let's go through the New York FANG. Apple just got rejected at VWAP. Amazon. All right, looks okay. Broadcom. Almost a bullish engulfing. Broadcom. Meta. Okay. Hammer maybe. Google's hanging in there the best. Looks like Tesla. Okay, Tesla. NVIDIA at the 200-day. Microsoft. Okay. Snowflake. Okay, so these 10 stocks, they're okay, but they're not barn burners by any means. New York FANG is still down. The New York FANG stocks are down on the day. Okay, it's trying to muster a rally, a hammer here, a follow through. Need to get through the 50-day moving average. That's the green line there, not the trend line, but the green. Beyond that, okay, let me get rid of this. Let me do. Okay, let me annotate this. Okay, I'll get rid of this line here. Okay, so basically we got that. Got to get through that 200-day. 21-day, 90 MA, they're both in the same
Low
spot.
tick alert minus 800.
50-day.
Extreme low tick alert.
All right, extreme low tick. All right, they're sending it back down now.
Headlines moving from the Israeli Prime Minister Benjamin Netanyahu that have certainly stimulated a move in the market here as we begin the final 30 minutes or so.
All right, just got an extreme low tick.
Bring it to you. We'll watch the trade as well. I did mention the Nasdaq down more than 5% this year. It has led the declines for the major averages. Anka Crawford is here with us. She runs a portfolio for Alger. It is a tech-focused fund. Nice to see you.
Good to see you too.
All right. What's your take on this space now? It's been through a lot. There were moments in the last, since the war started that there was a safe haven feel to it. Now I'm wondering what's going on. What do you think?
I think there's two issues going on. A is the war, B is tech. And they're kind of getting involved with one another, and it's hard to deconvolve.
So if we don't close above the 200-day, we're back to where we were this morning. Okay, we were back where we were. The New York Fangs don't really look that great. They're all bouncing, but they don't look that great from a daily perspective. So we need more than just energy. We need financials to get their act together. Some of these tech stocks like Applied Materials are doing fine. You got a bullish engulfing candle. Micron looks okay. Micron trending most likely will continue to trend. Micron. Bitcoin. Last time we had 4 days down and we rallied for 2 weeks. 3 days down. Will tomorrow be another down day or will we follow through? Need to take out 76,000 on Bitcoin. Materials. Doji down here, materials. That could reverse. Who the hell knows? Communications, Meta, etc. Communications. Doji at the 200-day. Energy, obviously doing the best. Financials doing not so good. Industrials, tech. Tech is looking a little better. Semiconductors, a little better. Consumer staples, not so good. Healthcare, Doji. Utilities, Doji spending top. Consumer discretionary, retail. Retail is coming off the low. That looks pretty interesting. And software. Okay, we only got like 2 sectors that look decent. The rest of them are so-so. Could reverse. Could put in a pivot low. Need more than energy. Software looking better. Need more than, 1 or 2 sectors. We need, half a dozen or more sectors rising. We need the New York Fangs to continue. So what I'm basically saying is that we need a follow through. 200 days at 66.19. We're at 66.10.
But that says to me the minute, if it ever happens, that the hyperscalers cut their spending or the data center story starts to take a little pause, that this is place number one to look for a stock that would get hammered on the other side of this tremendous run.
So I think any data center stock in a supply glut will get impacted, whether that's Amazon, whether it's Nebius, right? So let's think about what that timeline is. If we think that happens in like 2030, they have 5 years to build a business on the backs of enterprise and develop a hyperscaler company. So again, they are an AI native hyperscaler, which, they are the only ones that are building both the infrastructure as well as the software layer on top, which I think is really an interesting place to be.
Do you want to make a call on something else on March 19th or 26th? We'll check it next March. Put you on the spot. I won't put you on the spot.
No, we can. I always have ideas.
Okay, go ahead. Give us one real quick.
Looking for institutions. calling all institutions. This is still not convincing. That little bounce there most likely had to do with news and not institutions buying. That was probably just some short covering. Close above the 200-day and a follow through tomorrow would be needed. I'm not going to do too much. I'm just going to wait and see what tomorrow brings. We've got just under 30 minutes to go.
Choose your own adventure here in terms of the headlines of what he's saying, whether you think this is bullish or bearish for the markets. I think one of the things that might have gotten traders' attention is the headline that he says Iran has no capacity to enrich uranium or make ballistic missiles after 20 days of war. So that seems to be encouraging.
Wow, it's been 20 days.
At some point, this is achieving its military objectives. But then he also says there are many possibilities for a ground component to this war. He says he won't share what those components are. He says that we're going to need alternative routes that avoid Hormuz and Red Sea choke points. So those two headlines, I think, don't necessarily give you the sense that this is a contained short-term military operation. That gives you a sense that if you're talking about ground components and alternative routes around Hormuz, you're talking about something more long-term. So bullish, bearish, depending on how you read it, but clearly traders are watching everything coming out of Jerusalem right now.
Well, of course, the ground components, quote unquote, would be theoretically at odds with what the president was talking about earlier today in the Oval Office.
Yeah, it's this island in the Strait of Hormuz. That island right there is what's giving them a problem. They gotta do something with this island. There's so many fortifications along here that are dug into a mountain and along this coast. Still watching the S&P trying to get back above this level.
President Trump said he was entirely unaware of the Israeli attacks on the Iranian gas fields and suggested that he didn't like that and told Netanyahu that and told them to knock it off. Netanyahu in this press conference said Trump asked us to hold off on future such attacks, and he said that Israel acted alone against the South Pars gas field. There's a clear divergence between the Israeli military and the U.S. military. So you wonder if there's a divergence of strategy on striking the Iranian oil infrastructure. Is there also a divergence of strategy on the issue of ground troops?
Yeah. I like the way you framed the whole report. Part bullish, part bearish, depending on how you want to view various headlines. What was obviously a longer news conference, Eamon, that produced many headlines as they filter out, the market digests and reacts. So what was maybe gleaned to be positive at the beginning just underscores how much more complicated and complex that this entire situation has become, and whatever resolution exists now to reopen the strait.
Yeah, I think that's exactly right. I mean, when you're talking about what the end game options are here, we also saw Netanyahu talking about the idea of Iranians taking to the streets to change their own government. You saw President Trump on the first day of this urging Iranians to take to the streets and take over their government. That hasn't happened. And we can argue
Watching the futures, they're trying to push this back up. Looks like somebody took some profits off that pop. Traders taking profits, looking for a pop. Can we get back above the 200-day?
So clearly, the Israelis are thinking still about how to get an Iranian revolution to kick off in Tehran. It's not clear whether the United States has given up on that idea or not. But clearly the U.S. side is talking less about that, this many days in than they were on the first day.
Right. You wonder whether the window has almost closed in that regard, but it's really too soon to answer that as well. Eamon, I appreciate your reporting very much. Thank you. That's Eamon Javers from Washington. We'll take a break. When we come back, we'll have more on the metals meltdown today. Gold on pace for its worst week since '83. Take a look. It's down 5%. We're back after this.
All right, so not looking good
Low
here.
tick alert minus 800.
Not looking good here. Looks like we're going to drop back off. There's
Extreme low tick alert.
no constructive reason why this is going to stay up here. It's just not Netanyahu talking about the Strait of Hormuz. We got to see a follow through. All right, back to a spinning top. Back to a spinning top. Get your hopes up, and this is what they give you. This is what they give you. All right, so we got this descending pattern now. Lower highs. Okay, lower highs and lower lows. VWAP is right there. We've got 23 minutes, 30 seconds to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Thursday, March the 19th. We were looking for institutions. I don't think that was institutions. I think it was just shorts covering. We'll know here shortly. If they can run this back up, close it above the 200-day, that would be a different story. I don't think that's going to happen, but hey, I'm in hope for anything right now. I don't like being down here. I got long positions I want to follow through too. I have to wait. I'm not going to sell things, when there's lots of prospects for these to move higher, like Micron, for example. Looking for that to continue. Micron. Okay, a little dip from the little peak we just had. New York Fangs again. Got a lot of work to do. Let's see how many stocks are advancing at the moment. Okay, we got 228 stocks advancing. Yesterday, this time of day, we had 90 stocks advancing. Today, we have 230. Okay. Not the best situation. Not the best situation. Not the best situation, but it's better than Tuesday, Wednesday breath. Okay. $230 stocks advancing. Oh. All right. Can we get back above the 200-day? This looks like selling right here. We had this nice run up, selling. Our institutions going to step up and push this back above the 200-day. All right. High tick alert. High tick. High ticks. I sympathize. All right, let's rally this up. Sneak Sally up. All right, so the New York Fangs don't look the best, but at least they're starting to improve. We'd need 3 or 4, maybe even a week, 3 or 4 days, even a week of positive price action to get the New York Fangs out of the rut, break the downtrend it's been in for the last couple of months. If we can get that, if we can get this to break this downtrend that's been in since November, then I feel more confident about a rally. For now, I'm just looking for baby steps. Let's get above the 200-day. Let's get above the 200-day. See what we can do with that. Yeah. Yeah, Russell, is upgrade for cruise lines too, as well? Okay, let's get something going here. All right. Is it going to be this simple? We drop below the 200-day and we jump back above it. Is it going to be that simple? I mean, March tends to be that time of the day, time of the month. Okay, so we're looking for this. We're looking for this March reversal. Okay, we're looking for that March reversal. Okay, so maybe we can get that reversal.
Welcome back. March Madness underway with some typical heavyweights at the top of the brackets. Number 1 seeds include Duke, Arizona, Michigan, and Florida. The question is, in today's world of big money NIL, do any so-called Cinderellas have a real shot at the title? CNBC sports and media reporter Alex Sherman joins us now with more. I mean, NC State over Houston, Villanova over Georgetown, Butler almost beating Duke. We love the Cinderella stories.
Yeah, I mean, it's funny because I was just about to come on here, and I will, in fact, make the case that the Cinderella story is going to become less and less likely in this age of NIL. And meanwhile, we've got number 16 seed Siena currently beating number 1 seed Duke. I don't know if you guys can hear in the background.
Yeah, because I was going to say,
yelling every time Siena scores a basket.
The basketball doesn't see the color green, as in money.
This is what has happened is that historically, these smaller schools that make good runs are led by a group of seniors or maybe juniors and seniors. And when these players now, if any of these small schools have a player that is kind of unusually good, you know, maybe not expected to be good, but they just become better and better as they've gotten older, they're poached by the big schools. I talked to VCU was one of these Cinderella teams. They're the 11th seed. They play North Carolina. They made it to the Final Four 15 years ago. I spoke to their athletic director, and he said the tampering that's going on right now, it's literally happening in games where there are Power 4 school assistant coaches and scouts that are talking to players of these mid-major schools.
Hey, nice three-pointer. Here's my card.
Exactly, right. And like, here's a little bit of money if I'm coming your way. Because the fact of the matter is, in fact, I spoke to former Syracuse head coach Jim Boeheim about this, and I asked him, what do you think? Do you think that the age of the Cinderella team is over? Listen to what he told me. Okay.
It's very unlikely any of those schools will ever make the Final Four again. Maybe a Sweet 16, but even that is going to be hard. But the trade-off is you have better teams in the Sweet 16. You have really good basketball teams and really good games.
So if you like a world where you're rooting for all the big guys,
No follow through yet. We got 15 minutes to go.
very high in this new world of the chances that a mid-major school comes out and makes a big run are slim. But if you listen to him, what he's basically saying is the small schools don't have the money to compete anymore. He said you need $10 million spent on your basketball team to compete. The VCU athletic director I spoke to said VCU pays $5 million. I can only imagine what Siena pays.
He knows it firsthand, too, from the team that he used to coach and why he's a legend in Syracuse, which just removed their coach. And one of the reasons that he said was because they just have a hard time competing with these other schools that have these deeper pockets.
So the big time schools will spend 15 all the way up to $20 million. And the cap, by the way, that exists doesn't really matter because if you have a big wealthy donor, you can kind of go over the top on the amount of the $20 million cap that exists today per school.
All right. These are some of the great days in sports this tournament. We appreciate you, Alex. Thank you, Alex Sherman. Up next, we track the biggest movers into the close today. We'll be right back.
Yep. 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 Okay. We're not going to get above. Uh-oh. What's going on there? All right. Never mind. I saw something going on that didn't seem right. I'm your host, Cousin coming to you from theclosingprint.com. We've got 12 minutes, about 12 minutes, 30 seconds to go. It is March the 19th, Thursday. We'll see. We got to get some risk on indicators to go. Risk on Bitcoin would be good if Bitcoin can continue this uptrend off this low here. Last time we had a 4-day fade in Bitcoin. Okay, you're probably aware of it because I talk about it very often. BTC USD. I talk about it really often. We had this 4-day drop right here. Okay, we had a 4-day drop right there. Okay, and now we've got 3 days. 3 days. This 4-day drop led to almost a 2-week rally here. All right, so 9 days up to the high, and then we fade for 3 days, right? We're right at the 21-day. Do we overshoot it and follow through? We already overshot it today. You can see the wick here. Can we rally? Can we rally off of a 3-day fade? Maybe. Be nice to see that tonight in Bitcoin. Okay. We don't go straight up, that's for sure. This is the most excitement over the last hour that we've seen all day. So I welcome that. But I'm not going to get too excited until I see obvious institutional buying. I think what we got just now was a little short covering thanks to Netanyahu, an announcement that he made. All right, everything else looks okay. I mean, Micron looked okay. Micron looked better. Micron looked get better at 10:45. That looked like it was going to keep going. It faded a bit. Maybe institutions will buy some shares down here. Micron, with those earnings, I can't imagine Micron's going to stay down here. The earnings are just crazy. The estimates for Micron. Let's see. What did we say those were? Estimates for Micron. There we go. Micron for 2026, 355% increase over 25. So 26 and 27, years 26, 27. We're looking at $57 in earnings for 27.
Certain autonomous performance milestones. Manufacturing for Rivian's newest R2 vehicle is expected to start in June. That's why you're seeing Rivian up 3%, Uber down about 1%.
Alibaba shares, though, also moving lower, sinking about 6% on weaker than expected fourth quarter results. Its net income actually dropped 66% from last year, hurt partially by heavy spending on promotions to compete with its commerce rivals. The company still said it's targeting roughly $100 billion in AI revenue just in the next 5 years. Not next year, 5 years. Shares down 7% now. And last but not least, shares of Five Below surging roughly 11% on 15% comparable sales growth. And of course, an upbeat full-year guidance. The discount retailer cited demand from shoppers all across income levels, specifically from Gen Z and Gen Alpha, which neither of us are part of. Scott?
Christina, thanks. Christina Martinevelos. Coming up next, the Market Zone.
Okay, Micron. I'm just looking at these earnings. Micron earnings. Okay, projected for 26 by the end of the year. By the end of the year, we're talking conservative 12 times multiple, historical cyclical implied price for Micron. Market neutral 15 times. 15 times would be $566. Okay. Okay, given Micron. That's good. Could see even more. Okay, looking good. Micron.
We're now in the closing bell Market Zone. Mike Santoli and Hightower's Stephanie Lane here to break down these crucial moments of the trading day. Set up on FedEx in overtime tonight, and Pippa Stevens is tracking this meltdown today, which is significant in the metals. But Michael, I'll begin with you first. The market obviously is just hanging on anything positive to try and move.
For sure. Everybody knows the market has a lot to prove. Every bounce faces a very high burden of proof for that reason. Because of this downtrend we've been in, we touched at the lows today just about the fourth quarter low in the S&P 500. That goes back to November. But it's understandable, and it's been the case this entire move, that people don't want to get too far away from the faint prospect
that you might get a de-escalatory move. It's going to have this market twitch higher. That's why I think traders, kind of hanging around the net, listening too closely, perhaps, for signs that we might get that. Now, look, oil did trade off. So it's not as if equities were just looking at nothing, but it does seem as if we have to see if there's any substance along with these headlines we got today late in the afternoon, and then whether, in fact, there's going to be genuine buying, because it has really been very twitchy and kind of tactical action.
Yeah, 6,600, like a line in the sand. Everybody is watching. Michael, I'll see you in overtime with Mel. Thank you. That's Mike Santoli. Frank, man, I mean, there was a time we were talking about the transports just crushing it. Now we've had all this noise, and now we get a key earnings report.
Yeah, by the way, FedEx lower earlier, moving higher into the close, also up almost 20% since his last earnings, as investors were bullish on U.S. growth. And even with the Iran conflict, revenue estimates for FedEx have actually ticked up, but EPS estimates, they moved a bit lower, partly due to headwinds from the grounding of some planes and a freight slowdown. Now, FedEx also raised its rates by 6% this year. JP Morgan put out a note about customers saying, in part, many continue to work on ways to trade down to deferred services or minimize their need to use parcel, but we still do not see shippers leaving FedEx and UPS. The question is, could they switch from UPS to FedEx or FedEx to UPS? All right. This quarter, pricing and volume in the parcel business, they're really...
We got 3 minutes to go. 3 minutes to go.
Recent quarter, Scott. Back over to you.
All right, Frank, thank you. We'll see what happens. We'll look for you in overtime. Pippa, tell us more. I mean, it's pretty startling what's taking place in the metals market today.
That's right, Scott. Gold is down 8% on the week as surging energy costs ignite inflation concerns, and if that leads to higher rates, the setup for gold is more challenging. Still, TD noting gold's is still sitting roughly $1,000 lower than current prices, pointing to what they said is substantial scope for more pain. Copper is in the red amid concerns the war will slow global growth and cut demand, with silver off by 7%, and aluminum also down today after getting a boost at the beginning of the war, given the Middle East accounts for roughly 9% of global primary production. Scott?
Okay. Pippa, thank you. All right. Stephanie Link, let's kick this around here. You saw those, headlines. I thought Eamon just so perfectly described how people are digesting anything that moves from any levels of key leadership. You can take some comments as bullish. You can take others as bearish. The market not really sure what to do, and that may just be the way it's going to be for the foreseeable future.
We are really oversold, though, Scott, and the underlying data points that we continue to see on a real-time basis, the economy, are actually pretty good. The claims numbers today, another new low at 205,000. The Philly Fed number ratcheted up in a huge way. And GDP is running at about 2.3%. All right, let's call it 2 to 2.5%. I think, Scott, if we wait for certainty, we're going to miss really great opportunities. So I might be wrong in buying some of the stocks that I have been over the last couple of weeks that you and I have talked about. But I think I might be wrong near term, but I think longer term, I'll be really happy that I did buy really quality companies where earnings estimates actually went up after they reported. Stocks are down.
I don't hear many others saying we're oversold, like you just did. What gives you that perspective when I think there are many views out there that suggest we haven't seen enough selling before the coast is clear?
Well, the S&P oscillator is something that I look at, and it's at -8. Anything -5 and lower is oversold. So there's that. But the more important thing is, while the overall averages are okay, kind of hanging around, S&P down, 3.5%, the equal weight is flat on the year. There are many stocks and sectors that are down far more. And so that's what I am paying attention to. And it's in the financials, and it's in the industrials, and it's in discretionary. It's more of the cyclicals. They were working in January and February, and they just totally rolled over hard. I think that there are a lot of great opportunities in those sectors.
Yeah, I mean, it's
all right.
interesting, like a name like Micron, right? They knocked the cover.
We're about to close here. About to close.
No, I mean, the stocks it's been a
All right. Pretty exhilarating. We closed below the 200-day moving average. That's okay. Maybe we get something going tomorrow. A jump back above the 200-day would be good. All right. Have a great evening, everyone. I'm a bit exhausted from the stress of sitting here and watching the screen all day long. I'm being a little bit sarcastic, of course, but tomorrow's another day. Looking forward to a better understanding of what institutions plan on doing. So we'll be looking for that tomorrow. Have a great evening, everyone. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Thursday, March the 19th. Have a good one. We'll see you tomorrow. Ciao.